it has seen a decline of around 5% in last two trading sessions, with OPEC also suggesting that the demand in 2025 could be lower. And this is the fourth time that they've cut on demand outlook. It does look like that the commodity prices could come under more pressure going forward.
All right, Manisha, thank you very much for that. So that's essentially commodities and oil in focus, more on base metals, etc. as we go along. Now, a little bit on India's macros as well. So the October inflation numbers come in at a 14-month high of 6.21%, washing away any hopes of a rate cut in at least the December policy. The industrial output for IIP for September is a little dated, has come in at 3.1%, much better than the minus 0.1% in the previous month. Lata is here with the editor's lowdown. Lata, morning.
Well, the CPI number was always expected to come close to 6%. That was the CNBC-TV18 poll, but 6.2 is a bit of a nasty jar. The prime culprit has been food. It's up about 10.87. But before that, I just want to point out about the 6.21. It's coming about on a year ago number of 4.87. That's not all that low, you know. It's almost 5%. So you're clocking 6% over 5%. That in itself is not good. The prime engine, as I was saying, 10.87 rise in food, to which the contribution of vegetables was outsized at 42%. That's a bit of a relief, because veggies are always seasonal. You know, a crop is usually 90 days. So in winter months, you would normally see vegetable prices ebb away. But I would worry that two other important elements, cereals, are up 1% on the month. I mean, haven't we been speaking of an extraordinary Kharif and a likely good Rabi? Should not that have been depressing cereal prices? There's something structural about it, and I remember speaking to Dr. Ramesh Chand about it. He said the way in which we are designing support prices, there's something structural about the rise in cereal prices. We don't worry about that. The FAO index is also rising globally for cereals. So just a little bit of a worry. Edible oils are higher because the duty got raised. That again contributed some 9%. All these are worrisome things. Now, the full year number, which stands at 4.5 for the Reserve Bank, will have to be increased because we've got outsized numbers in both September and October. So from 4.5, the Reserve Bank will have to up it to 4.8. Now, think of a monetary policy authority which has a over 6% number behind it. After all, their mandate is to keep it under 6%. You're above your mandate and you're going to raise the full year number. It's hardly a scenario where you can expect them to even talk dovish. Forget about cutting rates anytime soon. In my mind, even February is a question mark. But let's wait and see. There's a lot of data from now to then. A word about the growth data. Industrial output number coming in at 3.1 is a relief after that horrible number we saw in August. There is a lot going for the September output. Remember, this is not demand number. This is actual output that industries generate. Now, what will you be doing in September? You will produce for Navratri and Diwali, and this time both fell in October. You had very good reasons to have a good number in September. I would think that given these circumstances, 3.1 is still an unimpressive number. It also had a low base advantage. The positive is that consumer durables, consumer non-durables, capex, all of them were at least in positive. There were no negative numbers, but that's about the only thing I can say positive. 3.1 is unimpressive. August is minus 0.1. All this contribute to the GDP number, which will come out, that is the Q2 GDP number, which will come out on November 29th. Tough to see it above 6.5. That can be another nasty jar for the market.
Absolutely. Lata, thank you very much. So it's a bit of a sticky spot in that sense. Let's welcome in Jayesh Mehta as well. He's a former MD and country treasurer, Bank of America. Jayesh, great to have you with us here. Thank you very much. I mean, we should correct that super. Formerly with Bank of America, no longer. Jayesh, apologies. Thank you for joining us. I mean, you heard Lata there talk about the inflation number. Of course, I mean, December is out of the question. But as Lata was saying, even February may be a little doubtful. How do you read these numbers?
So this, as far as bond market is concerned, they were expecting 6% print this month. Now 6 or 6.2 is not really much of a difference. So December rate cut is completely out. Of course, equity market was looking at some ray of hope in some ways, so much of selling. Otherwise, for them, it really does not matter. But there was some hope they were looking at from a December rate cut. So that's not going to happen with this print coming in. Now, the question is whether they will be dovish or hawkish, or will they roll back the liquidity which they have been providing. I don't think so. That would continue. That liquidity will continue because at the same time, your growth is really, really struggling. We have seen all the, numbers of the corporates. So that's really struggling. But February looks quite optimist because if you really look at it, this was supposed to be if you look at history, if you look at the past data, this was supposed to be the highest print as far as bond market was expecting on inflation. And now going forward from next month, we'll see inflation coming off all the way to March. And yeah, there may be some mild change from their projection, maybe by 10, 20 basis points, but that's not going to be a material change from a range of 2 to 6%. So it will be still near 4%. And I'm more optimist on U.S. rate cuts going forward. So by February, we will have at least one more rate cut from U.S. That will have definitely a lot of pressure, especially when your growth is down in February to cut rate. Because if the growth was also up, GDP growth was up, and the inflation was around 470, 460, you may still not do anything. But at 470, 460 forecast for inflation in February, and with GDP coming down, you have to go for a rate cut. So I do expect a February rate cut.
But Jayesh, only looking at the 10-year, do you think the yield seems to have bottomed out? Remember how cheerful we were about 3 or 4 months back? There was bond inflows coming in. We got included in the index. The fiscal deficit was lower than expected. And we were all expecting a rate cut probably in December or at least in Feb. There were people talking about 6.5 on the 10-year. But now do you think the yields have bottomed? We shouldn't be expecting too much by way of fall in yields.
So 675 without rate cut, which we saw, and then it moved to 672, and now it's back to 683, maybe 1 or 2 basis points higher today because of U.S. interest rate, right? You look at the U.S. interest rate, the way they have moved, we have hardly moved. So to that extent, we are still hugging, and the bond market is still looking at, okay, if not December, we still look for a rate cut in February, right? So that's when, when you become 6/4 from 6.5, 650 going forward would look difficult, but yeah, you're right. So to an extent, maybe if we get a rate cut, we'll be still looking at 655, 660. But to that extent, from now to February, that's when it will depend more on, if US still falls by another 15, 20 basis points, we might see 3 basis point rally. If it goes up, we may see 2 basis points. Goes up by 15, 20 basis points, we may see 2, 3 basis points higher, right? So, but it would be more of just technical. But fundamentally, people would still go and bet for 665, 660 kind of levels crossing February.
Jayesh, and the other thing which has been remarkably stable has been the rupee. I mean, it's very orderly kind of, it's been under pressure. But do you think, to put it in context, we should look at what's happening to the Chinese currency? I mean, if the call here is that as China gets tariffed at higher rates and there's disadvantage India, for that you need the currency to be at a stable equilibrium. If the CNY goes down sharply and you don't match it, I mean, exports become uncompetitive. Is that the context to look at things?
Definitely. So, if you look at it historically, when we see RBI letting a level go, right, it's always because of Chinese, currency depreciating. Now, if that happens, but, it's all too early, even for U.S., even if you look at it, like there are certain things on U.S. people are projecting based on past, right? Like Trump will go and really do a huge fiscal deficit, which doesn't look like... That doesn't look like, 2016 was different. Today it is very different. Again, with everything, all the three majority having a Republican, the spend may not be so riff-raff. Like when you have multiple people ruling it, the spend actually goes much larger. Here it will be just headline announcement. The spend may not be. So I really think the deficit would be much lower. than the what market expect. Of course, we'll come to know only after January, February, or that's the time we will come to know. So that's one part. Even on tariff, right? See, when the first tariff was raised for China, they didn't have other manufacturing. Now the Chinese companies are everywhere, right? So where do you price the tariff? So to that extent, and even U.S. also realizes that, right? So there will be token tariff hike, but I don't really see that major tariff hike, because if you put tariff hike with China, the Chinese companies are there in the rest of the world, right? So where do you put the tariff?
No, absolutely. And point taken. So it's early days. As someone said, Trump is the same, but the world is different compared to 2016. We'll speak again. Jayesh, thank you very much for joining us. Lata, thank you very much for taking us through.
About this tariff part, Morgan Stanley did a modeling. It's just modeling. If you raised all the rates that Trump promised, 60% on all Chinese goods and 10 to 20% on other goods, then inflation goes up by 90 basis points in their curve. And growth falls by 1.5 percentage points. So that would be shooting yourself in the leg. So Goldman Sachs did another thing. Because you can't raise everything, you make your own fuels and foods expensive, they have taken 20%. Even then, they see US growth going down. So, I think that in self-interest, it may not be as bad as the rhetoric.
Yeah, absolutely. We'll watch the space closely, Lata. Thank you very much for that. We'll take a quick commercial break. Devin Chokshi is going to be with us. We talk stocks and what to watch out for. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Devin Chokshi from DR Chokshi FinServ joins us on the show. Hi Devin, good morning and good to see you win. Yesterday's fall was a little bit scary and I was reading a couple of articles which suggest that could be a bit of a liquidity crunch domestically with retail participants that could have caused that. So if that's the case, we'll have to see whether or not we bounce back in today's trading session. But let's address a couple of stocks. BSE came out with its set of numbers. The stock had a one-way rally and from the recent peak it's corrected. What's your view on the stock at current prices?
Yeah, Naidu. Good morning. Well, I think the BSE numbers appears to be, I think, more stronger, more because of significant amount of cost savings that they have done in their operations. It basically gets reflected into the OPEX, I think, numbers which have been reported by the company. So that is definitely a positive thing. Whether it is sustainable, not completely sure. But as it stands today, I think probably they will have a little bit challenging time, largely because of the volumes which are getting affected because of the new regulatory regulations. At the same time, overall condition in the market is also looking a little bit weak now compared to what it was in the previous 6 months. So certainly, I think coming quarter as well as I think till the year end, we are likely to see some part of the challenging environment as far as the exchange business are concerned. But nonetheless, if they sustain the lower operating costs, probably I think they should be in a position to maintain the profits in the profit margin going forward as well.
Right. Devin, while we've seen a lot of these companies getting pummeled for bad results, we've also seen a lot of them be handsomely rewarded for decent results as well. Case in point, something like Jubilant FoodWorks, which was among the top gainers in yesterday's trading session. We did see some traction come by in a lot of these other names which outperformed as well. In light of that, we have numbers likely from Honasa today. And from going by what the management has been telling us, they will outgrow the industry. And we got Nykaa as well, with a 24% revenue growth at a time when you are seeing weakness in the entire sector. Do you like any of these new age players here?
Mangalam, I think the companies and the business model definitely they are really, really good. I think they are appealing. However, I think what is challenging as far as the market environment is concerned, that the valuations are not cheap. Probably even though the prices have corrected in some of the new age companies, they're still quoting at a premium valuation, and there is no margin of safety left in that valuation. So my concern is unless we get the sufficient amount of protection as far as I think the downside is concerned, I think the even good business model buying at a wrong valuation will probably remain underperformance in the portfolio of the investor. So that's where we are a little bit more concerned. In fact, I think we have been hearing this particular concern for last few quarters, wherein we believe that even today also we believe that the valuations, if they are not justified with the growth of the company, probably I think you are going to get underperformance in your portfolio. And that's where I think we remain concerned about. Nothing to do with the business. Business is remain absolutely convincing as I see it from the investment point of view.
Got it. By the way, Devin, morning, Prashant here. There's an NTPC sort of press conference on their NTPC Green IPO, which is forthcoming. It's going to be another large one, right? It just got done with one large, the Swiggy one, which of course lists today, and NTPC Green is next. Any thoughts on this one, and any implications for people who are looking at it? Should one buy NTPC in anticipation? What's your sense?
Hi, Prashant. Good morning. I think it's a long investment call, actually. I think if one is looking into this particular company. In my understanding on the subject is that I think any such projects, I think, which are getting implemented, they will probably take 5 to 6 years to show actual performance going forward. Of course, NTPC Green is an existing one, but at the same time, the amount of investment that they are making versus the kind of growth that we are talking about, it's not going to be a near-term game. It's going to be a long-term game. So those who are investing for the long-term, likes of insurance companies, likes of some of the long-only mutual funds, they may probably find it meaningful to buy into this particular IPO. But those investors who are typically the flippers, I think they will find it a little difficult to make money out of this kind of proposition as we see. Nothing to do with the fundamentals of the business. These fundamentals remain as strong. However, I think, as I said, it will take time to deliver. And that's where probably I think you'll have to have a lot of patience buying this kind of company in your portfolio and stay invested for a longer period of time.
All right, Devin, today we're going to have a big listing, Swiggy. It's going to be giving Zomato company on the Indian bourses. Your view on that particular name, and what about Zomato? Zomato saw a fair bit of action in the run-up to this particular issue, and they seem to be moving in the right direction as well. Tremendous space for these companies, in terms of services. But what about the stock price?
Yeah, that's again, I think, a good question, because I think on one side, we are fully convinced about, I think, the prospects in the food delivery business, in the dining out business, in the quick commerce business of Zomato, Swiggy, both put together. And the kind of verticals that they've been implementing one after another, I think they also suggest that they will be able to engage the customer for a good long term with, I think, different properties that they have got themselves into. So there is no challenge on that particular front. The major challenge remains as to how to make money out of these kind of businesses, because you already have many things factored into the price, and as a result of it, the valuation remains scaled up. Even Swiggy, which is getting listed today, I believe that I think everything is fully priced into the valuation today. And that's where probably I think one would like to wait and see whether we'll make entry at a decent price at a lower price. To my mind, I think the business remains absolutely convincing. Maybe at the right price, one could get into this kind of stocks for long-term investment.
That exactly will be the most important thing to track. Just three things to track for Swiggy's IPO. I'll spare you all the financial details, etc. The first part, 11,300 crore IPO wasn't subscribed fairly well, so just 3.5 times. And with the market mood, chances are that it opens at a discount to its issue price. The second question comes in then. Like Deven also pointed out, we know the business models of both the companies, and we know that Zomato, from a business standpoint, is a little better than Swiggy. So at what level of discount does the Swiggy price settle in versus Zomato? And then the third point, does the company walk the talk? They have been talking about increasing their quick commerce stores, and they have been talking about, improving their food delivery margins. Does that happen or not is something that we'll be tracking on the Swiggy IPO. Take a short break, come back on the other side. We have Mitesh Thakkar and Sudarshan Sukhani joining in for some quick technical trades.
Welcome back. There's about 6 minutes to go for the pre-open session. We have Mitesh Thakkar and Sudarshan Sukhani with us to run you through the setup this morning. I mean, from a macro market point of view, it's not looking great once again with the dollar rally, etc. Gentlemen, good morning. Good to have both of you here as always. Mitesh, will there be a pause, halt at 23,800 like we've had in the past, or this is going down?
Morning, Prashant. So I think, yesterday we had some kind of a signal that, this market is possibly heading a bit lower in the sense that, the levels of 24,000 were taken out and we were at that 23,850 area and the indicators were still negative. So, we suggested getting into put spreads, and I think the next target zone should be 23,550, 500, which is also the 200 average area, and also there is a gap historically open over there. So I think that's the target which I'm looking at. The worry is that while we are oversold, we are falling, and the medium term, the weekly charts have slowly started getting on the weaker side, which means that now the bigger trend reversal will not happen unless until we start capturing 24, 250, 300 again. So I think, Till then, let's see how the markets rebound or react from 23,500, 550 once we reach over there. And then we'll take a fresh call. But for the timing, the idea is that we are most likely heading towards those areas.
All right. Thanks for that, Madesh. Sudarshan, what about you? How do you approach trade?
Yeah, good morning. See, the Nifty has been in a trading range, and the idea was that while the range holds, we look for a buy on dips. That range is not holding. Yesterday also, the market slid down throughout the day. So what the message the market is giving us is that highs are not being held, and it's coming back to that 23,800 level. You know, when a support level is tested repeatedly, once or twice, that's support. But when it's being tested repeatedly, that tells us that the level is weak, which is why it is drawing sellers to that point. My sense is that this is not a market where we want to buy. It is no longer, not today. We are not in a buy on dips market. So the chances are that the support levels will break and we will see a downside in the Nifty. Given that there are two trades. One is to take a short position in the Nifty using put options, which is the safest way to take that trade. That is a recommended trade. And the second, of course, is not to do anything. But you cannot go long.
All right, you cannot go long is the view. Let's get stock specific then. Mitesh, what are your trades for today from stock standpoint?
Morning, Mangalam. I have more of sell side calls. Canfin Home is a sell with a stop at 843 for targets of 800. Pidilite, after a sideways activity, appears to be breaking down, maybe starting some kind of a corrective movement. So sell here with a stop at 3090. Look for targets of 2950 and a sell on Apollo Tires with a stop just above 480 for targets of 450. One buy call though, which basically is to hedge the multiple short positions which you have, is City Union Bank, which has done very well and is now near the support area of giving a pullback. So buy here with a stop at 170 half for targets of 182.
Okay, got that, Mitesh. Sudarshan, what about you? Individual stocks?
There's a lot of disappointment. There are two blue chips which I have now for intraday shorts, and they really shouldn't be coming in that list, but they are. One of them is HDFC Bank. Consider going intraday short with a stop above 1758. Another blue chip is Apollo Hospital. Both of them have been very dismal chart patterns in the last 2 days. That's an intraday short with a stop above 72.30. Just to keep things cheerful, United Spirits continues to be a buy with a stop under 1440. Sometimes some stocks will do their own thing. I hope this one will. And Metropolis is a buying opportunity with stop under 2140. You know, the buying opportunities are relative strengths. Essentially, they're performing better than the Nifty. That doesn't mean they will go up. They will probably fall less. That viewers should understand.
All right, both Metropolis and United Spirits just under their 20-day moving averages. We'll keep an eye out on that. Sudarshan, Mitesh, thank you so much. We'll come back to you in just a bit. Take a short break, come back with a pre-opening rate. Also with us will be Pramod Kumar of UBS Securities to put focus on the auto sector.
The Justice Chandrachud era is over. Say hello to India's 51st Chief Justice, Justice Sanjeev Khanna. Justice Khanna was sworn in as the 51st Chief Justice of India this morning by President Draupadi Murmu. He was sworn in the presence of Prime Minister Modi, Defence Minister Rajnath Singh, among other senior government functionaries. He's due to have a term of 6 months. He will retire on May 13th next year. Now, speaking of Justice Sanjeev Khanna, he began his journey as an advocate in 1983. He argued cases of taxation, arbitration, commercial law and environment law. After his stint as a lawyer, he was appointed as an additional judge of the Delhi High Court in 2004 and made permanent in the following year. In 2019 came the big surprise. Justice Khanna had been elevated to the highest court of the country. It led to many raised eyebrows. Justice Khanna had found favour with the collegium, even though there were 33 judges across high courts who were higher in seniority. What made this elevation even more interesting is that Justice Khanna had never been the Chief Justice of any high court. Justice Khanna is the nephew of the famous Justice H.R. Khanna, who rose to prominence after passing judgments during the emergency against the then Indira Gandhi-led government.
Welcome back. You're watching us here, Open Exchange, live from the CNBC-TV18 Motilal Oswal studio. We're awaiting pre-open rates. They're just settling in, obviously, all over the place. The Nifty suggesting a 180-point uptick with the Sensex down about 800 points. Again, just ignore these rates. We'll wait for a bit. But a couple of things that really stand out in particular. We are seeing a big gash on some of these life insurance names in pre-open. Again, these are just pre-open rates, so we haven't seen any, significant move out there. But HDFC Life is lower. If you look at ICICI Pru, suggests a bigger decline as well. So what we'll do is we'll probably just wait by for these rates to settle and get in Rajesh Palvia in the meanwhile, who's the VP Technical and Derivative Research at Axis Securities, joining in. Thank you, Rajesh, for joining in. We've been in a bit of a bear grip for the last many trading sessions. At what level does it get oversold, and what are the supports and resistances that you're looking at in the indices?
Good morning, Mangalam. Looking at the data, there is an aggressive call writing again in the previous day at strike of 24,000, 24,100 strike on the call side. So that clearly shows that, upper range is limited for the market. 24,000 to 24,100 is likely to act as a supply zone again if any minor pullback comes in the market. Overall structure for the near term to short term is on the bearish side, and looking at the breakdown below 24,000 in the previous day, we believe that if we sustain below the 24,000 level further, possibly we may break the previous swing low of 23,800, and then Nifty may slide further towards 23,650 kind of zone in the continuation of this down move. Looking at the derivative data also, there is a short built up in Nifty as well as in the bank Nifty. So both indices are looking weak. To play this down move, we are initiating here to buy 23,900 call put option, which was closed at around 105 to 108 kind of range. And we are projecting target of 170 for this put option. One can keep a stop loss of 65. So for Nifty, 24,100 is the major supply zone. Until Nifty not crosses these levels, sell on rise would be the strategy. On the downside, 23,800 to 23,650 are the lower side target. For Bank Nifty, the major supply now zone is placed at 51,600 until Bank Nifty not crosses this level. Sell on rise again in this indices also, and on the downside, we believe that once Bank Nifty breaks below 51,000 level, there could be further more sell off towards 50,600. That's the next level. Bank Nifty may slide further. On the stocks front, Bharat Forge is looking weak. There is a fifth consecutive day where stock is making lower high-low formation. Stock is now slipped below to 20-day moving average. Short build-up is there. So one can go short in Bharat Forge for downside target of 1,305 with stop loss of 1,395. Another stock on the short side, that is GAIL. Stock is now slipped below to 200-day moving average. Looking at the data, it's a short built up in the previous day. Structure is weak on the near term, short term. We believe that GAIL may further go down. We are projecting target on the downside to go short around 186. So GAIL is short with stop loss of 199.
Okay, all right. Thanks a lot for that, Rajesh. Well, let's focus on the auto space now. Pramod Kumar, the India auto analyst at UBS Securities, joins us from the sidelines of the UBS India Summit 2024. Hi, Pramod. Good morning, and thanks a lot for joining in. Well, interesting note you've written on Hero MotoCorp. There's been a lot of focus that rural recovery will come about. But you believe that, in fact, Hero MotoCorp has been losing market share, and they are losing out because of the EV penetration as well. Give us your rationale and the outlook from here on.
Yeah, good morning, Nigel. Great to be here. Thanks a lot for your time and inviting me here. I can't comment on company specific, but what we are trying to address in this report is the prism with which the market and the investor community has been looking at the rural consumer for the longest period of time doesn't hold good in the current context, because what you're seeing is the profile of the rural consumer, the aspirations of the rural consumers have changed quite a lot compared to the previous decades, when the rural consumer, the first-time buyer, used to be a guy in his mid-30s. Now what you see is most of these consumers are in their mid-20s. They are very aspirational. They're exposed to internet. They have a smartphone and they consume a lot of data, right? So their aspirations are changing. And at the same time, let's also not forget that a lot of the first-time buyers are extremely cost-conscious in terms of both the acquisition cost and the operational cost of running the vehicle. And now, and back in the day, the commuter motorcycles used to be the cheapest product to buy and the cheapest one to run from a fuel economy and maintenance cost perspective. But now, these consumers have choice of some of the EV models, which are not only available in these markets now, but are available at a cheaper price than the ICE commuter motorcycle price points. And they practically come with near zero OPEX as compared to a gasoline motorcycle. Now those are choices which were not there available for the consumer back in the day. And at the same time, we also need to appreciate the fact that the family construct is changing in rural India. You have women needing more mobility, you have kids who need mobility, and a motorcycle has a very narrow appeal in that sense from a household perspective, right? But when you look at an electric scooter or an ICE scooter for that matter, which is also gaining traction in rural India and semi-urban India, that product can serve the need of everyone in the family. So these are things which are changing, and the rural consumer's aspiration is changing. And we have to be honest about it. A 100cc motorcycle doesn't have the aspirational value, right? So
Ramon,
these are the things which we're seeing in data as well, by the way. Yeah.
Some pretty interesting sort of reasoning, which we don't usually hear. At a very basic level, 3,300 is your price target in Hero. Ouch! I mean, that's I think is one of the lowest out there that I've seen. Does that kind of extend to the other two-wheeler companies as well? I mean, the reasoning holds true for TVS, Bajaj, without naming names.
Absolutely. So we won't comment on names, but anyone who's geared to the changing consumer aspiration is well positioned. You can see that in Vahan market share data, Prashant, as in, hi Prashant, by the way, sorry. You can see the data for yourself. Companies which are aligned to the scooterization theme, to the electrification theme, have been generally doing very well. And I just want to add one more point here. We are not only talking about electric vehicles, but if you pick up the market share from Vahan database and look at companies, including the unlisted ones, which are aligned with the scooter category, you will see that they've been gaining market share consistently month after month. So this is kind of very well backed by dispatch data from companies in terms of scooters have grown at 2x the growth rate of motorcycles, and EVs have done exceptionally well. And the category which is underperforming is the commuter motorcycle category.
All right, take that point. Pramod, on the four-wheelers, what's your view? Because we've had a recent listing. Hyundai also give decent commentary from a business standpoint. You have Maruti, everyone's eyeing the SUV space, the affordable car space, but also having a key in the door, if I may, the EV space. Amidst all the listed players right now and the way the industry is positioned, who do you think stands to benefit the most here?
Again, I can't get into specific names, but the fact is you need to look at everything from a consumer's prism. EV is great, hybrid is also option, and CNG, let's not forget CNG, which is already 20% of industry demand now, right? So these things are something that the consumer picks based on his requirement. And we believe India as a market, India as a country is better served by having a very diversified portfolio powertrain mix instead of betting the future on only one technology. So the customer decides what he wants, and as you can see from the data, again, everything is on the public domain on Vahan. Electric vehicle penetration is kind of stagnating at around 2% of new vehicle sales. CNG has grown to 20% of new vehicle sales, and hybrids, by the way, strong hybrids, are not very far from EVs without any subsidy support. So the customer is clearly voting with his purchase decision. So we think it's a diversified powertrain mix which actually serves the consumer and the country well, and also companies which have a diversified powertrain mix. For them, any fuel or every fuel is an option, and they're able to sell what the customer wants. So in that sense, we would our stock picking is in a way aligned with companies which have a diversified powertrain mix and who will not be exposed or stand vulnerable just in case the regulatory framework in terms of subsidies changes. For example, let's not forget that electric two-wheelers subsidies have collapsed by almost 75 percentage points, but electric two-wheelers are continuing to see traction in the two-wheeler market. But the same can't be told about cars, electric cars, where subsidy support has been more or less stable, right? But we are seeing hybrids gaining traction without any subsidy support. Because the consumer in the real world, the hybrid makes more sense because the charging infrastructure constraint is not there. And hybrid is in a way a best of both worlds because you get a fuel economy which is almost 2x of a conventional vehicle, and there is no constraint of a charging infrastructure or range anxiety for that matter.
Okay, all right, Pramod, thanks a lot for joining in. Wishing you a good conference and appreciate you joining in with all of those thoughts. Well, time to get back to the markets. The pre-open is settled down. We're likely to open up in the red. Mitesh Thakkar is back with us with his 9:10 call. Mitesh?
Yeah, I'll go with a sell on Canfin Home Finance for targets of around 800.
Got it. Sudarshan, what about you?
Well, consider going an intraday short in Apollo Hospitals with a stop above 72.30.
All right, gentlemen, thanks a lot for joining in. We'll come back to you in just a bit. Meanwhile, just discussing the Swiggy listing today, there's a very interesting note that has come in from Macquarie. It's on both Zomato as well as Swiggy. Why do I call it interesting? Because it borders on bold as well. You know, with the kind of up move that we've seen on Zomato so far, they have an underperform rating on Zomato, and guess the target price, 130 rupees. That's a near 50% downside from current levels on Zomato, which is close to around 260 odd rupees. Why is it that they are, they are bearish on the stock right now? Because they believe that the fundamental building blocks and unit economics for growth and Blinkit quick commerce need to be revisited. At current levels, the shares are estimating 18% CAGR for 10 years for the food business and 35% CAGR for the quick commerce business, alongside fully optimized margins and benign competition. That leaves the door ajar for downside risks to consensus. So they've done their numbers, cut earnings estimates, and arrived at this valuation. If Zomato has to fall, then obviously Swiggy falls as well. And that's where their initiation on Swiggy comes in before the listing. Underperformed rating, 325 rupees. They say that Swiggy has a clear path to catch up with Zomato when it comes to the food delivery business. But quick commerce is a little more complex with no sustainable economic profits. They expect group EBIT break-even in FY28, even with 23% core revenue CAGR. What's most interesting for me here, though, is that their Zomato rating, implies a Zomato market cap of 1,15,000 crores. Their Swiggy rating implies a Swiggy market cap of close to around 72,000 crores. At the current reckoning, Swiggy's market cap at issue price is 87,000 crores and Zomato's market cap is 2.3 lakh crores. So Zomato's already trading at a 62% premium to Swiggy. As per, Macquarie, this premium should actually narrow, the discount should actually narrow to about 37% itself. So that's something I'll be tracking very closely, because as both these companies list, the discount between either of them, discount of Swiggy versus Zomato, will be the crucial parameter to watch.
Okay, all right. Manglam, thanks a lot for that. Well, we have another note coming from Macquarie on the power sector. Vivek joins us to detail that for us. Vivek.
Well, good morning. That's right. So, Macquarie is quite positive as far as the power sector theme in India is concerned. They've initiated coverage both on power utilities as well as power financiers. Quickly run through the, the details of the note. Macquarie has an outperform rating on Power Grid. They have a target price of close to 380 rupees a share. They believe the company is set to benefit from the sharp pickup in transmission capex, something that we've highlighted. They believe that the capex opportunity for Power Grid from FY25 to FY32 is 3 trillion rupees with upside risk. Now, coming to NTPC, they have initiated coverage again with a buy rating, outperform rating, target price of close to 475 rupees a share. They believe NTPC offers an attractive mix of regulated capex as well as renewables exposure. They also believe the renewable energy capacity that the company is targeting of close to 60 gigawatt is positive, and also foraying into nuclear, which they believe is a longer term driver. Now, coming to the power financiers, both on PFC as well as REC, they have significantly higher target prices. They have an outperform rating on PFC, target price of 630. On REC, they have an outperform rating or target price of 660 rupees a share. They believe a segment that has contributed to credit growth as far as the power segment is concerned is the renewable energy capacity addition. They believe PFC as well as REC can re-rate given asset resolutions, lower slippages, as well as increasing renewable mix.
All right. Vivek, thank you very much for that. Market open coming up on your screens. So it's another 0.25% cut coming through straight up. 23,800 on the Nifty. So right down to those lower levels. And we'll be halt there at least for a while. And we'll see. But Nifty Bank is also down about 0.15, 51,086. The Sensex is down a quarter. You got the IT index, which is down about 0.27. And look at that. Just 3 out of the 50 names, the Nifty heat map, the wall is 3 in the green and everything else is down and out. So that is sort of, poor opening, but was kind of flagged off with the GIFT Nifty indicating a 60-70 odd point downtick. So 23,825 is where we are at. So we got 4 names in the green now. At the margin, a bit of improvement from 3 to 4. But, you got, it's just too early, but advance decline is negative. Yesterday, it was deeply in the red. Declines far outnumbered advances. This morning as well, declines more than advances. But as I said, it's a bit early. The PNB Housing Finance block has gone through. 9.5% equity, changed hands. 23,830 on the Nifty. Let's get to stocks.
Well, let's get to the broader markets. And PNB Housing Finance, that one's down close to around 6%, as you mentioned. But since there's so much of red, let's focus on green first. ITI, the stock is up close to 8%. Big up move is what we're seeing. Volumes as well fairly high. KNR Construction, that's the other one that's popped up in trades. That's one of the outperformers of the broader markets. Add to the list Ashok Bilcon as well. That's another stock that's done quite well. MedPlus, the numbers look quite good. So that stock as well has opened up well in the green in today's trading session. So good going on that one. Well, I think Sudarshan had given us that call on United Spirits to keep things upbeat. But it appears that that wine penetration story is not really taking shape. The numbers appear fairly disappointing. And Sula has opened up with a sharp cut. So it appears the industry itself is facing headwinds. And we're not able to see some growth. So that's why now the stock is down close to around 6% as we speak. Losers, well, we had BHEL as well. That's down close to around 2%. NHPC is down close to around 1.5%. But Nykaa, Mangalam told us the cheat sheet looked good. And in fact, the numbers as well look good. So that one's opened up the gain of around 3.5%. As we did that market check in the first few minutes, the Nifty Bank from being down 150 points, it's moved into the green. The Nifty as well is still holding on to that 23,800 odd mark. The bulls will want to put in a fight at around the 23,800 mark. Otherwise, a visit to the 200 DMA appears on the cards at around the 23,500 odd mark. If yesterday's fall was because of lack of liquidity, we could see select stocks that bounce back up. Mangla.
Absolutely. We start with the ones which are declining right now. We do have, perhaps it's results, perhaps it's volumes, and perhaps this is the mood of the market. Dronacharya is one of the stocks that actually is up on my list, down 18% right from the word go, and a fair amount of volumes as well. The stock is now really halved from its peak, so that's something we'll watch out for. Obviously, Sula down 6%, weak results coming in, and this despite them having given us their second quarter update as well. Nykaa continues to build on to those gains, up around 4% odd. Bosch from the broader markets is also doing extremely well. The operating performance for Bosch was in line. The EBITDA rising about 14% odd. That does well in an otherwise wobbly market. That stock is up around 3%. One stock I'm looking at very closely is Whirlpool. It declined in yesterday's trading session, and it's now down almost 30% from its highs. Opens once again on the back foot with a cut of almost 2.5%. So that's something we'll be tracking very closely. The other thing I'll be looking at is how Zomato's performing today on account of Swiggy's listing. Zomato's opened with just a mild cut of about 1%. But by and large, the advanced decline lines have moved further apart from the time we opened to now. Early days, like Prashant said as well. But the differential has increased quite a bit. It's now around 1,400 stocks in the red for just about 700 stocks.
Absolutely. And, the market's trying to pull back up a little bit. But, we'll see 35 lower on the Nifty. 23,850 is back on the table. We have, just a few other names, right? So ITI yesterday also was the biggest volume-led gainer. It's another 7% higher. Number one in terms of volumes as well. In the last 10 sessions, it's moved from about 200 to 300. So it's a big one we've seen on ITI. KNR Construction, I think we did highlight it earlier. 13% move on KNR. And that's the number 2 volume-led gainer. Huge volumes for this point in the day. We don't usually see that. Vari Energy, up or down, it ranks amongst the highest volume sort of movers. Recent listing. Nykaa, of course, Mangalam had highlighted, 4% gains. Bosch is up 3%, so that's a large name and big volumes as well. JSW Energy is up about 2 1/3%. Natco is up 2%. MedPlus, I think we highlighted 5% on MedPlus, 710. And these have all got some of the top volumes for this point in the day. Manappuram, of course, the story which says that maybe a private equity player is interested. 2%, 161 on Manappuram at this stage. EIH Hotels is up 4.5%. Again, it's got volumes. KPIT is about 1.5 odd higher. And then you go down the list and volumes start to thin out a little bit. But this is, the bulk of what is happening as far as the overall market is concerned. Akums Drugs, we had the management with us pre-market yesterday, and their sort of reported numbers was down 10% by close yesterday. It's down another 3.5 odd%, and it's got large volumes in it. Hyundai is down 3%. I mean, there is both quarter-on-quarter and year-on-year. Revenues, profits, margins, everything sort of looking a little weaker for Hyundai. Numbers came yesterday in the second half, 1753 now on it. And that's largely, volumes are a little low, although numerically more down than up, but volumes are yet to pick up on the downside in any meaningful way. So watch this space. Down 70 again on the Nifty, 23,815. Sandeep Bhatia is our market master of the day. He's managing director and head of equity India at Macquarie Capital. He's joining us now. Sandeep, great to have you with us here. Good morning. Thanks very much for your time. Before I get to the market and how things are set up, I just wanted to address the calls which have come through from Macquarie this morning on Zomato and Swiggy as well. It's a big day because Swiggy, of course, makes it to the market, and the analyst has painted a pretty tough picture in terms of what both should actually trade at. So just wanted your thoughts, Sandeep, if you want to sort of weigh in. They're talking about unit economics being unfavorable, too high growth rate assumptions for the next 10 years, both on the food delivery and quick commerce side. Your thoughts, Zomato and then, of course, Swiggy now.
So first, congratulations to Swiggy, its management, for the listing. I think what we are trying to say here in terms of both Swiggy and Zomato is that quick commerce is a business which is in many ways unique to India. Given India's unit cost structure, low labor costs, and the ability of these businesses with their distribution structure, with their algorithms to map and manage to deliver almost in less than 20 minutes or even lesser items, from high-value items to like iPhones, and even low-value items like daily consumption grocery items. It is definitely cutting-edge business for both these companies. What is important from an investor and a shareholder point of view is what is being built into valuations. And our view has been that valuations, especially in some of the new businesses and IPOs which are coming through and getting listed, are very challenging and demanding. And that's why we think that while Swiggy and Zomato have an interesting business which is getting built up and developed, the challenge on unit economics, on cash flow generation, which are the real things which matter over long periods of time, will need to be monitored and will need to be measured. In our view, therefore, we are very cautious on both these names. On Zomato, we have been cautious. On Swiggy, now that we have numbers, we have comparison, and we'll soon have a listing price, we will definitely see prices and listing gains look very difficult right now.
Right. What was also very interesting was your analyst's assumption of discount to valuations versus Zomato for Swiggy, and that actually is a lot lower than what the current prices of these stocks, the issue price for Swiggy and the traded price for Zomato, suggests as well. But while you did say that the current lot of IPOs are coming at top dollar valuations, which may not create a fair amount of wealth for investors, or they are pricing in a lot more than what can be delivered, it may actually do well for one of your other calls. And I'm talking about the NTPC Green IPO. And this morning, your analysts have initiated coverage on NTPC, a buy rating, target price of 475 odd rupees per share, benefiting from both energy security and energy transition themes. How much of the NTPC Green IPO valuations will weigh in on, your call on NTPC itself?
So I think you're pointing to the more obvious thing, which is the market is realigning itself. We went through a teenage infatuation phase in the market where everything new, bright and shiny is what we like. And this is what has happened with some of the IPOs. But the real cash generation ability and the real ability to deliver and execute on the ground is with some of the old generation sectors. And I think with the power demand, which NTPC is part of, whether it's green energy or thermal, and even on the power finance side, we have initiated on PFC and REC. So all these businesses are tried, tested, cash generating business where the underlying regulatory structures, the cash flow and the investments are all can be mapped out, and there's definitely much more certainty in terms of cash flows. So while they may not be something which is new gen, there is a lot of value, especially at the current valuations in all these names, which is why we have initiated on the entire power finance sector and the power sector with significant buys. So that's where we are coming from. I think the market itself is transitioning now as we speak. I think investors, both domestic and foreign, are recalibrating their investment portfolio strategies. And some of the, new IPOs which have come through, like the Hyundai, which also, delivered its results yesterday, all of them clearly are coming off and trading below the listing and IPO prices.
Hi, Sandeep. Good morning and good to see you in. Nigel on this side. Let's talk about the market on the whole. We've come off close to 9% from the peak. And also the problem has been earnings. For the past quarter, it's been one of the most disappointing quarterly earnings that we have seen. How much of it is in the price? Have you all scaled down your EPS estimates? If yes, by how much?
So I think the post-COVID period is well and behind us, and now it's more normal. I think there's clearly more downside to this market, maybe another 10% easily. It's not only just earnings that are disappointing. Our valuations are definitely very high. And, you cannot always be a cheerleader to the markets, waving pom-poms and dancing just because the market's going up. So we have been very cautious on the markets for some time now, and we will continue to be that. Earnings downgrades are coming across the board. They would be in double-digit terms, the cuts. I think the real challenge is what happens to fund flows over a period of time. While India has benefited both from domestic and domestic flows a lot, and foreigners have been selling, the view has been that India and China are the only two markets, and China will continue to disappoint, so India will continue to benefit. I think going forward in 2025, the real big gorilla on the horizon is the U.S. market, and the U.S. market will see both in terms of its economic activity and in terms of its political activity, significant investor interest. And therefore, to some extent, if we have a strong dollar going forward, all emerging markets, including India, will definitely be hit. So I definitely see correction in the market of up to 10% over the next 3 to 6 months.
All right, 10% correction over the next 3 to 6 months. That's a headline coming in along with a 10% correction that we've already seen. Sandeep, going back to your point on, the markets going back to traditional cash-generating businesses, so to say, as against just the new age ones which we were infatuated by, in your words. There are a couple of cases in the consumer space where the incumbents are threatened by some sort of disruption. Case in point, the paints business, where, a new competitor, weak consumer sentiment has, perhaps scared the current leader in terms of the numbers that they've reported. And the second part is the consumer space itself. We've seen Britannia fall about 10% over the last 2 trading sessions. Their volume, forecast is a little wobbly right now. A lot of people are talking about the underlying shift coming in from shift in consumer sentiment, urban consumption itself, whether looking for healthier or no sugar options?
Yes, and so the question is, yes, there is consumption weakness and competition coming up in these players.
Do you still back the incumbents?
Well, I think the sectors that we would like. No, I think it's part of the same strategy that I've outlined, that investors need to rotate to some of the more certain cash flow businesses. I think one thing which people have ignored for some time is the entire private bank sector and PSU bank sector. I think both the banks are on a solid wicket. Despite some of the slow growth and inflation numbers that we see, I think the underlying macroeconomic structure, creditworthiness of corporates, creditworthiness of individual borrowers is still very, very decent. The system is rock solid in terms of capitalizations. Earnings growth will be in the region of 12 to 14%. So I think the bank sector will definitely benefit, and the other sector that could benefit if US growth surprises, it could be the IT sector. Valuations in the IT sector are also not very demanding. So I think both the banks and the IT sector remain to be seen to be beneficiaries. The broad consumption story will take some more time to come through. Probably after June, July next year is the better time to look at these stories.
Sandeep, just to sort of confirm, you said another 10% downside from these levels. So basically around 21,500 levels in the next 3 to 6 months. That's what your view is.
Yes, it depends on how the US behaves and how the US market moves. It's contingent on whether we see strong dollar appreciation come through. It's also contingent to see what kind of policy initiatives vis-a-vis the rest of the world that the Trump administration unveils. So there could be some potential disruption to the assumptions which the world has on growth. And if that happens, there's definitely downside there. Valuations, as we have been saying for some time, are definitely challenging and demanding. And all that will contribute to a market correction.
Okay, all right, Sandeep, thanks a lot for joining in. Sounding a little bit cautious on markets. There could be pockets of opportunity, but not ruling out a 10% correction from these levels as well. Thanks a lot, Sandeep. Wishing you a good day ahead. Well, let's get straight to our next management, that of BEML. Remember, the past quarter's numbers a little bit disappointing, though margins have been a bit of a pleasant surprise. We have with us Mr. Shantanu Roy, the chairman and MD of the company, who joins us. Hi, Mr. Roy. Good morning, and thanks a lot for joining in. Well, let's get a couple of basic numbers first out of the way. Earlier, you were guiding for around 20% growth for the fiscal. As of the half-year mark, you're more or less flattish. So do you stick to that guidance, that revenue growth guidance that you gave? And also on margins, your gross margins are holding firm above that 50% odd mark. What is the margin guidance we should be working with for the second half of this year?
Good morning, Nigel.
Morning.
Let me talk about the positives that happened in the first quarter. The first quarter saw the unveiling of the Vande Bharat sleeper train. The first quarter also saw BML getting the order for the high-speed train. The first quarter also saw BML commencing the assembly and commissioning of the first indigenously manufactured electric rope shovel at Northern Coalfields site. These were the positives. Yes, sales was flat, but EBITDA has been on the growth path. As far as the EBITDA is concerned, the margins, I would still say that 100 basis point growth over last year's number is definitely on the cards, and we are well on our way to achieve it. As far as the sales is concerned, you see, sales, let me talk about the order book, and then I will go to the sales. The order book, as on 1st of November, is around 12,255 crores. We booked around 2,000 crores of orders till October in 24-25. And in the coming, in this month itself, I'm sure the order book we are expecting to grow by further at least 30% over the current numbers. In the current year, the order book that we are aiming at, another 35% over the current numbers by March. So that will be a healthy order book. Coming to the execution part, we have around 3,000 crores of orders which we can execute in the current year. So that sees us through for the 10% growth. Absolutely not a challenge. The challenge is getting some more orders, which we are expecting from the mining and construction sector in the coming 2 months, which we'll be able to execute by the end of this financial year. So my guidance for the sales year-on-year growth still remains around 20%.
Okay, all right. And you said that 35%. So just to reconfirm the numbers, sir, the revenue growth will be 20%. Margins will improve by 100 basis points in comparison to last year. And by the end of this year, the order book will be 35% higher than current levels, which means that you should end the year with an order book of roughly around 18.
Order book. You're right. The orders that we are going to get, I said two things. It's in two parts.
Right.
In this month, we are expecting further orders, which will increase our order book by 30% over the coming levels. Okay. And after that, from December to March, we are expecting some more orders, which will increase the current order book by 35%. So overall, there will be a growth of around 65% further order inflow in the coming 4 months. And after we execute, so we'll be left with around 17,000, 18,000 crores. You are spot on. Absolutely.
Right. So we were just doing those back of the envelope calculations itself. On mining as well, you said that it will continue to be your largest contributor to the top line. You expected faster growth in defense and rail. FY24, the contribution from rail increased around 38%, and defense could do only 20%. By the end of this year, how do you expect your revenue mix to look like? And if you could break down your order book as well in terms of a mix, that would give us a sense into what the future revenue mix would look like.
First, let me talk about the order book breakdown. Order book, the year-end order book will be around 50% from rail and metro, 30% from defense, aerospace and maritime, and 20% will be from mining. As far as the revenue is concerned, last year railway did pretty well. This year actually railway will not be able to do that much because the orders that we are receiving, the orders that we received even last year in August, there is a gestation period. So the orders, the execution will start primarily from 25-26. So this year again it will be led by mining. Defense, we have a pretty good order book. So defense is expected to contribute at least 30% to the top line this year. Railway will be around 20% and mining will be around 50%. So this trend is going to change. If you look at the order book trend, so this trend will change maybe from financial year 25-26 and 26-27 it will see a marked change in the trend of the vertical which is contributing to the top line.
Mr. Roy, good morning. As far as railways are concerned, are we, earlier a lot of the money was being spent by the railways on railway sort of infrastructure. Then it moved to train sets and coaches themselves. Now we've heard from some of the other companies who work in that space that the focus is once again swinging back to infra, building out the infra away from coaches and train sets. Is that something you're seeing as well, and is that going to continue? Just wanted your thoughts.
You see, there has to be a balance between infra and the rolling stock. And the rolling stock market requirement is going to be huge. We are already looking at the Vande Bharat. We are already looking at different variants of the Vande Bharat, the Amrit Metro. The metro per se for all the tier 1 cities and tier 2 cities, there is a huge opportunity. At least 14,000 to 15,000 crore in the coming 2 to 3 years from the metro itself. If I talk about commuter rail rolling stock, some of the tenders that we were expecting this year and which now will not happen this year. For example, the 100 train sets of the push-pull aluminium train, which the order size itself is around 30,000 crores. Then we have the MRVC EMU local trains. Order size is around 40,000 crores. So all these have been pushed back, apart from certain track machines, maintenance vehicles. So around 70-75,000 crores of orders have been pushed back to the next year. So once these fructify and these start getting executed, definitely the share of the rolling stock for the rail and for the metro will definitely go up. And yes, the focus has to be on infra. We have to improve the infra. Absolutely no doubt about it. But at the same time, we'll need the rolling stock also to operate on those routes.
Yes. Okay, very quickly, sir, with regard to that 30,000 crore tender for aluminium push-pull trains, give us some more color on that. By when do we see this open up? By when do you see execution? And what part of this could BEML get?
You see, this tender was already announced by the railway, and sometime in March it was discharged.
Yes.
So we expect that in the current financial year, maybe in the last quarter, this tender should again be announced. And this is the 100 train sets. The push-pull is a normal train which has a locomotive, and the car body, the coaches, are not self-propelled or propulsion-driven, unlike the Vande Bharat or unlike the metro trains. The metro and Vande Bharat do not have a locomotive, and there is a set of blocks. For example, in Vande Bharat, if it's a 16-coach train, so every 4 coaches, 2 are motored coaches or powered coaches, and 2 are non-powered coaches. But in a push-pull train, the normal regular train, there is a locomotive, and there are none of the coaches are powered. All the coaches are hauled by the locomotive. So this will be one difference. Second is this will also get the aluminum technology in the country for the first time, and which will prepare us for the next wave or next level of the aluminum trains in the country. Third is here the share of BML that I can foresee should be around 70%, considering the kind of partnership that we are envisaging. So I think I have answered all your questions.
Just one quick clarification. You said by the end of this year, your order book would be close to around 18,000 crores. That's below your earlier, guided range itself. Your earlier guided range was 20,000 to 30,000 crores. Now this is below the lower level as well.
Yes.
Is that correct?
Yes. Yes.
Okay.
And that is because some of the orders that we were expecting to be finalized in the current year, they will be pushed back to the next financial year. For example, the Mumbai line 456.
Right. So in light of that, could you give us a sense of the order inflows?
Line 456. Sorry, let me complete, Nigel.
Yes, please.
For example, the line 456 order for the rolling stock, which is valued at around 5,000 crores. So we anticipate that this is not going to be finalized in the current financial year, and this will go into the next year. So if that had been finalized, we would have definitely crossed 20,000 crores.
Mr. Gupta, thank you very much for joining us, and hopefully some of these will come on track. Appreciate you joining us here on CNBC TV18. Good luck. Well, we have the management of Samvardhana Motherson now joining us. The second quarter.
Prashant, just a minute. Swiggy's initial rate has come out. It's at around 420, so that's a pleasant surprise.
Right.
That grey market premium that we track, I think that moved into a discount yesterday.
So
but for the time being, it appears fairly good.
390 was the issue, and I think
420.
We'll have the rate come up as well. And we'll look at that. That's a big one, which we focus on in a bit from now. Well, Samvardhana Motherson is the next company. Second quarter earnings were slightly below expectations. We have the management now joining us. They've reduced their FY25 capex guidance as well to about 5,000 crores. Pankaj Mittal is COO, and Kunal Malani is CFO at the company. Gentlemen, good morning. Great to have both of you here. Prashant here. Pankaj, if I can start by asking you, across segments, you reported growth, but it's lower than what markets were kind of anticipating. Now we are kind of entering, according to many, a new phase of maybe, higher tariffs, especially out of the US and consequently in other geographies as well, because other geographies will respond to what the US does. How is the business environment looking for Samvardhana Motherson in H2 of 25 as you see it?
Well, good morning, and thank you for having us on your channel today. The board congratulated the teams for a fantastic performance in this very difficult period. As you know, auto industry is going through a transitionary period with change in platform mix and content. And to answer your question specifically in terms of the geopolitical changes and tariff structures which may come across, Motherson is very well poised to take care of these new changes because we are not exporting from one country to another. We are supporting our customers from the same region. We have our plants in the same geography. If you see the way we have diversified ourselves, we continued that journey, and this diversification strategy has helped us to mitigate these regional volatilities. We have strengthened on 3CX10 with new products, customers, and geography penetration. If we see today, India is at around 20%, and also US is North American market is around 20%. So in this, the geographical changes will be a positive for us in terms of supporting our customers from their onshore locations.
Right. You know, one of the things that you said in your conference call was that you would expect the margins to improve in the second half, and also, you know, the kind of growth that you are anticipating coming in from your new greenfield plants and the consumer electronics business would aid business. In light of that, what is the kind of expansion that you are targeting in the second half of this year? And if you could give us a sense of what you are expecting in terms of growth for the next year?
Well, see, as far as growth is concerned, the real numbers come with the customers' numbers in terms of how the volumes take off. The guidance on capex which we have given remains the same. It was 5,000 crores plus minus 10%. We tweaked it to more accurate plus minus 5%. That's all what we did. Out of the 19 facilities which we had announced earlier, 5 have already started production. 14 facilities are at different stages, out of which 8 will start SOP by the end of this year. In terms of non-auto business, it is also growing at a very good pace. We already have a run rate revenue of around 3,000 crores a year. The consumer electronics plant has come on stream, has delivered its first batch of customer deliveries, and now in the process of ramping up for serial production. We are also in full swing for the next bigger plant for that. Aerospace division, also with its 16 facilities, both onshore and offshore, is very well entrenched. It is supporting the aerospace customers from a very diversified portfolio, from structural metallic parts to engine parts. And also in this quarter, we announced a new joint venture with our current partner, Hamakureksa, in Japan to provide 3PL services, XM, and also on sustainable packaging to various customers in Japan. So all these measures on the non-automotive side also would fare well for the future.
Good morning, gentlemen. Give us a brief understanding. You know, y'all have mentioned that I think y'all are outgrowing the market. So how much is the market growing at? How much do you all expect to outgrow the market in the time to come? And briefly tell us about the supply side issues. Have they been sorted out now?
Look, I think the market grew at actually negative rate. This was minus 5% on light vehicles and minus 6% on commercial vehicles. Against that, our organic business grew by 1%, and hence that's the overperformance versus the market, let's say around about 5 or 6%, which you then adjust for a little bit of forex changes, and that turns out to be around 4 to 5%. That is what happened this quarter. The premise for that remains the same going ahead, largely because the premiumization aspects continue. The fact that more SUVs are selling, more hybrids are selling, or adding content on our product lines, and hence that continues the way it is. What we do foresee, however, is the fact that the second quarter or the second half of the year tends to have better production profile than the first half of the year, given the seasonally weak quarter two, which is because of the summer shutdowns, which is fairly long in Europe and somewhat there in other parts of the world as well. In the next H2, the production levels are higher, are expected to be higher, and hence, we should have a better trajectory when it comes down to our revenue stream and growth around it. On top of it, our growth is also premised on inorganic, and that's when you add the inorganic pieces to it, it's grown by 18%, and that is only taking into account what we have assimilated till now. Much of the synergies, etc., is yet to play out and will play out over the next, let's say, 12 to 24 months. Then you add to the fact that in H1, whatever are the exogenous changes, whether the geopolitics, freight rates, higher inventory cost, etc., all of that is embedded into our H1 results already. We will be working with the customers to try and improve on those, share some of those, and so on and so forth, find solutions, and hence again H2 margins are expected to be better.
Okay, we'll leave it there. Pankaj and Kunal, thank you very much for joining us. Appreciate your time here on CNBC TV18. Good luck, and we'll chat again. Well, look at the market go, 160 down on the Nifty. I mean, this is a sharp cut coming through, and I think, actually, it's not a it's not a sort of dive. It's been a steady decline since we started. So 9:30ish or so, we were at about 23,840, and we've lost 100 points clean in the last 10 minutes. Basically in the last not 10, 20 actually. It's looking tough out there. 23,735 is where the Nifty is at now. Nifty Bank will come up. That's doing much better. It's down only about 0.12%. That's about 60-odd point cut. Let's look at the mid-cap and small-cap indices. Mid-cap index down 1.5%. That is looking pretty poor. And the small-cap index is down a full 2%. So it's a bad-looking scene. Market breadth, naturally, I think has to be just one way down. 10 stocks down for every one stock which is higher. So one of those mornings. Once again.
One of those mornings. Just 2 points here. The Nifty Bank is doing a relative outperformance here. What's taking the markets lower is the IT pack. For the last couple of trading sessions, the IT index was doing a lot better, keeping one end of the market up. But right now, as we speak, the Nifty is at the low point of trade. Pull it up in conjunction with the Nifty IT index, and there you'll see a fair amount of congruence in both those charts. The second point is that, even the metals have come in for some bit of selling. So we have both the IT and the metal stocks not doing particularly well, even as the Nifty Bank hasn't fallen as much. So those two factors taking the Nifty below expected support levels of that 23,800 to 23,850 zones as well, Nigel.
Well, and a couple of stocks that started off well in the green, they have come in for selling. Case in point being a Nykaa. The stock was up 3.5%. It's now down. It's moved into the red. Sagility, yesterday, in fact, we had that listing out there. Sagility, that in fact is down closer around 5% as we speak. And even stocks like PFC, where there was some positive commentary, that one as well has come in for some selling. The Nifty Bank, that's holding up. HDFC Bank is still in the green. I think SBI as well is fighting for the bulls. And in a market like this, you have the Nifty Bank that's up. It's a very, very volatile screen out there. When Prashant started doing that market check, the Nifty was down 160 points. Now we're down close to around 80 points. So it appears, there is some volatility out there. Part of that dip has got bought into, and that's why, in fact, we've cut those losses by half. The problem is the breadth of the market. That's, one stock that's advancing for nearly around 8-9 stocks that are declining. I'll tell you what, we'll slip into a short break, come back. We'll be joined by the management of PN Gadgil. Stay with us.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation, and addressing the China threat. Let's begin with Marco Rubio, who, according to 3 U.S. publications, is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former U.S. military veteran, is most likely to be the next U.S. National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the U.S. Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the U.S. military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on
Well, in a weak market, the one sector that has shown some sort of growth is the jewelry space. We've seen that in the numbers of Kalyan Jewelers. We've seen that in the number of Titan as well, especially on the top line front, notwithstanding the margin compression that we've seen. And that's a trend that follows for PN Gadgil as well. The revenue growth was up by almost 46%, but the margins were slightly under pressure. Saurabh Gadgil, who's the managing director, joins us now. Saurabh, thank you for joining in. The quarter from a revenue standpoint was fairly strong, understandable because of the cuts that we saw in customs duty, but that also led to an inventory loss for a lot of the jewelers. If you could quantify that, how much of that was factored in the second quarter? And secondly, how did your studded share perform in the second quarter? Where does that number stand at? Those two numbers.
Good morning. So, like all other players, with that duty cut in the month of July, we also saw some loss in the valuation of the stocks. And for us in the Q2, the number is around 18 crores. So the PAT, which is around 36 crores, post this 18 crores hit up, should have been plus 50 crores if we would have been able to not face the duty brunt. But having said that, the sales have been strong. The quarter has been good. And as far as the ratio of studded is concerned, studded has been doing well. There's been no pressure on natural diamonds. The sales have been growing, and we are at 10-11% of the entire sale, which we can contribute to diamond and studded jewelry.
The same last year as well, right? So in light of growth that you've seen across your parameters, studded hasn't grown any faster. Is that what one has to read?
Studded has been steady. So studded has grown in terms of value. When we look at the entire term, in percentage-wise, it has been at 11%, and which we are projected that we eventually want to scale up to 15%, and this would be in the next 2-3 years. So the aim is towards that, but we have been showing steady growth in studded also.
Hi, Saurav. Good morning and good to see you in. What about growth for the year? How is it likely to look? And how is quarter 3 shaping up? We're getting into that peak wedding season, lot of numbers in terms of the number of weddings that we're going to see, as well as the festive season. So how is the start to the quarter 3 been and the target growth for the year?
So the quarter 3 has started well. We added 9 stores post our IPO. So in the month of Navratri, we did 9 days, 9 stores, which have all been operational just before the festive season. Has been a big boost to us. Diwali Dussehra, the entire season has seen strong value growth, upward of 25% value, and the trend continues. Currently, with the prices taking a substantial dip and falling below 75,000, I think it's given a big boost to the market again. There are around 40 lakh weddings as per the CIT report in the next 3 months, which should again give a big boost to jewelry consumption. So all in all, we're looking at a good Q3. And when it comes to the entire year, we feel that in terms of value, we should be looking at a 40% growth year over year.
All right, 40% growth year over year, would be your estimate for the entire year in terms of value growth. What happens to margins? Because this quarter, obviously, margins were lower, impacted by that 18 crore inventory hit that you speak about. But as you move along with, hedged gold reducing as a proportion of your overall numbers as well, what are the margins one should realistically look at by the end of this year?
Yeah, I think we are strong on hedging. Like we are committed post our IPO, we'll be looking at using gold metal loans to increase the hedging portfolio, which has steadily started increasing. If you see, as of September end, we have repaid a lot of bank loans. And as we had spoken, we want to convert them to non-fund-based limits. And that is happening. So we feel by the end of third quarter, we should be around 55-60% hedged. And that would also give a big boost to margins because gold metal loans come at lower interest rate as compared to working capital loans. So I think the guidance for margins would remain the same as we had said in the last presentation, that we should be looking at margins of around 3.5-4% PAT margins. When you look at the sale, which we count as retail sales, and I think overall we should be at a margin of around 3% overall on the entire turnover, the PAT margins.
Okay, all right, Saurav, thanks a lot for joining in, and heartening to hear that you're saying that natural diamond sales haven't really been impacted, and you're saying the quarter 3 has started off on a fairly good note. Thanks a lot for joining in. Well, keep an eye out on the markets. We continue to reel under some pressure. The only bright spot is the Nifty Bank that's still trading more or less flattish. The breadth of the market is where there's a lot of pain. And in this first hour of trading session itself, BEL has come in for some selling. Hindalco is at the low point of the day. Hero MotoCorp as well is seeing some selling. But all eyes now are on Swiggy. The pre-open rate that we've got is around 412 and 420 on different exchanges. That's a premium in comparison to the IPO price of 390 rupees. In the next few minutes, we'll get the live rates. I think they're just about to start trading. Mangalam, down your rally. Tell us more.
Well, for Swiggy, you know, it has been a business which has been stronger. The stronger business is Zomato, which is listed earlier itself. Two things most important: how do the margins improve in their food delivery business, and how does growth come by in their quick commerce business? On both those factors, the management has been talking about, you know, addition in this quick commerce stores. At 412, it will obviously be at a premium to its issue price, much against, you know, the tepid opening expectations that one would have seen. There you have it. The bell goes on 4% premium to issue price.
It's kind of sweet. I think they got the delivery delivery agents to ring the bell on Swiggy. I think if I saw that. And of course, now you've got the NSE CEO and the Swiggy CEO sort of occupying center stage. But the bell, of course, was rung in by some of the sort of their delivery agents. So yeah,
those guys are the real owners of the business, and those guys are the real.
I mean, it's a business which literally runs on the personnel. So yeah.
So that's pretty good spot. What also was interesting was the way Zomato tweeted out a picture of both Zomato and Swiggy right outside the Bombay Stock Exchange, saying "You and I in this beautiful world." While they are competing on the ground, obviously, and in the markets for investors' attention and capital as well. You can't take one away from the other because of their businesses being so similar and intertwined when it comes to valuations as well. So that's something we'll most definitely keep an eye out on. Opened at a premium, still holding up with a premium around that 400 rupees. At around 400 rupees, if you just look at the way Swiggy is trading as compared to Zomato, would still be about a 58-59% discount to Zomato as against the offer price at around 62%. But while we're talking about Swiggy, don't lose sight of the other listing as well. We had Acme Solar listing, and that one's actually come in at a discount to its issue price. It opened lower by about 8 to 9% versus its issue price, and currently settling in with a cut of about 6%. But the story of the day definitely has to be Swiggy opening at a premium. Where does it go from here is something we'll look at. Interesting bull versus bear case coming in on Swiggy as well. We had a bull case coming in from JM Financials this morning, expecting a target price of close to around 470 rupees on the stock, whereas Macquarie has a bear case, underperform rating, initiated coverage with a target price of about 325. So that's about the listings and Swiggy.
Absolutely, and 397 is where it is now trading at, about 7 rupees on top of the issue price. Big volumes, of course. It's one of those household brands. Needs no introduction. As they say, Swiggy kiya gaya. Literally.
It'll be very interesting to see if there is a sense of FOMO if the stock continues to do well. Because this wasn't an IPO which was subscribed fairly well by the HNIs. In fact, it wasn't even fully subscribed by the HNIs. 0.41x was the HNI subscription. Retail as well just about managed to subscribe to the offer that was there, 1.14 times. It was the QIBs that took the IPO through at 6 times odd. So if the stock continues to do well as against street expectations of disappointment, then is there a sense of FOMO, and that reflects in stock price?
Well, till yesterday, people would be talking about JOMO, right? Joy of missing out, because everyone is expecting a tepid listing. But Mangala makes a valid point out there. Subscription wasn't great, so that could turn into FOMO, which in fact could help the stock hold on to some part of these gains. We know the penetration in the industry is great, the scope is great as well, but now it's listed, so we'll be looking at the financial matrix. For the time being, the first few minutes have gone in favor of the bullish trend. It's holding in the green while the markets are actually struggling. Breadth of the market is dismal, and this one is still up close to around 4%. Slip in a short break, come back, we'll get you a technical check on the market. Stay with us.
महायुति का सीएम चेहरा कौन होगा, और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा, तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे और ये सरकार जो है महायुति की वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा,
अभी डिसाइड
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Well, there's a serious amount of volatility in the markets right now, and most of it on the downside. We were talking about how the Nifty Bank has been outperforming, but that bit of an uptick on the Nifty Bank has been sold into as well. And now the Nifty Bank is almost as much a contributor to the downside as the other parts of the market. So the Nifty is down 150 points once again at the low point of trade, with the Nifty Bank being the fresh, contributor to the markets on the way down. Good time to get in Mitesh Thakkar and his technical views. Mitesh, it seems like every bit of an uptick that we're seeing in the market is used by bears to sell into. What are the levels that one should look at in a situation like this, and what are the stock calls that you have?
See, on the Nifty, we maintained 23,550, which is the 200-day area, as the key level to watch out for. And, that's also an area where a historical gap which was done on the 25th of June 2024. I think that's coming. So my sense that we might test that and then look for a reversal. As of now, the slightly disappointing part was the Bank Nifty, breaking down. It was holding out very well in the morning, and then now it started declining. So banking and pharma looks like a sector which could possibly see some more profit booking or some more correction, and therefore, keep the Nifty under a negative kind of a trance.
No, absolutely. Just any trades, Mitesh, specifically you want to put out?
Yeah, so as I said, I think, it's the banking and the pharma sector. So a sell on Dr. Reddy's with a stop at about 12.62 and a target of around 12.10 on the downside can be looked at. While from the insurance side, HDFC Life is sitting on a very, important support area, but is giving signs of breakdown. So we'll keep a trigger sell. If it breaks 688, take a sell with a stop at 700 for targets of around 660 to about 655 on the downside.
No, I got that. And Mitesh, you might want to listen into the next one here as well. We're talking about Reliance, which is, of course, sold off quite a bit from the highs. On the fundamental side, CLSA has come out with a note, and I think they're saying it's fallen to a level where you should start to buy it and then sort of, hold it and sit tight. Sonal is here with details. Sonal.
Well, that's what the report says. Buy right and sit tight. And they think right now is the time to look at Reliance Industries because it has fallen sharply from the highs of the stock price as well. They say there has been a lot of excitement that we've seen in the recent solar listings, right? And that is something that could be the next trigger for Reliance Industries as well. Their soon-to-be-launched solar PV gigafactory. But that has been ignored by the market after Q2 earnings because that has been weak. They have been valuing Reliance's solar business at $30 billion, and the overall overall new energy business at $43 billion. However, it is not reflected in their target price currently. They say the stock is trading within 5% of their indicative conservative valuation, which assumes a nil value for new energy business. So if we add to that, there's a further upside that they look at the stock as well. They see an attractive opportunity to play triggers through 2025 after 3 to 4 months of lull that we've been seeing. The triggers would include retail recovery, ramp up of air fibers, and also potential Jio IPO. So these are some of the things that you should be watching out for when it comes to Reliance for 2025. And there will be a short period of lull. Growth in the retail business could continue to be lower, but they are very positive on the stock. At these levels, they have an outperformed rating with a target price at 1650.
All right, Sonal, thanks a lot for that. That's about Reliance. No respite for the market. Now 23,700 on the verge of breaking as well. Big casualties coming in the form of ICICI Bank, HDFC Bank, and then we also saw some sell-off in the two-wheeler space. So Eicher Motors at the low point of trade along with Apollo Hospitals as well. What we'll do is take your leave on market coverage along with individual stocks for now. But on the other side, a very special segment lined up. Lata will be in conversation with B. Prasanna of ICICI Bank and Arup Rakshit of HDFC Bank to discuss the fall in the rupee and trajectory going forward.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses?
It's been a fall and fall not just in stock markets. The rupee has taken, well, today a breather after hitting fresh all-time lows nearly every day since the Trump election. However, the rupee is actually a picture of strength when you compare it with most Asian currencies, which have been falling much more. While the Indian currency is down 0.38% in the month of November versus the dollar, the renminbi for this month is down 1.5%, yen is down 1.7%, Korean won is down 2.5%, and the Thai baht is down 2.9% versus the dollar. And that's because the dollar index is up 2% in the month of November from 103.8 to 106. That explains much of the fall. But where do we go from here? Joining me are two absolute experts on the field. We have B. Prasanna, the head of global markets at ICICI Bank, and Arup Rakshit, Group Head Treasury Sales and Analytics at HDFC Bank. Arup, Prasanna, thank you very much indeed for sparing time in what must be busy days, busy hours in your Treasury desk. Arup, what is your view? Do you think we see this continued pressure? Are we stopping at 84.4? Or do you think, 85 is very much on the horizon?
Thanks, Lata. Good morning. No, I think 85 is very much is possible. If I have to put a number, I would think it will be an 82-20, 84-20, 85 kind of a range, which is likely to happen in the next 3 to 6 odd months. And if one was to extend the timelines, it can go up to 85, 50. 85 is not a barrier that can't be breached. But what we are likely to see is a lot more volatility in the days to come. Unlike what we have seen in the last couple of years, rupee will remain volatile. Maybe within the range, but it will remain volatile.
Okay. Volatility in all markets as we speak. The Nifty has breached the 24,000 mark, and 23,600 or 23,700 also breached. Prasanna, what's your sense? What is the range that we should look at now for the rupee?
Good morning, Lata. And I think more than a particular level of the rupee, I think we need to come to terms with the fact that after a long time, it's actually the strong dollar and the tremendous redistribution of the rest of the world growth into the US growth, which is what has been happening, driven post the Trump elections and the expectations of his policies. So I think we need to understand that what could have turned out to be a very positive period for emerging markets, because the Fed was starting to cut rates. And in that scenario, you would have had a middling kind of a US growth, but you would have had a very strong EM growth, and there would be search for yields and people will come into EM. So that was the situation maybe around 30 days ago or 45 days ago. But the election results and the red sweep, not just Trump's election, but the fact that he's got both the houses as well, has made it very clear that it's the pro-US growth policy which is going to, form the basis of everything that's going to happen. So it's going to be a slightly dark period for emerging markets overall. And within emerging markets, though India is one of the stars and doing pretty well, the fact of the matter is when the money itself is returning back to the US from a dollar strength perspective, it's very difficult for emerging market currencies to, stand against it. So what we are seeing is that, like you mentioned in your initial commentary, almost all emerging market currencies are weakening. And it's only because of the RBI that, the rupee is actually weakened a little less. And you would see that almost on a daily basis, there have been substantial outflows on the equity market. It's been compensated only by the Reserve Bank intervention.
Oh, yes. Your point on US exceptionalism is well taken. We are seeing these outflows from the equity markets, and I think that continues even today. But Arup, this is all in anticipation of what the Trump administration will do, and the actual steps will come after January 20th. So would there be a nastier fall after Jan 20th? I mean, should we be prepared for a worse first calendar quarter of 25?
So interesting question, because this is all in anticipation of what Trump is likely to do. The issue is, will Trump go the whole hog, or will there be a lot more different Trump or a lot more diplomatic Trump in a 2.0? But the other fact is that there's a lot of money which was rumored to have moved out of the equity markets into China, emerging equity markets into China, including India. Now, if Trump becomes that level of aggression, then there would be some amount of that money also flowing back into some of the other countries, and most probably India will stand to benefit. If I have to look at a Trump 1.0, the rupee had depreciated by about 11 to 12% in that 4-year period. I would hazard a guess it will be more to 6 to 7% or 7 to 8% kind of a thing in this 4-year period. So if one was to break it up, it's a little different, about 1 or 2 odd % a year. The other fact is that India's macro is much better this time than the 16 to 20 phase of Trump 1.0. With the kind of export surge which is coming from the GCC side, I don't see it a one-way traffic of a huge fall, but as I said, within volatility it will remain. And obviously, what we have seen is the trajectory of depreciation seems to be a lot more smoothened out by the way central bank has looked at it. And while RBI will allow some amount of fall to happen, I don't see it to be remaining beyond expectations of a fall kind of a thing. So I don't see out of the whack, but yes, we should need to be careful.
No, your 85 perhaps captures all that. And well, as for the macros, yes, almost every brokerage under the sun has said that India is least affected, more in terms of even exposure to the United States in terms of exports. But about our macros, the last two numbers are a little troubling. Inflation is higher than expected. Growth is going to be lower than expected when it comes on November 29th. But Prasanna, before I come to that part, the inflation part, the Reserve Bank, when it supplies so much of dollars, could also be absorbing rupees from the system. Is there a worry of that kind of monetary liquidity tightness, a fear which had gone away in the last few months?
So Lata, excellent question. Just before that, one point which I wanted to make about is when we're discussing the global strength of the dollar, I think the single most important thing that is affecting India and the Indian rupee is what is it doing to the Chinese yuan. And China being at the forefront of Trump's policy in terms of tariff, we should realize that they are just about to devalue a little bit. I mean, depending upon when the announcement comes and to the extent to which tariff happens, there is going to be a devaluation or a depreciation, as you will call, on the Chinese yuan. And that's one of the reasons why you could assume that even as the RBI intervenes and kind of prevents a runaway depreciation of the rupee, if you have noticed, they have been consistently leading the rates up a little bit. At present, the INR has been depreciating a little bit over the last, say, 1 month or so. And the primary reason is there is a big fear of what's going to happen to the Chinese yuan. And because if that devalues or depreciates, I mean, I think INR has no other scope, but in order to retain competitiveness, we have to depreciate as well. Now, to answer your question on liquidity, I think the broad way in which RBI has been intervening in the last 1 month or so is, I would put it like I mean, there are no proper estimates on their intervention in the NDF market, but I would put it as onshore, maybe around 20-30% and 60-70% on the NDF market. And interestingly, what they do on the NDF market is you would call it like a bet on the exchange rate rather than actual deliverable dollars. So to that extent, it's only when you actually give delivery of dollars, the rupee liquidity gets absorbed. So to the extent that they have an onshore forward outstanding, when they take delivery or when they give delivery of that, there will be a withdrawal of liquidity, which I think is to the extent of $15 to $20 billion. But I don't see them giving delivery of that dollar. They are probably going to keep it outstanding. And they will probably, when they come to a sweet spot, when flows are coming in, they will use that opportunity to recover the dollars. But what they are having as an outstanding on the NDF, it does not lead to an immediate liquidity withdrawal from the system unless there are arbitrage plays that have been played by the Indian banking system when RBI has shorted dollar on the NDF and the Indian banks have come and, played the arbitrage route. So it's a difficult call to take as to what that estimate is. But I would say that most of the intervention is now happening on the NDF side, and most of that intervention does not have an immediate liquidity implication is what I would presume.
Okay, I'm being warned that I'm out of time, so the last two quick questions to both of you. Please make it quick. Prasanna, we saw the ugly inflation number. What does the Reserve Bank do? When is your first rate cut expectation?
So I think we are in a situation where the RBI is likely to revise growth lower and probably revise inflation higher by maybe 20 basis points or so. And the fact that the global environment is now leading to a weaker rupee and a stronger dollar means that the case for a rate cut is not as clear as it was earlier. Earlier, we had a call of February. Now, it definitely looks like there is a possibility of that getting postponed to April.
What about you, Arup?
Q1 next fisc.
Okay, so that could be either
Feb. It's unlikely to happen.
Okay, certainly not. Very quickly, Arup, do you think Indian companies are prepared for this rupee depreciation? Because, the RBI was being your kind of treasury manager by managing the volatility. Will it show in the Q3 balance sheets that people didn't manage their currency risk well?
Good question. See, but there has been, a complacency at the level of the Indian corporates. But if the depreciation remains within that 1 to 1.5% from here on, I don't think that should impact too much.
Okay.
Unless it's too wide, it should not.
Okay. All right, I'm going to invite both of you all yet again for a longer show, but at the moment, Swiggy is listed. So that's the big thing on the other side of the break. Thank you very much, Prasanna and Arup, for sparing time for us. A quick break, but don't go anywhere. Chartbusters starts with the Swiggy management.
Honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration.
Hello and welcome. You're watching us here on Chartbusters. I'm Mangalam Malu. With me, Nigel D'Souza joining shortly. Just keep an eye out on the markets right now. That's, the chart which is busting right now on the way down are the markets themselves. The Nifty currently below, just slightly above that 23,700 mark. after hitting levels below that 23,700 mark as well. It was led lower by the Nifty Bank, and now it's the Nifty Bank which is trying to make an up move once again. So if you pull up the intraday chart of the Nifty Bank, it's been fairly volatile. Dips have been getting bought, but with equal ferocity, those up moves have been getting sold as well. If you look at the last three moves on the Nifty Bank itself, they have been that of a sine wave, and currently we're at the top end of that sine wave, a bit of a recovery once again from the highs. The question is, where do we go from here? But the pain in the broader market stays as well, with 2,100 stocks declining for just about 278 stocks which are higher. So we'll keep an eye out on the mid and the small caps as well. It's also an important day from an IPO perspective. We have one IPO opening and two important ones listing as well. We had Swiggy, which listed at a premium to its issue price. The other one is Acme Solar, listing at a discount to its issue price. But from those levels, it has seen a bit of a recovery, but currently still holding with a cut of almost 6% as against its issue price of 289 odd rupees. Nikhil Dhingra, who's the CEO of the company, joins us to discuss the company's post-listing plans. Thanks a lot for joining in. Congratulations. It's a momentous day for your company. While the day is momentous, the big question is on your EBITDA run rate. I've been looking at, your EBITDA over the last few years that you've reported in your red herring prospectus. It has increased, and if you annualize the first quarter numbers, it comes to closer to 12 to 1300 crores this year itself. So where does that number grow, and what is a sustainable run rate quarterly for an EBITDA for the EBITDA for a business like yours?
Right. First of all, many thanks for having us on the show. So in terms of our business, we are selling power in long-term contracts to the government, 25-year PPAs we have. And of course, as you know, in a renewable power, the good thing is there is a very low operating expense because it's a small maintenance of the plant, which is a very small number. So in effect, at the project level, you get a 90% plus EBITDA. And of course, when you are having a holding company, the operator overheads reducing, you get a more than 86-87% kind of EBITDA, which is fairly predictable. And of course, across our projects, this is the number we have been doing. So, our company is an aggregate of all the projects we run. And of course, we have a large projects in terms of the last year capacity. And now this year, we have operationalized 1.8 gigawatt of capacity last month. So of course, as you know, it's a very predictable revenue, but of course it increases in a quantum manner once you operationalize a new project. And that of course a new project is a very lump sum addition. And of course, as we move forward, we have a lot of projects coming up. So each of these projects it will add the EBITDA, let's say proportionate to the capacity we are adding. And as we move forward, let's say few years ahead, 2 years ahead, the tariffs are higher because we are doing firm and dispatchable renewable energy, hybrid power projects, which have a much higher tariff than the plain solar. So you will see that these numbers will go up. It's a very simple maths in terms of the tariff, and that is all reported because the revenue is a multiplication of generation and tariff. And as you see, the EBITDA will move as per the operationalization of the project. So the focus for all of us at the company always is to get our projects operationalized in the time and cost which we have budgeted for.
All right. Hi, Nikhil. Good morning and good to see you. And you mentioned predictable a few times in there. So, you're going to be increasing capacity. I'm looking at your capacity. It appears that your capacity is going to go up by closer around at least 70-80%, right, in the next few years. I think you're talking about 6 gigawatt by December 2026. So fair to assume that the EBITDA number as well goes out proportionally, which means from around this 1100 crores, the number will look closer to around 1800 to 2000 crores. Just mathematically, is it possible?
No, actually, it's a very PPA to PPA specific number. So it will be much higher than the number you said, because this number which you said will be reached almost by the capacity we are operationalizing this year and maybe the next year. So as you know, we have around 1800 megawatt peak of operational capacity in FY24, and this year we have already energized a 1800 megawatt plant. So effectively, our capacity has got doubled this year in terms of the megawatt peak. As we are moving forward, what is happening is these PPAs are FDRE. So the effective capacity which we are seeing is 6 gigawatt is effectively much more, because to produce 1 megawatt of a FDRE project, you need to install effectively 3 megawatts. because you are giving a higher CUF, PLF in the thermal language. So basically, renewable does a CUF in solar around 30%.
Nikhil,
but FDI project,
Nikhil, Nikhil, I can sense the passion that you have built this business, which is great news, and your understanding as well as par excellence. But the stock market would like to understand some numbers. As you're explaining to us, capacities are going up. So should we assume that in FY26, the EBITDA number will be more than 2,000 crores? Is that okay to assume?
So what I can say is that FY25 will have partial capacity because the capacity got operationalized in October. So we will have you can say a 35-40% jump in FY25 in terms of the numbers, because the partial capacity is operational for the partial year. Capacity will be fully operational, but it will be operational for a partial year. As we move to FY26, we will see the full impact of the capacity which we have operationalized this year. Right, so you can say that will be the number which you are saying will be seen in, let's say, 1,700, 1,800 odd will be seen in FY26. And of course, as we move to FY27 and 28, bulk of our capacities which we have signed will come online. So we will move from, let's say, this 3.67 gigawatt peak which we have today to a much larger number, which will be more in terms of contracted capacity around 6.3, but in terms of effective capacity around 9 gigawatts. So if you want to just multiply and assume a number basis gigawatt, that will be the number to look at, 9 gigawatt odd capacity, which will be a sum total of the renewable, the solar we put, wind we put, and the batteries we put. So that's where the number in FY27 and 28 will be much higher than FY25. Of course, as we move forward, we will evaluate how to communicate the same to the market, because it's a first day for us. So of course we have the tariffs and the commissioning dates mentioned, and the CUF also mentioned in our prospectus. So it's a straight match, but the number will be quite higher than the current number once we operationalize the projects which are coming up in by December 26, which you just mentioned.
Let's keep it very simple then. Your capacity, as you pointed out, is likely to more than double, right? Assuming that the prices are, a lot different from what they are right now, and they are perhaps at a discount to what they are right now, is it fair to still assume that your EBITDA can double once your entire capacity comes on stream? Let's put it that way.
Of course. It will. What I can say is it will more than triple. It will more than triple if whatever we have contracted and whatever is in.
By FY28, EBITDA number will triple in comparison to last year.
By FY28, FY28, if you assume the same EBITDA and the tariffs we have already got, it can triple.
So 3,000 crores is what we are looking at. Very quickly, what is the updated net debt number post this? You've raised some part of money, 1,800 crores.
Sorry, it will triple from it will triple from FY25 numbers, so it will be much higher than 3,000. So it will be definitely much higher than 3,000.
All right, we'll take that point. Thanks a lot, Nikhil, for joining in. We'll obviously have a lot deeper conversation at a much later date, perhaps when you report your first quarterly results as well. For now, we'll let you, enjoy the day one of listing on the stock markets as well. Speaking about day one itself, there is a day one for another company too. We do have Swiggy. Let's move over to the other new addition to the bourses. Food delivery platform Swiggy lists on the exchanges at a 5% premium, listing at a 408 rupees. Listing at 408 rupees, a premium to its offer price. Let's listen in to the management addressing the press.
Startups, particularly in the food delivery. So, what is the company's strategy to counter this?
Actually, we're not familiar with these zero commission percentage startups. Is there any specific names that you want to talk about? ONDC is, of course, a different paradigm. If we're talking about ONDC, I think, look, as a company, every category that we operate in is incredibly dynamic. The landscape keeps changing every few months. And our job as a company is to keep making sure that the paradigm that we have is still serving consumers the best, because consumers run the business. So the moment there is an operating model that is possible to serve consumers even better, then we'll be all over it.
Mr. Macheti, the CCI is probing if the company had used exclusivity arrangements specifically in the food delivery business, and there were any violations in the competition laws. So what is Swiggy's stand on this, and how can you update on the same, and do you see any kind of an impact due to this. My second question will be, going ahead, what are the goals and plans for Instamart?
So maybe on the CCI question, I can take that. So what has come out in the media recently is just that there are certain initial observations with respect to business practices. We are not in receipt of still the detailed findings, and when we will receive them, we will appropriately look at the. So it's a very initial stage of the inquiry, but we are very confident of the business model that we have followed, that they do not contravene any of the existing laws in the country, and we're very confident on that. On coming on Instamart, I think we have talked about the industry growth rate being very, very solid or stellar for the next 3, 4, 5 years. The consumers are continuing to expand their requested selections on the platform. We see a lot of null searches for newer category, and we have continued to expand our overall range of SKUs available on the platform. Even if you look at the last 12 months, we have more than doubled our available number of categories as well as the number of SKUs available on the platform, while reducing our speed of deliveries from close to 17 minutes to 12 minutes on a national average basis. So these are solid inputs that are going into growing the category, and we will therefore continue to invest behind the growth of this category.
अनुराग जोशी स्वदेश से सीसीआई ने एक जांच शुरू की है जिसके तहत वो ये पता लगाने की कोशिश कर रहे हैं कि जो एक्सक्लूसिविटी अरेंजमेंट्स ये आपके फूड डिलीवरी बिजनेस में है, तो उसमें कोई उल्लंघन, कोई वायलेशंस हुए हैं, और उसमें कंपनी का क्या स्टैंड है, और इसके चलते कंपनी के ऑपरेशंस पे कोई इम्पैक्ट हो सकता है. और दूसरा सवाल मेरा ये है कि इंस्टामार्ट को लेकर आपके क्या गोल्स हैं, क्या उम्मीदें आप आगे बना रहे हैं इस बारे में.
तो सीसीआई के ऊपर जो एक कंप्लेन हुई थी बाय रेस्टोरेंट एसोसिएशन, एंड सीसीआई ने प्रिलिमिनरी एक फाइंडिंग और ऑब्जर्वेशंस कुछ पब्लिश किए हैं. वी आर नॉट स्टिल इन रिसीट ऑफ दी फाइनल डिटेल्ड ऑब्जर्वेशंस. तो वंस वी रिसीव देम वी आर गोइंग टू एग्जामिन कि क्या क्या उन्होंने उस ऑब्जर्वेशन में कहा है. हमारे अनुसार हमने जो कंट्रीज के लॉस है हम पूरा उनको फॉलो कर रहे हैं. हमारे जो बिजनेस प्रैक्टिसेस है, जो हम अपने रेस्टोरेंट पार्टनर्स के साथ रिलेशनशिप रखते हैं, they are in complete compliance with the laws of the country, and at appropriate time we will review them if we have to strengthen or any of that, and we are fully committed to strengthening of those.
All right, the management addressing the press post numbers, talking about the growth path for the company, etc. But we were talking about how there perhaps could be a bit of a feeling of FOMO once the stock lists at a premium, because most on the street were expecting it to be a bit of a discount, and a lot of people didn't even apply for the IPO, especially when it came to the HNI and retail. And as a result of which, we're seeing that big up move that we're seeing on Swiggy. It's interesting that, it's not the market which is taking Swiggy higher. It is Swiggy itself which is going, because the market's at the low point of trade, 172 points down on the Nifty, around that 23,700 mark. And look at Swiggy go, now 420, 430 rupees, 33 rupees higher.
Well, Mangalam, you put it beautifully, right? That JOMO has turned into, in fact, hasn't played a role. FOMO has come into play, and in fact the stock is at the high point of the day while the markets are clearly struggling. So sentiment is weak, and yet you have Swiggy that's up close to around 8.5% or thereabouts, and so many brokerage notes coming in today. But kudos to the management. In fact, for the pricing of the issue, I think, Mangalam, that is what you have to give it to them. The pricing was at a discount in comparison to Zomato, and they left some money off the table. But unfortunately, it didn't get subscribed in a big way.
The mood of the market was such. What's interesting is that for Swiggy, yes, we all know the numbers between Swiggy and Zomato. That Swiggy's margins are a lot lower than Zomato. That Swiggy's market share is lower than Zomato. That Swiggy is not doing as well as Blinkit as well when it comes to quick commerce. Yes. But all of that is at a price, right? Yes. If you can't have two companies which are in similar businesses, and almost duopoly-like situation where one of the companies has a market cap of 2,30,000 crores. Even if you give a 30, 40, 50% discount to Swiggy, it comes at around 1,15,000 crores. The offer was priced at 87,000 crores. So how much discount is too much was what the street was looking to discover once the issue opened, and that's exactly what's playing out. At 430 rupees, it's still at a 55% discount. It will obviously always trade at a discount to Zomato, but at what proportion is something that the street will discover over the next few days.
At present, at the high point of the day, up 10%. That's the stock actually of the morning, with the markets down. This one has definitely taken, has made its investors very happy. For the time being, slip into a short break. Come back, we'll focus on markets and on stock-specific action.
addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Welcome back. The Nifty Bank is now down 350 points. So that's not too comforting because in the first 45 minutes of trade, that actually was outperforming. And keep an eye out on HDFC Bank. It's very, very close to that 1,690 odd mark. The last time around it went to those levels. It did bounce off there. So that's going to be very important because that's the highest weight on the Nifty itself. But as always, let's get you a few ideas for profit in our special segment from Money Control Pro. Neha joins us to help us out with just that. Neha, take it away.
Today's stock idea is CHEMS. The mutual fund industry is going from strength to strength with asset under management crossing rupees 67 trillion as of October end. The industry saw net equity inflows of over rupees 40,000 crore. The monthly inflows through SIP also has been rising. CHEMS, which is largest registrar and transfer agent for mutual funds, is one of the key beneficiaries of this structural growth seen in the mutual fund industry. And the same was reflected in the strong earnings performance of the company in Q2 FY25. There are many business modes that the company enjoys. First, it is a market leader in the duopolistic industry with a market share of around 68% in terms of mutual fund assets serviced. Secondly, the business is highly protected from the competition as replacing the registrar and transfer agent is not easy. Third, the financial strengths of the company includes annuity-like revenue, high operating leverage, debt-free balance sheet and robust return ratios with return on equity above 40%. Moreover, CHEMS has entered into many new businesses which are at a nascent stage currently but has a huge growth potential. The non-mutual fund revenue currently contributes around 13% to the total revenue, but the share can rise in future. All these positives, however, are priced in with the stock trading at a rich valuation. The stock has rallied year to date by around more than 70% and is currently trading at around 45 times earnings estimated for FY26. Investors, however, should keep the stock on their radar and accumulate on dips as we see the stock to be a long-term compounder.
All right. Well, on that note, though, we'll have to slip into that short break. And we'll come back. We'll continue our focus on markets. But as we take that break, well, Mangalam, I think we got a programming note as well.
Yes, we do have a programming note, Nigel. As we speak, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, CNBC-TV18 Global Leadership Summit on November 14, starting 10 a.m. onwards. Power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Only on CNBC-TV18.
फिनेंस डिपार्टमेंट का, आप ही के स्टेट के फिनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है, तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और
Welcome back. Let's talk about a couple of stocks which are on our radar. Bosch opened fairly well in today's trading session, but with the weakness that we saw in the market, the stock saw a bit of a dip from the highs as well. Currently just under the flat line, still outperforming the broader markets in terms of a price move by falling not as much. Were the results as good? Sudarshan joins in with the details of that one. Sudarshan.
So Bosch for better part of the first hour of the trade was largely in the green, but now in line with market move, it has erased the opening gains and now it's down almost 2% or 2% from day's high. Talking about the numbers, operationally it was largely in line. EBITDA was up 14%, has come at rupees 560 crore versus 491 crore same quarter last year. Even margin has almost improved 100 basis points to 12.8% versus 11.9%. Even commentary post the earnings were healthy. Company expects steady growth in the passenger vehicle segment in the remaining part of the calendar year, and it expects 2025 to mirror 2024's growth trajectory in India. But on the input cost, company has flagged the caution. It says input costs so far are currently lower, but this trend is unlikely to continue in remaining part of the fiscal. So that might be one of the reasons that stock might have come off highs.
Okay, all right. Thanks a lot for that, Sudarshan. But Mangalam, tell us, every time we have the Sula management on air, they tell us about the penetration of wine is not too much. But it seems it's still there only because the volumes are not picking up for the industry. I think it's struggling and they're saying a couple of one-offs. But you need to see growth, for any company.
For the last couple of quarters, there hasn't been growth, and that's reflected in the stock price as well. From a peak, the stock has corrected a fair amount from almost 700 rupees. It's just shy of that 400 rupee mark. And the problem is that not only is the revenue weak, the outlook in the very near term is also weak. If you look at the second quarter numbers, revenue decline of 1.1%, EBITDA as a result of which down by 24%, net profit down 37%. Overall volumes declined by about 7.5%. This schism that we're talking about, premium doing a lot better than popular, is playing out here as well. Elite and premium volumes did grow 4.1%, revenues grew by 7%. But because of the weakness that we're seeing in the mass products and urban consumption, that has reduced. Wine tourism itself grew by just about 1%. The management is saying this slowdown is transitory, led by urban consumer demand and temporary disruptions in Karnataka and Delhi. What about H2 then? Seems like the soft consumer demand continues in H2. And in this quarter itself, we have the Maharashtra election. Sula's main market around Maharashtra itself should, give it some more, caution in the third quarter. And as a result of which, while they are optimistic, they're cautiously optimistic for the second half. There would be expansions that would aid further impetus to H2 FY25 performance. But I think the market that we're in right now, the street rewards outperformance more than disappointment on even subdued expectations, and as a result of which the stock is lower despite having corrected from the highs.
Indeed, Mangalam. Well put. Thanks a lot for that. Well, let's focus on the Nifty just for a brief bit. We have seen a bit of a recovery from the lows that we saw a few minutes ago. Cut its losses. Now the Nifty is down 100 points. The Nifty Bank as well, the losses have been cut by half. So there is some bottom fishing that we're seeing on select stocks. Case in point being Trent as well as Britannia. Pull up the intraday chart. Both of them from the red trend, they have moved well into the green. But time to get in Vivek, then he's joining us to help us out with KNR Constructions. Vivek, take it away.
Well, KNR Constructions optically very, very strong number, but we need to look at the internals given the fact that there has been quite a bit of a sharp reaction. Now, when you're talking about the console numbers for KNR Construction, revenues higher by almost 87%. What aided the revenues? Number one, the company has booked a whole host of write-backs as well as claim amounts in this particular quarter. EBITDA up 3.7 times, largely aided by one-off items. Margins very strong, profitability up 3x. But that was also aided by the other income component this time around at 297 crore versus 5 crore. What gives a more realistic picture is the standalone numbers. Look at the revenues. Revenues are down 6% on a year-on-year basis. Execution slightly muted over there. EBITDA at 165 crore is down 1%. Margins at 18.6 versus 17.7. So margin expansion has come in. Profitability up by almost 3.3%. Again, the other income component is aiding. Now, when you're talking about what actually aided the PAT this time around, number one, we spoke about the other income. Also, the effective tax rate for the company this time around is a lot lower. Arbitration claims, multiple arbitration claims the company has received, and that has also aided the earnings this time around. Order book continues to remain quite strong and steady. Roads order book at close to 2,310 crore. Irrigation and pipeline sector at 2,100 crore. So net, it's a strong set of numbers optically, but of course, when you're talking about the order book, it is strong. The standalone pictures depict a more realistic picture of how the quarter went by as far as KNR is concerned.
10% up move in an otherwise very weak market. Vivek, thanks a lot for that. So that's about KNR Construction. What we'll do is with that, we'll wrap up on this edition of Chartbusters with the news that the Nifty is still fairly volatile after recovering. It has seen a bit of a smidge from the top, about 15-20 odd points. We'll keep an eye out on that. The three stocks to note. First one is Eicher Motors at the low point of trade, seeing a fair amount of sell-off. The other two were the ones that, Sudarshan called out in the morning as short calls as well. HDFC Bank, the fair weight on the index, currently at the low point of trade. And we also have Apollo Hospitals, which has seen a sharp slide from the highs, currently at the low point of trade as well. Though there is a bit of an attempt of recovery from HDFC Bank. Let's see where that goes. We wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। FRBM जो है वो 3% से नीचे है। ये
आरबीआई डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट,
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी और ये वेलफेयर स्कीम गाडली महीने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आप 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे।
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me today is Harmas Patakia. Well, it's one of those days, right, where there's a lot of volatility, there's a lot of pressure that we are seeing on the benchmarks and especially on the broader markets as well. we did see a sharp fall from the highs. Then there was a recovery as well. Right now, the Nifty is down 140 points, but it did fall below the 23,700 mark as well. We have the mid caps with us sitting with cuts of around 760 points. At a point in time, we saw a 1,000-point cut almost on the mid cap index. The advanced decline ratio comfortably in the favor of declines, 1:8. That's the kind of market breadth that you're looking at. And be it good results or bad results, largely we're seeing that gap widening by the minute on the mid-cap index, and very few sectoral gainers as well that we have today. I would say actually none of them. All of them are in the red today, Hormaz, be it financials, be it the banking index, Nifty Realty, Nifty Auto. Auto index has also fallen around 20% from the highs. So a lot of profit booking, and everyone's been talking about valuations as a concern and calling it a much needed correction.
Much needed correction, and in a very, very choppy market, isn't it? You see, it's a blink and you miss market. You see the Nifty down 400 points at one point of time, you come back 5 minutes later and it's down 200 points. So that's the kind of market that you are in. But yes, it's been that kind of a market. 23,650 is that level to watch out for on the downside for the Nifty. That will mean a 10% correction for the index from its record highs on the 27th of September. And that would also mean that is the key support level as well that Jay Bala was also highlighting in the closing session, in the closing trade yesterday. But the small cap index is the one that I wanted to highlight though. 9%, almost down 10% now from its record highs. Mind you, the small cap index made a record high much before the Nifty did. It was on the September the 6th is when the small cap index had made a record high, and since then it's down nearly 10%. Almost half the index is down 10%. 20 stocks are down over 20%. So nearly 3/4 of the index has already seen double-digit losses from that period. But there are some stocks that have held on to gains during this period from the 6th of September till date. And some of them that I wanted to highlight, Amber is one, Nalco, Keynes Tech, Piramal Pharma and MCX. They've seen gains of anywhere between 15 to 35% during these last 2 months when the small cap index has been in correction mode. But the common factor between all of these is all of them have had very good results during the quarter. In a quarter that has otherwise been a disappointment, most of these companies have had good results. Take a look at Amber, an 82% revenue growth, 90% EBITDA growth. Same for Nalco, revenues were down but EBITDA was up 60%. There was a very sharp margin expansion as well for Nalco. Keynes Tech, or 58% revenue growth and a 70% growth in its EBITDA. So good results have been rewarded. The stocks have held on to the gains, but there's been an equally extreme reaction on the flip side as well.
We have seen sharper falls for bad results, even for Nifty companies for that matter, right?
The Nifty company is more pronounced as well, right? Be it Bajaj, Maruti. So all of them have seen a very, very sharp correction. There's been an extreme reaction to most of the results, be it good or be it bad. But corporate conversations, and we'll be the ones heading to the primary markets first. It's a day of listings. It's a day of IPO announcements as well. And the 1115 crore rupee IPO of Zinka Logistics has opened today for subscription, with the price band being set at 259 to 273 rupees a share. It's a fresh issue of 550 crores and OFS of 565 crores as well. Now, to discuss their growth plans going ahead, we are now being joined by the company's CFO, Satyakam Nayak, to discuss the road ahead for the company. Satyakam, good morning. Thank you so much for joining in. And firstly, congratulations on the IPO. Basic question first up, could you please explain to our viewers your business model and how exactly do you as a company make money?
Sure. So think about trucking, you think about Black Buck. So the truck operator in the country, if you look at it, he is typically middle-aged, generally not so digitally savvy, works in the hinterlands, largely inefficient. I think where Black Buck comes in is to empower this truck operator to grow his business, to manage his business, make his business more efficient. So this is where Black Buck comes in. There are 4 areas in which we help him. One is on payments, where we help him with tolling, fueling. Second is telematics. It's all about gaining control over his vehicle and his driver through GPS, vehicle tracking, fuel sensor, etc. Further, you know that broadly 15 to 20 days in a month, he keeps looking for loads, right? So we have a loads marketplace where he can get loads from anywhere in the country. And vehicle financing, large part of used vehicle financing today is still informal. So we are trying to organize that by working on generating loans for our partner banks and NBFCs. This is broadly the gamut of services that we provide, focused on the Indian truck operator.
Okay. So Satyakam, so basically the truck operators are your main customers, so to say. You said you help them in 4 ways. So can you give us a sense of what your take rates are across your services, be it fueling, tolling, and the other segments as well that you spoke about?
Sure. So each of these service lines have different revenue streams. The revenue streams for each of these services are in the form of subscription revenues, and in the form of service fees, and in the form of commission rates from partners. So this is the way we earn revenue across all these 4 sectors.
Okay. And how do you split the proportion? How much comes from financing? How much comes from tolling, fueling maybe?
The core of the business today, because of the tenuity, is the payments and telematics business. These are the businesses which are growing, which are kind of entrance to the market. There are strong growth businesses. The strong growth businesses are the loads marketplace and the vehicle financing business.
Right. Satyakam, I wanted to ask you that despite a higher contribution margin that the company has and a large market share that you have in the industry, you guys are still loss-making on an EBITDA front, and operating cash flow is also negative. Your profitability that also came in the first quarter was also aided by an exceptional gain. What would you attribute that to? And not asking you for a specific number, but do you have a timeline as to when do you turn profitable, A, on an EBITDA level as well as on a profit level?
Yeah. So if two things. One, in Q1 25, which is this quarter, we have turned profitable at a PAT level. Even if you exclude the exceptional item of 25 crores, there's a 3 crore PAT. But more importantly, if you look at adjusted EBITDA, which is a metric, which is an important metric for us, because below that there's just ESOP cost and depreciation. That adjusted EBITDA has kind of turned a corner almost 8 quarters back. And it is continuously kind of accelerating. So that's a good kind of trend line to measure. And obviously, because the acquisitions have gone up strongly over the last 2 to 3 years, and our business is one where we acquire customers and they stay for life, and they continue to add lifetime value to they continue to accrue lifetime value. Hence, because of those acquisitions, there were losses. But as we move forward, the revenues is strongly compounding, and that's translating into EBITDA as well.
Okay, so let's get in Rajesh Yabaji as well. He's the CMD and CEO of the company. Rajesh, in that case, what do you intend to do with the money raised? You spoke about how at an adjusted EBITDA level you're positive, but if you look at the bottom line, it continues to be a net loss, right? So will you be able to turn EBITDA positive and net profit with the money that you've raised?
Yeah, I mean, just iterating what Satyakam just said, the company has, even without the exceptional item, has made profit in the first quarter at a PAT level. And, the trajectory is already there, point number one. Point number two, because of the nature of the business, where, most of the revenue comes from technology fee income, which is subscription in nature and recurring in nature, you can see that in FY24 itself, our free cash flows were positive. We made about close to 45 crores of free cash flows, and our adjusted EBITDA broadly will start, broadly mimics the free cash flow in the quarter as well. And that's something which you can already infer from the RHP, right? The money we've raised, is towards largely continuing to doubling down on user acquisition, which is sales and marketing costs, which we incur year on year. And broadly, they will be in the similar ranges to expect as we move forward in the future as well. And the second biggest area is that for the truck operators, we continue to innovate and continue to invest money in product development and research. So to the technology platform which we are building, the new offerings which we are creating, that's the second biggest area where the money will go into. And then the third area, which is the smaller area, is the financing arm of the company, where largely financing we do a more platform fee and a technology fee business, but largely for new product development and new partner development, we've earmarked some amount of funds for the life cycle of the company for the NBFC. I think that's the broad usage of funds. But chiming in again, last year we were free cash flow positive. We made close to about 45 crores of free cash flows. This broadly our adjusted EBITDA mimics also the cash flows which we as a company generate. So, and also, the money raised will cement the company's position, as a market leader in the times to come.
Okay, just a follow up on that. So how many paying, or I would say transacting truck operators do you have right now on your app? What are the downloads like? And all the money that you raise will be used for marketing and for the technology purposes that you just spoke about?
Yes. So majority of the money is going to be used for those purposes. As you rightly said, I think more than about close to 70 to 80% will be used for those purposes. Point number one. Point number two, as a company, Satya would have introduced, we are India's largest digital platform for truck operators. As a country, we have got about 35 lakh truck operators in the market who own about 1.25 crore trucks. Out of these 35 lakh truck operators in India, as a company, last financial year, close to 10 lakh truck operators transacted with BlackBuck in any one of the services which we provided. And this number is very strong. This number over the last 2 years has doubled, and continues to grow, right? And each of these services are at varied degrees of penetration. The entire game plan of the company has always been that how do we penetrate deep into every village, every trucking specific and trucking relevant village in the country, get the truck operators, trust us, trust technology, trust methods of going, the online methods to do business. And once, they become our customers, it becomes sort of a gateway towards distributing and, selling more products. So our first foray was into payments, which took as a company 3 years for us to achieve 1 lakh users. Then we launched telematics. As a company, we took about 22 months to get to 1 lakh users. When we launched our loads product, it took close to about 9 months. So basically, our ability to distribute products has gotten better and better. And as a result of the investments in sales and distribution and servicing, which we have conducted over the past 3-4 years, as a company, this is how we've sort of, continued to, grow. As I mentioned, strategy A is to go and be with every truck operator with any one of the service and continue to distribute and sell new services incrementally over the life cycle of the customer.
Right.
Okay.
All right, Satyakam and Rajesh, thank you so much for sparing time and joining us. Wish you good luck for your IPO and looking forward to conversing with you on your listing as well. That was the management of Zinka Logistics. The IPO opened for subscription. Time for a short break. Get you more on the markets on the other side. We'll be joined by Vishal Goyal, the head of research of UBS Securities, and Tanvi Gupta Jain, the chief India economist at UBS Securities, to discuss India's macro picture and the global economy as well. Stay tuned.
ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा,
अभी
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
investing.
Welcome back onto our coverage of the UBS conference as well. We are now being joined by Vishal Goyal, the head of research, and Tanvi Gupta Jain, the chief India economist at UBS Securities. Vishal, Tanvi, good morning. Thank you so much for joining in. I'd like to start off with asking you, Vishal, the market correction that we are in currently. You know, the broader markets and the Nifty currently are almost down a similar quantum from their respective peaks, right? Around 10% each. But when the large cap index corrects to that an extent, you would assume that the mid cap index would, or broader markets would see a much sharper fall. For a better part of the last month, the mid-cap index were fairly resilient, and only now they are facing that selling pressure. You know, what would you attribute that to, one? And do you see a much sharper correction in the broader markets now so that it can play a catch-up with the fall that you've seen in the benchmark index?
Hi, Omar. I think that expertise is anyways with Sunil Tirumalai, who is our India strategist. But I think I'll share my views here. I guess, Sunil has been highlighting that Indian market is expensive, especially in the context of emerging markets. And as we see things, at global geopolitical stage, plus global volatility has increased, I think that also brings again focus back on valuations for India. In terms of key sectors, if you look at, there are sectors who are, at life high or 5-year high valuations, and there are sectors which are trading below averages. And so to that extent, I think that dispersion in performance, I think would continue. We would see some catch up in sectors where the valuations are more reasonable compared to segments where valuations are rich, and we are seeing some earnings disappointments coming through.
Okay, all right. So the earnings disappointment is something that the street doesn't seem to like. Let's get in Tanvi in the conversation as well. Tanvi, the big data that we got yesterday, the CPI figure above that 6% mark, was it something which was penciled in by the street already? What surprised you this time? And what does it mean for the RBI action going forward? Because that's everything that somebody wants to know now.
Absolutely. So if you look at the CPI inflation, number was 6.2. We were expecting 5.9. So definitely even higher than our consensus expectation. But if I look at the data, I realize bulk of it was only on account of higher vegetable prices and gold. If you look at the cyclical food price component, it almost accounts for the bulk of the increase in CPI headline inflation, which is more transitory in nature. So I would expect the vegetable prices to start softening from the month of November. But very interesting, I tried to look at the retail data for the month of November for key vegetable crops, at least what is available in terms of retail prices. While I could see a very sharp correction in the prices of tomatoes, which is almost down 25% month to date, I could see that the prices of onions and potatoes are still elevated. So what we are seeing this time around is a much higher trend in vegetable prices. I mean, last 10 years, month-on-month momentum in the month of October used to be 4%. This time it is more than 8%. But I would say this is mostly transitory in nature. If I look at how my forecast for CPI inflation will pan out, because that will have implications on RBI's policy outlook, we are estimating CPI inflation to soften towards 4.5% and 5% in the rest of FY25. From a rate cut expectation, I think RBI is facing a very challenging task. We are seeing growth softening concerns, even though RBI is still maintaining 7.2% real GDP growth forecast as of its last policy. Inflation risks have come up, but that looks like more cyclical in nature. At the same time, the currency has weakened because of a stronger USD. So I would say net-net, we are still retaining our baseline forecast that there are 75 basis point rate cut expectation likely from early 2025. I think the timing will be a lot more data dependent, and we definitely have to see that the inflation momentum is more towards 4.5% going forward.
Would it be fair to assume, Tanvi, that a February rate cut is off the table?
I would say a December rate cut is clearly off the table. I would not really say that Feb rate cut is off the table because cyclical component, as I was mentioning, they go up very fast. They actually come down also equally fast. So I would hope that the fresh crop arrival, once it starts hitting the market from the last week of November, should start cool off the prices from the month of December onwards more meaningfully, which may not be visible so much in the month of November. So I will still have a higher probability of a rate cut cycle to start from Feb, but let's wait. We'll watch out for more data.
Okay, all right. So Vishal, comment on this. What does it mean for the banking space? Of course, December rate cut is ruled out. We'll have to see how RBI goes ahead with any rate cuts, only basis data that we have been getting, the macro data. How are you looking at the entire banking space, quarter two? What stood out for you in terms of numbers?
Sure. I think, see, on banking, we've been having a neutral kind of a view, partly because of the growth slowdown. This was largely driven by unsecured lending slowing down, plus also the constraint on deposit growth. The deposit growth has not been great, and banks trying to bring down LDR was also bringing down overall loan growth. So that was on the growth side. In terms of outlook for margins, the longer RBI takes to cut rates, I think it is good from a margin point of view in the very near term. So maybe we don't need to cut margins as much because if the rate cuts get delayed, banks don't necessarily pass through their EBLR rate cuts. But I think the third pillar, which is asset quality, and that's where I think again we've been highlighting the pressure point building up since last 1 year. There are views on asset quality that things could be peaking here, which we don't agree with. We think the retail NPL cycle, especially the unsecured one, it has just begun. We would see credit costs going up even from here, and to that extent I think consensus will have to cut earnings for banks in general and especially for weaker banks and NBFC segment.
So what about the overall earnings picture, Vishal? Because the quarter, if you can stick your neck out and say, was rather disappointing compared to estimates. Even the first quarter was equally muted. What does that do to the second half and the full year estimates as well when it comes to earnings and as a result the market? Because a bigger factor for the market correction has also been these disappointing earnings.
Yeah, that's true. That's true. So I think that has triggered, some of this rich valuation to come off. And I'm not talking about banking. I think in banks, while the valuations have been reasonable, it's just that the top line growth has been decelerating. Plus the asset quality pressure started building up, which kind of capped the re-rating which you could have seen in the banking sector overall. And when we think about earnings cut, you're right. I think for financials, I can see that banks will not re-rate from here, and therefore we should stick to banks who have higher compounding, higher ROEs. NBFCs where the risks of unsecured credit is high, we would avoid those because we would see a de-rating, especially driven by more earnings cut in that segment.
Okay. All right, take that point, Vishal and Tanvi. Thank you so much for joining in today and giving us your insights, especially after that big CPI number and what's happening in the markets recently as well. Good to get your expertise on the fundamentals of the markets as well. Well, it's time for a short break. On the other side, we'll be joined by the management of BLS International to discuss the company's performance in the quarter gone by. Stay tuned. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Let's go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Okay, the markets are near the day's low again, testing that 23,700 mark. Some more pressure on the mid-cap index is what we are seeing right now. It's a 1,000-point cut on the mid-caps right now. When we started the show, it was down around 700, 800 points. So watch out for that one, as the advanced decline ratio, it's getting more tilted towards declines as we speak. But let's get another corporate conversation going. Tata Communications is on our radar now. The company aims to achieve margins of 23 to 25% by FY27, says Lakshmi Narayanan, the MD, and A.S. Lakshmi Narayanan, the MD and CEO of the company, in a chat with our colleague Reema Tendulkar. Listen into the company's growth plans, targets for digital business and more.
There are many aspects when we put out our aspiration. I said who we were and who we are now and what we want to become. There is a marked difference in what I smell and sense internally in the company, and also what I see and feel when the customers talk to us. We definitely believe our relevance to our customers has greatly improved. I'm able to have a very meaningful conversation, not just with the CIO, but even the CEO, to say that with our digital fabric, we're not only helping you to uncomplicate, but they're also seeing the possibility of being able to innovate with our digital fabric, right? So our relevance has increased significantly with those customers. That to me is the biggest marker and biggest mark of success, and then everything else will follow. And with that ambition, we said that, hey, we are more relevant. We want to become even more relevant in the digital world, and therefore we should set a target to say that we're going to double our revenues. So it is an aspirational target. It is an aggressive target. We are, moving towards a target.
What would be the annualized data revenue today?
We are close to 20,000.
Okay.
Yeah.
And you want to hit 28,000?
We want to hit 28,000.
It's aggressive, according to you?
It is aggressive. But hey, that's what we love about this, to say, can we hit the target? Because we, and I certainly believe, this company has the potential and the capabilities to be able to go after aggressive targets.
Even your margin aspiration, 23 to 25%, you're currently at 20%. You've said you will achieve it over the medium term. Here you've not put a concrete timeline. Would you like to do that? And why are you not saying it's achievable, say, when you hit data revenues of 28,000?
Yeah, I think that's a marker we have talked about it. By 27, we want to be in the ranges that we talked about,
23
of 23 to 25%, and hit the ROCE of upwards of 27%. I think we went through the phases of shoring up our balance sheet, getting our basics right for the company. And once we had that, we went into an investment mode. Investment mode that was both organic. We hired a lot to build a software layer. It wouldn't be possible without the investments. We did that. We also did some inorganic investment that we brought those capabilities. So we went on to the investment mode in 2024, in FY24. And that investment, we were deliberately calling out. As a result of that investment, you will see a dip in all these matrices. But we said that our trajectory is in such a way that we want to hit that numbers. We will get to the 23 to 25%. There are multiple levers that we have to play with, and one other important factor in this is, our revenues are the data revenues. If you see, one is all the core connectivity, which has got high capex, high margins, right? Which is all connecting to the data centers, which is the big pipes that we do. That's high capex and high EBITDA as well. And that was a very major part of our revenues. As part of these aspirations, we said that our digital revenues need to be 50%. We are close to that. When we are at 28,000 crores, we'll be closer to 60%. Right? Now, our digital portfolio is today not EBITDA positive in the whole. We have all these 4 fabrics. Some of the fabrics are positive, some of the fabrics aren't, because they are also into the investment mode. So look at any of these fabrics. Our whole cloud and security fabric is, would be about 150 odd million. Our next generation connectivity would be would be closer to 100. So all of them are at sort of 100 million ARR, barring the interaction fabric with Kalera, which we acquired. That will be upwards of 400 million ARR. So none of these in the digital portfolio are EBITDA positive today, which has got the effect of these are growing faster than the core connectivity. So you can see the mix playing the effect of dragging. But all of these have got what we call as a glide path.
So what's the glide path for consolidated margins for the digital portfolio when you hit 60% of your overall revenues by FY20?
We haven't called out the split. We are calling out in the aggregate, we will be at 23 to 25%, right? So
today it's negative, as you said.
Today it's negative. So we need to, so we will get to the positive territory. And
by?
We'll get to the positive territory in a year's time.
So where do you think digital margins will be by FY27?
We are working through those numbers. There are many moving parts, but I want to first get it to a decent single-digit number. Then we will be in a very healthy space.
So when digital margins get to single digits, healthy single digits, you will achieve consolidated margins of 23-25%.
Yeah.
That's the math behind it.
That's the math behind it.
What about more M&A? Switch is done, Kalera is done. Kalera is doing well, $400 million of an ARR, as you pointed out. Are you looking at big ticket M&As, a third one?
So we are, we have a team that we are constantly looking at the opportunities. Most of the company's focus is organically build and organically grow. But there are opportunities that we would be actively looking for. And we have the appetite to do that now that, as you say, we have done 2. We still have the process of turning them around. We are very confident of turning them around, but we would be scouting for more.
But your leverage went up after these 2 acquisitions to 2.2, 2.3. So does the balance sheet support a big, your appetite may be there, but does the balance sheet support a big M&A?
So, I'm not saying all of that needs to happen right away. There are different funding options available for us.
Like? You spoke about the Chennai land sale.
Yes. Yeah.
So that should conclude by this year.
Yes, it will. And I think we announced it as well. It's in the public, right? So we already announced that that sale is on the cards. So there is land banks. There are other subsidiaries that we have. And there are options.
Can you elaborate a little bit more about the land bank, the total value as things stand today, and even the subsidiaries?
No, I think the land banks I've mentioned before. I think there are, we carry a certain book value. We believe the market value is much, much greater. But
What's
we
the
have
number?
it actually depends, because a certain land, its value will tremendously go up if the type of usage that it can be put to is different. And we are at the moment somewhat constrained by the usage based on the title and the purpose for which we bought it, right? So all of that we need to work through. And once we work through that, we can get the right value. And we are a company which is invested in a data center business with a joint venture partnership with STT. We have a 26% stake there, and that's a growing business. Indian market is today, very hot with data centers. So there are, options, and of course, we can of course go and raise fund from the market, not necessarily monetizing these assets, but we can raise. So if there is a right opportunity, all I'm saying is if you find the right opportunity, I don't think funding is necessarily the constraint.
Isn't M&A critical to you achieving your FY27 goals?
That's not the way I look at it. No, that's not.
So it's not critical.
It's not. No, it's not critical. So my goal is not by hook or crook hit the numbers, right? That's not the purpose. We have
the capability.
We have to build the capability to set the company in a very solid foundation for a sustainable growth in the long term.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most...
Welcome back, and the Nifty continues to remain around that 23,700 mark near the lowest point of the day. But pull up some earnings reactions first up. Sula Vineyards is one of them. It's down 6%, but the bigger takeaway from that is the fact that the stock is down 45% from the record high of 699 that the stock had made. It's now down to 390, very, very close to its IPO price now of 357. We keep an eye out on Sula Vineyards. Also pull up Garden Reach. That stock is down 5%. One of the final companies to report results today. and will also conclude the shipbuilding results for the quarter, and also pull up stocks like Piramal Pharma, that is one that is holding out to gains in an otherwise weak market, and Suzlon, of course, is down 6% and has corrected significantly from its record highs of 86. But the bigger news of the day is the listing of Swiggy that happened at a 5% premium. It was a very volatile listing. It almost gave up those gains and also gained almost 10% at one point of time. Mangalam is here to get us those details. Mangalam.
Well, you know, Swiggy, irrespective of the early volatility, it'll go down as a good listing. Why do I say that? Because one, most on the street were anticipating a tepid listing. So to that extent, just a positive listing itself was good enough for the stock to, you know, incite some fear of missing out among a lot of people. And that plate on the screen is a teller of that. 0.41% subscribed, or 0.41 times subscribed by the HNIs. Retail just about, managed to subscribe to their issue. It was an issue which was led by the qualified institutional buyers itself, and as a result of which it just managed about 3.5 times total subscription. So one would call it, in this age, a tepid subscription to that. And given the weakness in the market, there was expectation that it will open lower, but no, instead it has opened higher. Why is that? Well, because as a business, you know that Swiggy and Zomato are comparable on a lot of parameters. Swiggy is much lower than Zomato as well. That was understood by the street. So to that extent, the only question then was, at what discount to Zomato does Swiggy settle in? At the issue price of 390 rupees, it was offered at a 60% discount, and thereafter, now currently, the stock is trading at around a 55% discount to Zomato. Going forward, what will be interesting is to see whether the company goes ahead and lives up to the commentary that the management had promised during the IPO itself, which is that of opening 1,500 dark stores over the next 4 to 6 quarters, that leading to growth in their quick commerce business. And the second one is the food delivery EBITDA margins, which currently are just shy of 1%. The industry can perhaps sustain at around 5%. By when does the company get there? So those factors are things that we'll be watching out for. As of now, the stock was offered at a much larger discount to Zomato than what the street was anticipating, and currently it is narrowing that gap with Zomato when it comes to valuation. This morning, interestingly, we had a report coming in from Macquarie as well. They have an underperform rating on both Zomato as well as Swiggy, but as per their own calculations and target price as well, they valued Swiggy at a 37% discount to Zomato, which it currently trades at around 40-45%.
Okay, 14% higher on Swiggy as we speak. Thank you so much, Mangalam, for joining in with all those important details. Let's move forward. I'm looking at Reliance Industries because there is an interesting report which is coming from CLSA, where they title the report as Buy Right and Sit Tight. Remember, Reliance Industries has seen a sharp fall from the highs, and now they say it is a good time to look at the stock. There is, of course, excitement that we've seen in the recent past for a lot of these Indian solar PV manufacturers, and they say that even Reliance Industries has that big opportunity, which the street is not factoring in right now, because they will be launching that solar PV gigafactory. They value Reliance's solar business as $30 billion. The overall new energy business, which has other things as well, green hydrogen, electrolyzers, totaling all of that, it's around $43 billion. And this is something which is not considered in their target price right now. They say it assumes a nil value for new energy. It is a conservative valuation that they're looking at right now. But they say this is an attractive opportunity to play triggers through 2025 after 3 to 4 months of lull that we've seen in the business. So what would those triggers be? The first one would be retail recovery. Retail will continue to see slower growth, but there will be a recovery in 2025. Ramp up of air fiber subscribers, and a potential listing of the Geo business. That is something that the investors could play on with Reliance Industries stock. This is something which is likely in 2025. They maintain an outperform rating with a target price of 1650. They say the 1650 doesn't have the new energy valuation, so there is more upside that they're expecting here.
Music to the bulls of all the Reliance Industries bulls, right? The stock is down 20% from its peak of around 1600 rupees that the stock had seen, and a key contributor as well to the market correction that we've seen. Time for a short break. Then the management of BLS International on the other side.
Next, US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Welcome back. In conversation now with the management of BLS International that reported a very sharp expansion in margins for the second quarter. Revenue growth has been flattish though on a quarter-on-quarter basis, both in visa services and the digital services business. To discuss more on the quarter gone by and the road ahead, we are being joined by Shikhar Agarwal, who is the Joint Managing Director at BLS International. Shikhar, good morning. Thank you so much for joining in. I wanted to start off by asking you about the visa revenue growth, which was around 30% on a year-on-year basis, and this despite volume growth and net revenue per application being in excess of 40%. So what kept the revenue growth in check during the quarter, and what's the picture that you're seeing for the second half of the year?
No, if you see overall the revenue, on the quarter has grown 21% compared to last quarter, last year. And the visa revenue has already grown more than that. The volume, of growth of visa applications has been 40%. And we've also seen revenue growth in that. Quarter two normally is a little subdued. Quarter one and quarter four is the highest in terms of revenue for us. But still, if you see on a year-on-year basis, we have done a 21% hike in revenue and around a 90% hike in EBITDA. And the margins have also expanded to 33%. So we feel that we can maintain these margin levels now.
So you will be able to maintain margins at these levels at 33%, and revenue growth, what does it look like in the next half? Will you be able to do 20% or better than that?
See, definitely, if you see in the last 5 years, we've done more than 70% of CAGR growth. And this quarter also, if you compare the EBITDA levels and PAT level, we have grown more than 70-80%. Revenue has grown by 21%. I think we expect to maintain that levels. Also, we have done a couple of acquisitions, as you know. The merger of iData has already happened in this quarter. We have seen 60 crores of revenue of iData come in. That too only on not full quarter working, because we acquired the company on 10th of July. So those revenues will fully come in the next quarter. Also, the company Citizenship Invest that we completed the acquisition in October. So those revenues should also come in. So definitely we will see good revenue growth both from organic and these inorganic opportunities that we have done.
Excluding iData, what would be the visa revenue growth, Shikhar, for the quarter? And part two of my question is, you've moved from that transition from the partner-run centers to the self-managed ones that you guys have done. Now, how many of them do you have currently? How many of them are partner-run? What's the mix here? Or have you moved completely to the self-run base?
See, the volume growth from the organic business was 18%. So overall, we had a 40% increase in visa volumes. This quarter, we did 10.1 lakh of visa volumes compared to around 7 point something lakh in the last year. From iData, 1.6 lakh volume was added. So 8.5 lakh we did organically. So there was an 18% growth in terms of organic volume. Also, we have majority of our centers are fully owned and operated by us. So I would say more than 70-80% are being operated by us. There are still certain geographies across the world where we are evaluating that where we could shift, where the law of the land allows to shift to 100% owned entity. We are evaluating that. So that could also take place in the near future. But the margins, I think we grew from 21% to 27% and now 33%. So we first want to maintain and consolidate at this level. So we want to first maintain this levels of margin.
Okay, all right. This is about the visa business and how that is shaping up. But the digital business that has been struggling in terms of revenue growth. The revenues are down 1% sequentially. It's down 6% on a YY basis. What's happening here? What's the outlook?
See, even in the digital business, we have actually seen organic growth. One of the contracts that got completed last year, we did not renew that contract. So revenue from that contract did not come in this quarter. In spite of that, if you see, our other businesses have made up for that. So we have actually seen growth in our banking correspondent and our e-governance business in different parts of India. So we definitely see a good future in our digital business. We've also announced some acquisition of a company called Ardifilis, which is a loan distribution company that the transaction should get completed within this month. So that will also add to the revenue and profitability of the company. But we are bidding for multiple tenders in e-governance, and our reach with business correspondence has also increased to more than 30,000 BC centers with more than 1 lakh touch points across India. So this company is fairly new, 5-year-old company, but we see good growth coming in the coming quarters and coming years, and even in digital business.
Right. What's the cash on the books currently, Shikhar? And you said that you have recently announced an acquisition. Is there more in the pipeline?
So currently, as of September, 6 months ended, we have around 900 crores of cash on the books. That is post iData payout that we've already done. So as you know, we are a negative working capital cash generating company. And this another acquisition of Ardifilis Loan Solutions, definitely that cash still needs to be paid out. So once that is done, we first want to consolidate all our acquisitions. We've already started, combining some centers with iData across geographies. Our costs have started to come down. Margins in those countries have started to go up. So we first want to consolidate, and then definitely, we are looking, as we grow as a company, we are constantly looking how to best utilize the cash on the books. Since we are a negative working capital company, we have a good dividend policy, and we are also looking at more inorganic opportunities that can, value add to our existing business.
All right, so we'll watch out for those opportunities that you lap onto, Shikhar, and have a conversation later. But thank you so much for joining in today and talking about Q2 numbers and the way forward. That's the word coming in from BLS International, looking at EBITDA margins of 33% and will be able to maintain that growth level of 21 to 22%. With that, we'll slip into a short break. When we come back, we'll talk about markets and a lot more. Stay tuned.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है, और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है, और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। FRBM जो है वो 3% से नीचे है। ये
RBI डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। RBI
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट।
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो RBI की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, FDI का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से
Back with us here on Trading Hour. The Nifty continues to remain near the lowest point of the day. The broader markets, though, the mid-cap index is back with losses of around 1,000 points as we speak. Bharti Hexacom is one of the stocks that is bucking the trend. One of the few gainers on the mid-cap index, is up around 4% at the highest point of the day, as is Piramal Pharma is building on to gains now, trading with gains of almost 7%. The top gainer on the small-cap index is Piramal Pharma, and also pull up Manappuram Finance. That stock is one of the few gainers in today's trading session, trading with gains of close to 3%. But mind you, the stock is in the F&O ban, so no new positions can be created. But with that, it's a wrap on this edition of Trading Hour. We leave the markets at the lowest point of the day. Halftime report comes up next from Sonal, me, and the team that put this show together. Thank you so much for watching.
बंद नहीं होने देंगे, बंद नहीं होगी, और ये वेलफेयर स्कीम गाटली महीने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है, वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा,
अभी
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
A surge in domestic inflation pushes back expectations of a rate cut in India, even as a surge in bond yields in the US stymies the Trump 2.0 rally. Realty, auto and industrials are the big drags, even as utilities manage some green.
Swiggy lists at a premium to its offer price of 390 rupees, delivering gains to IPO investors after not so strong subscription. Analysts, however, remain divided on the potential for gains from investing in the stock.
NTPC Green will launch its 10,000 crore IPO with an offer of shares in a 102 to 108 rupees band on November 19th. The offering will be the third largest IPO of the year after Hyundai and Swiggy.
Trump picks Elon Musk and Vivek Ramaswamy to lead the Department of Government Efficiency to drive efficiency in the government. But unlike the name suggests, the body will not be a government entity. Dogecoin jumps.
October CPI inflation comes in at a 14-month high of 6.2, pulled up largely by vegetables. Yields inch up a tad as hope of rate cuts and even some dovishness in the December vanish. Rupee takes a breather from its relentless fall since Trump's victory. Hello and welcome to Halftime Report. I'm Vivek Iyer and with me today is Mangalam Malu. Mangalam, it's been an action-packed session, but the main headline is the fact is that markets continue to see quite a bit of selling pressure. The line in the sand that we were discussing in the morning was 23,800, but that's been given up. Markets bounced back briefly twice from those levels, but even despite that, you're seeing quite a bit of selling pressure. Nifty just holding on to the 23,700 mark. Broad end of the market is the Nifty Cap Index, Small Cap Index and the Nifty Bank. As you can see at the top of your screen, all of them too are seeing significant selling pressure.
It's a relentless sell-off that we're seeing in the frontline indices. You know, what's actually interesting is the way the Nifty Bank has underperformed. You know, most part of today's trading session, if you pull up both the Nifty as well as the Nifty Bank charts right on your screen, you would see that the Nifty Bank was attempting to outperform and support the frontline index, but now that too has thrown in the towel. The Nifty Bank is now down almost 0.9%, with the Nifty down about 0.7%. For most part of today's first half of trade, the Nifty Bank was outperforming the Nifty, and now it's underperforming that. And the pain in the broader market, you know, the more we speak about it, the less it is, because we have now 2,100 stocks on the NSE which are in the red, for about 300 which are in the green. So we'll keep an eye out on those crisscross lines which are neither crissing nor crossing. A wide gap between the red and the green lines is what we'll see today. But amidst all of those stocks, the one that really stands out, and it's perhaps the story of the day on account of the listing, is Swiggy. You have to give it to the pricing of the company at a steep discount to Zomato. The street thought that maybe, because of the tepid listing and the tepid, subscription and the market scenario itself, there could be a bit of a discount, but no. Right. What this stock has done is it's opened in the green, and from there on itself, because of its lack of subscription, there is a case for FOMO, and a lot of investors now perhaps getting in. The gap between Zomato and Swiggy right now is at around 55% when it comes to the market cap itself. So that's something we will most definitely closely monitor. Given the metrics, obviously Swiggy has to trade at a discount to Zomato, but at what is the discount is something that we'll always keep watching out for as the water finds its own level. Most important part, the investors who are making money on Swiggy right now, one of them is Accel. Accel started accumulating Swiggy shares from 2015 itself, and their weighted average acquisition price is close to around 11.17 rupees per share. In the IPO, the offer for sale, they offloaded about 1.05 crore shares at a price of 390, which was the issue price itself, sitting on a fair amount of gains. The question again, when it comes to growth expectations from Swiggy, what as per them is the fair value and the discount that it should be trading at versus Zomato. We have the man himself, Anand Daniel, partner at Accel, joins us now. Just to give you a perspective, they sold about 1.05 crore shares, which is about 0.5% equity, but as per their current shareholding, they still have about 5.5% stake in the company. Anand, congratulations on this stellar investment for you and a great exit for just a little bit of the overall holdings that you have in Swiggy as well. Over 30 times the gains that you've made. Just wanted to understand, what as per you should be the fair value of Swiggy as compared to Zomato when it comes to a discount, and what do you do with the remaining 5.58% stake? How long do you intend to hold it for?
Hi. Thanks for having me. It's been a real pleasure. So we started investing, as you pointed out, in Swiggy in 2015. Our initial investment was at a $6 million post. So from that, it's been an amazing journey. To your question, I think in India, Harsha talked about it, is at a very early stage of evolution when it comes to food and retail and commerce. So it's a fundamentally very strong company. So we are excited about what has happened in the last decade, and we believe that it's a very strong company and will continue to grow and scale.
No, there's no denying that it is a strong company. The question is, how much is in the price already when it comes to its other listed peer? Because now you have a comparable, right? And you have comparable metrics as well for both the food delivery and the quick commerce space. What, according to you, is should be the fair discount to the other listed player? And at the same time, if you could give us a sense of what the challenges in growth for Swiggy would be from here on.
Got it. I think the discount is the market's going to decide that, right? So it's already thinking through that and working through that. And as we look forward to your question on what are the challenges, I think it's a very operationally intense business, as you can imagine, being in hundreds of cities. Anything can change in a moment's notice across this. So keeping the ship running as a tight journey, they've done a good job, but Swiggy needs to continue doing that, and Harsha and the management team are very well placed to do that going forward as well.
Good afternoon, Anand. Thank you so much for joining us. First up, the key question is, you've offloaded a very tiny part of the stake. You still hold well over 5%. So number one, do you continue to hold on to that, or will you be looking to offload that at regular intervals? Do you have a path over there? And secondly, one of the reasons why the IPO was not subscribed as much as other IPOs that we saw during the course of the year was the fact that investors are still worried about the actual path to profitability. So what is your take over there? When do you see especially companies like Swiggy actually turning bottom line profitable?
I think Swiggy has given the guidance themselves. They've been working towards it on a steady pace, right? So on the path to profitability, and I think they have a very well thought through plan there. What was your other question? Sorry, I missed the first question.
What do you do with your remainder of the stake? You have close to 5.5% stake there.
Oh yeah, that's right. So we are pretty excited. We've got, as you pointed out, reasonable liquidity. And I think the prospects of the company are very good. And as you know, there's a lockup period. But overall, we are very excited about the prospects of the company. And as of now, the plan is to hold.
All right. As of now, the plan is to hold. But, it's also limited by the life of your fund, right? When does that end? If you could give us a rough timeline.
Yeah, the funds are roughly 10 to 13 years, and there's no hard deadline by this time you have to close or anything like that. So for good companies, we tend to hold on. For example, Flipkart initial investment was 2008, and we exited that completely only very recently. So it was more than 15 years that we had.
All right. Two-part question, both of them related. One, what is your growth expectation from Swiggy from here on? Street is expecting the industry to grow anywhere between 32 to 35%. And in a market where, it is almost a duopoly with some more share for Zomato than Swiggy, what do you think is Swiggy's right to win here? And do, both players in the industry grow at the same rate?
Yeah, so there's food and there's retail, grocery, and broader retail. On the food side, as we all know, it's stabilized and growing at a reasonable pace there. And if you look at retail overall, of the 700 billion plus, India is still very early in the online penetration, and particularly quick commerce is even earlier. And it's about each company executing against its plan and growing. And the market is so large. Harsha has talked about it to the media as well. It's more, how do consumers come more and more online, realize, taste the quick commerce experience, and then order more. So growth potential is much higher on the retail side.
Okay, thank you so much, Daniel, for joining us, and congratulations on what's been a very successful investment for you. But moving on, let's slip into a short break. Up next, we will be joined by Navin Killa, the head of APAC Telecommunications at UBS Securities, to discuss trends in the telecom industry. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back to a halftime report. Well, the selling pressure on the Nifty as well as the markets has only intensified. Nifty has now given up the 23,700 mark as well. But moving on, let's move our focus to the telecom industry. From tariff hikes to AGR issues and the latest satellite spectrum row, the sector has been in news lately. We are now joined by Navin Killa, the head of APAC Telecommunications at UBS Securities, from the sidelines of the UBS India Summit 2024. Good afternoon, Navin. Thank you so much for joining us. Well, there's so much happening as far as the telecom space in India is concerned. Do you think, number one, that this space can continue to remain at least a three-player market? Vodafone Idea has seen significant price erosion too.
Yeah, thank you very much for having me, actually. So look, I mean, if you go in theory, we actually have 4 operators in the market today, including BSNL. I think obviously the government has stated that they would like to have 3 private players at the very least, and then possibly for BSNL to continue. And we have seen initiatives taken from the government in the past around AGR and spectrum payment deferrals that have allowed for that to happen. I do think a very important milestone will be around next year or maybe a little bit before that, because a lot of the moratorium periods come to an end between June to December 2025. And I think we would probably expect the government to take more steps to support Vodafone Idea. I think the base case that we have, and which we think industry has, is that there will probably be more deferrals, maybe more equitization. Our view is that maybe more would be required, including potential cancellation or even waiver of some of those dues, which is not that easy to execute, but we think in the interest of the industry, maybe there are ways that can be done. But again, like I said, June 2025 or right before that is the time frame when we would expect the government to take some action on that front.
Right. From an investable standpoint, you said while in theory there are 4 stocks, from an investable standpoint, that leaves one with just about 2.5 if one was to look at Vodafone as that half. I wanted your thoughts on how does one play it? Do you go with the pure play telecom player? Do you go with the conglomerate where the hope is that at some point there will be a demerger? Or do you back the half chance there? I ask this because, everyone's hoping for some sort of tariff hikes to come by as well. If you could give us a sense on, how does one play this from an investment standpoint, even as the macros for the telecom sector hold up the population, increasing data consumption, cheapest cost of data, etc.?
Yeah. So, look, I'll make 3 points. First of all, if you look at telecom sector globally, generally there is a tendency for stocks within the same country to have very strong correlation. So when a sector is in a price repair mode, growth mode, profitability mode, tendency is for all stocks to do well. And then similarly, when we are entering a period of competition or regulatory uncertainty, then there is a good chance for the whole sector to underperform. So there is generally a very strong amount of correlation that all telecom stocks within a single market tend to have. Now, that being said, obviously, as you rightly pointed out, in India, we have a bit of a unique situation in the sense that we have a pure play telco, we have a telco where there are balance sheet issues, and then of course we have got a conglomerate. Now, if you look at the point you made earlier about tariffs, so we have had 3 rounds of tariff increases in the last 4 years, 4.5 years. And essentially, if you look at India's mobile revenue as a percentage of GDP, it's actually now comparable to most other emerging markets, maybe about 10% lower. So we think there is room for tariffs to continue to go up, but not probably at the same pace at which they have gone up in the last 3-4 years. We think it will be important for the operators, therefore, to start differentiating pricing because we have a very flat pricing structure right now. And so there is probably a need to create a range of pricing plans such that customers who have the ability to pay more, who want to consume more data, or who want more premium services like roaming, content, etc., are charged more. But at the same time, there is no across-the-board price increase for everybody in the ecosystem. And that's probably going to be the next phase that we would expect to continue. I think from a stock perspective, again,
right.
Yeah. Sorry,
please go ahead. Please go ahead.
No, I was just saying from a stock perspective, again, as I said before, generally there tends to be correlation among all stocks in the sector. But then, of course, here we have a unique situation in the sense that one of the operators is very sensitive to what the government does on the AGR. So the operating trends are probably less important to the whole equity value creation for that business. And that obviously makes it more of a play on the point I made earlier about what the government is going to do next year.
Right. Naveen, number one, talk to us about the ability of the consumer to actually absorb price hikes. In the last round of tariff price hikes you actually saw a little bit of down trading happening, and you actually saw people with 2 SIM cards, going ahead and migrating to 1 SIM card. That is the first question. Second question, what is the blue sky scenario as far as Vodafone Idea is concerned? What is the best that they can hope for in terms of regulatory relief coming in? Because the Supreme Court judgment has been quite clear. And we believe that, the last time, you had a report on Vodafone Idea, it actually upgraded it to a buy rating. Has there been any change in stance, from that particular view that you had then?
Right. So let me answer your first question on consumer ability to absorb, right? So look, the first tariff increase, which was done in December 2019, did result in significant churn. But that is also because at that time we did have an inflated customer base because Reliance Jio had just entered the market, and there were a lot of double SIMs and triple SIMs even. We did notice that in the second and then in the recent tariff increase, the number or the magnitude of churn did decline. It's not zero, but the magnitude of churn has definitely come down. On the downgrade side as well, yes, there has been some, because if you look at the ARPU increase that the 3 operators have reported, or the 2 operators have reported so far, it is less than the percentage tariff increase that they implemented. I'd wait for 1 more quarter to come to a conclusion. But even then, there is definitely some downgrades. In fact, we had done a consumer survey right about the time when the tariff increase was implemented. And our conclusion back then was about 20 to 25% of customers were looking to downgrade, particularly from the 1.5 GB plan, which is the most common plan, to 1 GB per day. So there are downgrades, there is churn. And yet, if you look at it on a total basis, the sector would have probably grown revenues 7-8% in the last quarter. And maybe another 5% in the next quarter. And so cumulatively, you would have seen 12-13% sector revenue growth. So, there is elasticity, but net, there is still a decent pass-through of the tariff increase in terms of sector revenues. Of course, at some point, as you rightly pointed out, you need to be careful because, after all, telecom is a product that is consumed by masses. And which is why the point I made earlier was that over time, telcos will have to think about changes in tariff structure, which are not across the board, but which only make the upper end of the market pay for premium services that could be offered. On your second question on Vodafone, look, I think if you look at the operating situation, they have positive operating cash flow, right? So if you look at EBITDA minus lease payments, they are generating operating cash flow. And with the capital raise that they have done, they also have at least the next 2 to 3 years of capex sorted out. There is a bank funding process which is going on. We don't know a lot of detail about that. But if that plays out, then that kind of sorts out another 1 to 2 years of capex. And I would believe if you look at the numbers, the capex and all that they've talked about, in 3 to 4 years, they should get to a fighting kind of 4G coverage. So I think from an operating perspective, the company has a plan in place. The challenge when it comes to the investability or any kind of view on the stock is the total amount of debt, large part of which is government debt, which then is a little bit difficult to value because you don't know when it will be paid, whether there will be deferrals, whether there will be cancellations, whether there will be equitization, if there is equitization, at what price. Right. And so given all those uncertainties, I can imagine that the range of scenarios on the stock are quite substantial.
All right, let's keep it very simple then before we let you go, Naveen. 2-part question. One, in your model, given the explanations that you've given on account of price hikes and the models that these companies would perhaps undertake, what is the effective price hike that you've factored in over the next 3 years on a compounded basis in your model? That's point number 1. And secondly, is there a way to play this theme via ancillaries and not just the listed telecom companies that we have? Pure play telecom companies, can we play it via telecom infra or ancillaries?
Sure. So on the price hike, so we have about high single-digit ARPU increase that translates to about 8-9% CAGR over the next 3 years. Not all of that is coming from price increase, by the way. Remember, there are secular factors: 2G to 4G migration, prepaid to postpaid migration, 1.5 GB customer migrating to 2 GB, and so on and so forth. So if you dissect, I would say that there's probably 5 to 6% annual price increase that we are building, and then maybe another 4% which is coming from these secular factors that I talked about. Now, obviously, it's not going to be annual 5-6% price increases. There's going to be a one-off. We don't know when, but at some point in the next 2 years.
Right.
So that's what essentially goes into our model. The sector revenue growth is a bit higher than that because remember there is some organic growth in the number of customers as well. So the sector revenue growth that we have is around 10 to 11%. So that's kind of what goes into our model. I think your second question was on ancillaries. So, I mean, you know, the ancillary space in India, to be fair, is not that deep. I mean, we have the tower companies, we have a couple of fiber companies, you know, a couple of infrastructure companies, but it's not as deep as you would have in a market like a US or a China, where the whole ecosystem is listed or playable in the equity markets. But I mean, on the tower companies, again, the challenge there is a lot of that is dependent on the Vodafone Idea viability. And I kind of talked about the puts and takes there. Right. The rest of the ecosystem, again, a lot of them are very small. But yeah, there are definitely some names that you can play there more as a capex interplay for the larger telcos. And I think, I guess the last point I would make there Naveen. Is we are seeing a shift in capex, which will help.
Very sorry, Naveen, to interrupt you, but we're running out of time. Moving on, thank you so much for joining us and sharing your thoughts on the telecom space. Well, moving on, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit on November 14, starting 10 a.m. onwards. A power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Only and only on CNBC-TV18.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation, and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
You're watching us here on Halftime Report. Perfect time to get you the F&O update at midday itself as the sell-off for the frontline indices intensifies. The Nifty is now settling just under that 23,000 or around that 23,700 mark. That will be the crucial one to watch out for after the big decline that we've seen, and whether there is another round of selling in the second half of trade. Why do I say that? Because the Nifty Bank, which was earlier outperforming, is now underperforming, down about 1%, and the mid-cap index has it a lot worse. The Nifty Bank is the one in focus at around 50,700. Why is that? Because it's Wednesday and it's the last weekly options expiry that we have on the Nifty Bank today. From next week, of course, these weekly options expiries for the Nifty Bank and others would be taken out. And for this expiry, the 50,800 call writers fairly active. We have the 50,700 put writers equally active as well. So that's telling you that around 50,850 we will see a fair amount of resistance for the Nifty Bank, but at lower levels, 50,700 put, telling you that we have some support at around 50,600. We are also seeing some writing at the 50,600 put, and the 50,500 put itself has the maximum open interest. So 50,500 to 50,600 could be an important support for the Nifty Bank in today's trading session itself. For the Nifty, all these put writers have actually been caught on the wrong side. So serious short covering on the 23,900 put, the 24,000 put as well. A lot were hoping that 24,000 will play out as a support. That's not the case to be. And now we've seen some writing at calls which are higher levels, and even some at the money calls. So 23,800 call writing telling you 23,850 would be some resistance, and at the same time the 23,700 mark, where we have a fair amount of tug of war. The 23,700 call has a premium of 100 rupees, seeing some writing, but at the same time we have the 23,700 put, which is also seeing some writing. Together they have a premium of 200 rupees. So those who are selling this straddle of 23,700 call and put together are playing for a range of 23,500 at the lower level on the Nifty to 23,900 on the upper level itself. 23,500 would be an important one to watch out for, because you have the 200-day moving average a little over 23,500 itself. Stocks in focus today. A lot of long positions being unwound on Jubilant Foodworks after a big move that we saw on the upside yesterday. Also, a lot of short covering seen on Trent. Now the stock has begun to move up from the levels that we saw last week at the lower end, and also GNFC is the one which is seeing a fair amount of open interest build up, may enter F&O band with the kind of up move that we've seen in open interest today and the down move that we've seen in the stock today.
Thank you so much for that, Mangalam. We'll keep an eye out for GNFC as well. Let's slip into a short break. Up next, Pranav Bansal, the MD and CEO at Bansal Wire Industries, will join us to discuss the Q2 numbers and the way forward.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है।
Welcome back to HTR. Well, as promised, Bansal Wire Industries, which reported a good set of Q2 numbers, the company saw a strong operational performance as margins sustained about 7.5% for the second consecutive quarter. Pranav Bansal, the MD and CEO at Bansal Wires, joins us now to discuss more. Good afternoon, Pranav. Thank you so much for joining us. Well, in Q2, hygiene check. What are the volumes as far as this particular quarter was concerned? Q3, how are volumes looking, and where do you expect to end FY25 in terms of volumes?
Hello, thank you for having me. So in Q2, we did about 80,000 tons of volume in all our 3 sectors, which is high carbon, low carbon, and stainless steel combined. For Q3 as well, we're looking for a good growth as we have been doing in the last quarter and the quarter before that, mainly coming from consolidation and us setting up one of the largest facilities of wires in Asia, which is also being operationalized and is set to be fully operational by the year. So we are looking at good numbers in volume, good growth in volume in Q3 as well as Q4.
What is the growth? Your installed capacity is close to 320,000 tons per annum. What do you intend to produce and sell this year?
So as far as capacity goes, we are looking at an installed capacity of 6 lakh tons by the end of this year. Therefore, you see some growth coming every year. And our target for the next 2 quarters is also to grow at the same pace as we have been in the last 2 quarters.
Right. Pranav, talk to us about the export contribution as far as H1 FY25 is concerned. Are you witnessing a slowdown there? And even when we look at historical trends in the last 3 years, there appears to be a much lesser contribution of exports as it was, let's say, 2-3 years back. And what is the targeted export contribution by the end of FY25?
Well, you're absolutely right. In the last 2 years, our export has not done very well, mainly because of the geopolitical situation. And what you also need to understand here is that 75% of our export comes from only Europe and US. And those 2 areas have not done well in the last 2 years. Therefore, you see that reduction. Although it has already picked up in the H1, we have done about close to 10% export in Q2 as well. We are looking for good numbers coming in for Q3 as well as Q4. Although our business model is not very dependent on export, it is more of a domestic business model. And even in domestic market, we already have more than 5,000 customers. So we're not really very dependent on one single customer because we've diversified to a large extent there. But still, export has been a good area for us, and we continue to focus on that.
Could you give us a sense of the expected utilization of your Dadri plant? Like you said, by the end of this year, your installed capacity will go to 6 lakh tons. In the second half, what is the expected utilization there? And if you could also throw some light on the EBITDA per ton in the second quarter, and how do you anticipate that to move over the next couple of quarters?
So as far as EBITDA per ton goes, if you take our sales, which is about 80,000 tons for the quarter, and we did about close to 68-70 crore of EBITDA. So you get the figure right there, right? 8 to 9 rupees a kg is the average blended EBITDA for our product. months. We are looking at a good volume growth, definitely. In the first 2 quarters itself, we have done good growth as compared to the last year. Same kind of a trend we are looking at for quarter 3, quarter 4. And if we follow just the growth that we've done, I would say that we should have at least 10% more every quarter in volumes.
Okay, give us a sense of how do you expect to see sales mix changing. So by the end of FY25, currently we understand low carbon at 57%, high carbon 22%, and the remainder being stainless steel. End of FY25, end of FY26, how do you see this particular mix changing?
So FY25, what we are looking at is more mix coming from low carbon. This is also coming from the consolidation that is happening within the group. Within the last quarter, we have consolidated one of our group companies, which was Bansal Steel Power, which is now a 100% subsidiary of Bansal Power. In this quarter, we have taken a target to consolidate all sales coming from Balaji and Bansal High Carbon. Therefore, these two companies making only low carbon will come to Bansal Power within the 3rd quarter and the 4th quarter. So by the end of quarter 4, we are looking at a good increase from low carbon. High carbon and stainless steel will see, a general 5, 7, 10% kind of increase.
All right, quickly before we let you go, Pranav, finance cost has come down slightly from 6.25 crore to 5.5 crore per quarter. What is the likely run rate going here, given that you are intending to be debt-free post your IPO? That's what your stated intention was. And what are the return ratios that you're targeting, both on ROE and ROCE?
So the proceeds from the IPO came to us by end of July. Therefore, you see some contribution coming even in the interest cost within the 2nd quarter. You will see a major change here within quarter 3 and quarter 4, because after the proceeds of the IPO, we are already today kind of debt-free.
Well, thank you so much for joining us and throwing some light as far as how exactly expect H2 to pan out. Well, moving on, we'll slip into a short break. We will get you more on markets and stock-specific action on the other side.
फिस्कल डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट है।
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आप
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देंगे, बंद नहीं होगी, और ये वेलफेयर स्कीम लाडली बहने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है, वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा,
अभी
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Welcome back. Let's get you an exclusive chat now with the management of NTPC Green as the IPO is launched today. It's a 10,000 crore IPO with an offer for shares in the price range of 102 to 108. Let's hear out.
So there is nothing from the OFS side. So this is a completely fresh issue.
For 10,000 crores?
Yeah, the complete 10,000 crores. So this is the dilution which is happening rather than, so all the new shares will be issued. And this is to meet our capital requirement and further going forward for the transition. As you know that NTPC is the largest power generating company. I'm told every time that whenever there is a power, NTPC just comes instantly in their mind. So similarly, going forward, whenever there will be green power, I think NTPC Green Energy will come to this. And that is what our ambition is. We have already chalked out programs to go up to 60 gigawatt by 2032. And this is what we had declared almost about 2.5 years back. Today, when the storage prices are coming down, we believe that we will be able to achieve that before 2032 rather than waiting up to 2032. So this public offer is to raise only 10,000 crore at present, and depending on the requirement of the capex, and as per the guidelines of the SEBI, we will be required to dilute up to 25% in 3 years.
So what is the plan for the 10,000 crore rupees? How do you plan to use the proceeds from the IPO?
The proceeds of this 10,000 would be essentially for filling our capital expenditure. It's almost 19 gigawatt in the next 3.5 years. But however, intermittently we may use the proceeds also to retire some of the costly loans temporarily. But broadly speaking, it is meant for a capital expenditure.
So right now, if you could give us a sense of debt to equity and pre and post IPO, what is it now, and post the IPO, what would it look like?
The present debt equity is 1.91. But however, we will be implementing all this with a debt equity ratio of 80-20.
Okay. And
so leveraging 1:4. And so at present we are quite comfortable. But our growth plans are also very aggressive. As of today, we are having only 3.3 gigawatt, means 3,300 megawatt operational, whereas we have more than 11 gigawatt, which is 11,000 megawatt under construction. So we are commissioning 3,000 megawatt in this financial year, means up to March, and 5,000 megawatt in next financial year, and another 8,000 megawatt in FY 26-27. So by FY 27, we should be having 19 gigawatt or 19,000 megawatt.
That was actually my next question.
So I know that, and this is the kind of the capex requirement which is going to go forward, and that is the reason Director of Finance just mentioned that it will be temporarily if there is some kind of loan repayment, but going forward we will be requiring more and more capex on that. We are going to play a very, very important role in the energy transition. As you know that NTPC supplies almost 1/4 of the electricity to the entire country. We have the pan-India presence. So similarly, NTPC Green Energy will be playing the similar role, that it will be leading green energy company which will be having footprint almost everywhere. But to start with, what we are doing is that the areas where there is a maximum potential for the solar and wind, we are focusing on that, which is like Gujarat, Rajasthan, Andhra Pradesh, Telangana. These are the states where we started, but going forward we will be going almost across the country wherever there is a potential, whether it's for solar or wind. But more importantly, there is two other important things into that, which is the storage solution, because as you know that solar is only during the daytime when the sun shines. So what happens when there is a sunsets and there is off solar hours? So there is a requirement of the storage solution.
For round the clock?
For, if not the round the clock, at least for the peak requirement. Round the clock is the next thing. So to meet the peak requirement and to have the grid stability during the day when there is excess solar. So it's both, there is a combination of that. So there will be huge capex requirement for the storage solutions. We are working on that also. And going forward, there will be the another important segment, which is the fourth segment, which is called the green molecule. And green molecule is green hydrogen and green hydrogen based derivatives. The derivatives are green methanol, green ethanol. Then going forward, there will be a aviation, sustainable aviation fuel. So those kind of things which will be then taking place. Let me add here that about 10 years back, when the solar started and when the first megawatt was commissioned in Gujarat, there was some apprehension in the minds of the many people that what is going to happen. And today everybody is accepting very well, and everybody has joined this kind of momentum on that. Similarly, going forward, there will be storage solution as well as the green molecule solution, which will be
sure. So you said that in till 2019 the plan is for 19 gigawatts. What does
27.
Till 27.
FY 27 we will be having 19 gigawatt commission, but that does not mean only 19 gigawatt. There is a work which is going on continuously, and what we intend is that what we had said about the 60 gigawatt by 2032, we should be in a position to commission that before that.
Right.
That's what.
But in terms of capex, what does it translate into absolute numbers? How much of
So
capex?
let me give to the Director of Finance exact numbers, but let me give you the kind of some numbers which is kind of ballpark figures what you require for the per megawatt of solar and per megawatt of wind. Our strategy is to have almost 90% of the solar and 10% only wind. As far as the solar is concerned, it takes approximately 5 crore per megawatt. And this also, there is a difference of the AC and DC, but you can say that with a kind of 28-29% CUF, with the capex requirement is around 5 crore per megawatt, and for the wind it is approximately 8 crore per megawatt. So if you put together, this is going to cross 3 lakh crores, means 3.25 lakh crores for the 60 gigawatt going forward. So that itself is only solar plus the wind. Then there will be a storage component, and then there will be a kind of green molecule component. So it's going, as we go along, our requirement will go on increasing, because we have to go aggressively on this end, and we have to really work towards this transition. The 500 gigawatt by 2030, and which has been announced by the government, we have to play a very important role into that. And further 2070, which is the net zero. So it's put together, our contribution will be quite significant.
Well, a very important conversation there with NTPC Green Energy. The IPO opens on November 19th, and the implied market cap of close to 91,000 crore. Well, with that, it's a wrap on this edition of Halftime Report. Business Lunch will take all the action ahead.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Market extends losses to trade near the day's low. Nifty slips below 23,700. Broader markets take a bigger hit as mid-cap falls 2%. Realty and metals are the big drags, even as all sectors trade in the red. Swiggy lists at a premium to its offer price of rupees 390, delivering gains to IPO investors after a not so strong subscription. Analysts, however, remain divided on the potential for gains from investing in the stock. NDBC Green will launch its 10,000 crore rupees IPO with an OFS in rupees 102 to 108 price band on 19th of November. The offering will be the third largest IPO of the year after Hyundai and Swiggy. Trump picks Elon Musk and Vivek Ramaswamy to lead the Department of Government Efficiency to drive efficiency in the government. But unlike the name suggests, the body will not be a government entity. Dogecoin jumps. October CPI inflation comes in at 14-month high of 6.2%, pulled up by largely vegetables. Yields inch higher up as staggered hopes come in on rate cuts, and even as some dovish in December vanish, rupee takes a breather as from its relentless fall since Trump win. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at the market. We've seen a dragging event today in trade. Nifty has slipped below the 23,700 level today. As of now, you're looking at it, 23,660 is what it's holding on to. Day's lowest point, 0.9% of decline is what we're seeing coming in for the Nifty 50. Broader markets, that too are underperforming the benchmark indices. So Nifty mid and the small cap both are down more than almost 2% in trade. Nifty mid cap is down almost 0.2% in trade, while the small cap is also down 2.5% in trade. Nifty Bank, that's also a drag coming in today. Not much of an excitement there among the top sectoral losers, what we could call in also from the Nifty Bank side, down almost 1%. All the sectors, when you're looking at it, are trading in the red today. And topping that list in terms of losers today, we have Nifty Realty as well as Nifty Metal. top drags they're coming in. Nifty Realty down almost 3%, Nifty Metals too approximately down more than 2.5% in trade. Some of the movers that we're watching out for in trade, some bit of a green coming in from the pharma side. So Suven Pharma managing to hold on to some bit of a gain. MedPlus Health too holding on to gains after the Q2 numbers. While on the back of the Q2 numbers, we're seeing a decline coming in for Sula Vineyards. We're seeing Cello World, EPAC Durables as well as Hyundai that are seeing a bit of a drag in today's trade. So keep an eye out on these individual names as well that are in focus on the back of their numbers. But let's move on and start the show by talking about Swiggy, because Swiggy shares are surging after the food delivery platform had a tepid listing on the exchanges. The stock listed at 420 rupees a share versus the issue price, which was at 390 rupees. In fact, my colleague Shilpa Ranipeta quizzed the management at the press conference on the company's plan to expand the quick commerce side of the business, and here is what they had to say. Listen in.
Our food delivery business having turned profitable and at a very good pace of growth. It's still an early stage for India's food delivery industry. If you look at the overall size of the industry, and the online food delivery industry, there is a pretty massive scope for us to continue growing into this larger macro factors that will continue to aid that growth. Talking about the quick commerce segment, we are seeing a pretty robust consumer acceptance to larger categories, larger selection. The platforms that are currently doing a good job on speedy deliveries have to also been able to the consumers are reimagining the category in terms of what they would like to associate or want to purchase from these quick commerce platforms, and we are trying to do our best in terms of giving them more assortment, faster delivery times. So it's an exciting phase of our growth.
Okay, we also spoke to two big investors in Swiggy, and here is what they had to say about the listing.
Pretty excited. We've got, as you pointed out, reasonable liquidity, and I think the prospects of the company are very good. And as you know, there's a lockup period, but overall we are very excited about the prospects of the company, and as of now the plan is to hold. And if you look at retail overall, of the 700 billion plus, like India is still very early in the online penetration, and particularly quick commerce is even earlier. And it's about each company executing against its plan and growing. And the market is so large. Harsha has talked about it to the media as well. It's more how do consumers come more and more online, realize, taste the quick commerce experience, and then order more. So growth potential is much higher on the retail side.
Swiggy is a fundamentally very strong company for a few reasons. Number one, we have two core businesses as you highlighted. One is food and one is quick commerce. Both are growing reasonably fast. Food is already profitable. Quick commerce is trending towards that direction. And given the innovation DNA of the founding team and Harsha, I'll not be surprised if they keep coming up with new offers and new offerings and new products for their customers. So in total, I think I'm super excited about the kind of long-term prospects of Swiggy beyond what they've already built today.
Okay, now let's shift focus and talk about the other kid on new kid on the block that we have. We have Acme Solar that also listed on the exchanges at a 13% discount to its issue price of 289 rupees. Earlier, we spoke to Nikhil Dhingra, who is the CEO of the company, and he spoke about the company's post-listing strategies, the guidance that they have on the way ahead. Listen in.
So in terms of our business, we are selling power in long-term contracts to the government, 25-year PPAs we have. And of course, as you know, in a renewable power, the good thing is there is a very low operating expense because it's a small maintenance of the plant, which is a very small number. So in effect, at the project level, you get a 90% plus EBITDA. And of course, when you are having a holding company, the overheads reducing, you get a more than 86-87% kind of EBITDA, which is fairly predictable. And of course, across our projects, this is the number we have been doing. It's a very PPA to PPA specific number, so it will be much higher than the number you said, because this number which you said will be reached almost by the capacity we are operationalizing this year and maybe the next year. So as you know, we have around 1800 megawatt peak of operational capacity in FY24, and this year we have already energized a 1800 megawatt plant. So effectively, our capacity has got doubled this year in terms of the megawatt peak. As we are moving forward, what is happening is these PPAs are FDRE, so the effective capacity which we are seeing is 6 gigawatt is effectively much more.
Okay, and let's move on to some macro data. Now, India's October inflation came in at a 14-month high of 6.21%, washing away any hopes of the rate cut in the December policy. The industrial output, or the IIP, for the month of September came in at 3.1%, much better than minus 0.1% in the previous month. Lata is here to give us an editor's take on that.
Well, the CPI number was always expected to come close to 6%. That was the CNBC-TV18 poll, but 6.2 is a bit of a nasty jar. The prime culprit has been food. It's up about 10.87. But before that, I just want to point out about the 6.21. It's coming about on a year ago number of 4.87. That's not all that low, you know. It's almost 5%. So you're clocking 6% over 5%. That in itself is not good. The prime engine, as I was saying, 10.87 rise in food, to which the contribution of vegetables was outsized at 42%. That's a bit of a relief, because veggies are always seasonal. You know, a crop is usually 90 days. So in winter months, you would normally see vegetable prices ebb away. But I would worry that two other important elements, cereals, are up 1% on the month. I mean, haven't we been speaking of an extraordinary Kharif and a likely good Rabi? Should not that have been depressing cereal prices? There's something structural about it, and I remember speaking to Dr. Ramesh Chand about it. He said the way in which we are designing support prices, there's something structural about the rise in cereal prices. We don't worry about that. The FAO index is also rising globally for cereals, so just a little bit of a worry. Edible oils are higher because the duty got raised. That again contributed some 9%. All these are worrisome things. Now, the full year number, which stands at 4.5 for the Reserve Bank, will have to be increased because we've got outsized numbers in both September and October. So from 4.5, the Reserve Bank will have to up it to 4.8. Now think of a monetary policy authority which has a over 6% number behind it. After all, their mandate is to keep it under 6%. You're above your mandate and you're going to raise the full year number. It's hardly a scenario where you can expect them to even talk dovish. Forget about cutting rates anytime soon. In my mind, even February is a question mark. But let's wait and see. There's a lot of data from now to then. A word about the growth data. Industrial output number coming in at 3.1 is a relief after that horrible number we saw in August. There is a lot going for the September output. Remember, this is not demand number. This is actual output that industries generate. Now, what will you be doing in September? You will produce for Navratri and Diwali, and this time both fell in October. You had very good reasons to have a good number in September. I would think that given these circumstances, 3.1 is still an unimpressive number. It also had a low base advantage. The positive is that consumer durables, consumer non-durables, capex, all of them were at least in positive. There were no negative numbers, but that's about the only thing I can say positive. 3.1 is unimpressive. August is minus 0.1. All this contribute to the GDP number, which will come out, that is the Q2 GDP number, which will come out on November 29th. Tough to see it above 6.5. That can be another nasty jar for the market.
Thank you so much for that, Lata. But on that note, we're going to slip into a very short break. And after we return from the break, we'll focus on Delhi's air quality index as the state continues to choke under severe air pollution.
"25 years ago, CNBC-TV18 set out to be a part of India's story, your story. For a quarter of a century, we've stood together by your side. Through every peak and every fall.
We see CNBC, the TV, and there's great content in it and great viewership.
Navigating the tides with you and becoming your trusted partner and investment ally.
I must say I don't watch business channels, but if I do watch, I watch CNBC.
Turning your dreams into legacies.
And my memories go back to you being a single room studio.
to being such a huge facility. And I think from having a few thousand viewers to maybe having millions of viewers.
As we celebrate 25 years of shaping India's economic story, we are proud to bring you the Global Leadership Summit to reimagine the future of India's economy, a future we will continue to build together. 25 years of CNBC TV18. Let's begin the next chapter together. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who has...
Welcome back. You're watching Business Lunch on CNBC TV18. Let's move on. The Supreme Court came down hard on the bulldozer justice by the state government and said that executives cannot take the law into their own hands. Ashmit is joining in with us on the phone line with more details on this case. Ashmit?
Well, just to give our viewers a brief context, a batch of applications had been pressed before the apex court. The concern that had been raised is that in states like Uttar Pradesh, Madhya Pradesh, Rajasthan, there were instances of accused persons having their properties demolished under the guise of municipal laws. Now, this was the concern raised. Now, this is something that the apex court has come down severely on. The Supreme Court saying that the real motive behind these demolitions, behind these bulldozer demolitions, is actually to punish the accused without even trial. And this is where the Supreme Court comes in to say that the executive cannot replace the judiciary, that the executive cannot decide to punish the accused without trial, that even if a person is convicted of a heinous crime, and then demolitions cannot take place unless there is a procedure prescribed in law. The Supreme Court goes on to say that such actions by public officials cannot be tolerated, is a clear case of abuse of power. There is no place in our constitution, and that it will not be tolerated. And with that, the Apex Court went on to say that there is a need for accountability. Officers that are pressing for such bulldozer demolitions, there needs to be some accountability. And now, as a part of this judgment, has clarified that in case of malified intent, in case of wrongful demolition, in such cases, such officers will be personally liable for restitution of the property at their own personal cost. This is a far-reaching order that the Supreme Court has passed, making public officers, especially of these municipal bodies, personally liable. Further, the Supreme Court goes on to say that as far as guidelines are required, there are detailed measures, directions that the Supreme Court has laid down. Number one, there has to be a show cause notice. The show cause notice has to provide a window for 15 days within which they can seek, the persons affected can go ahead and seek legal remedy. There needs to be an arrangement whereby these public notices are shared with the district magistrate as well as on a portal to ensure that there is no backdating of these notices done by municipal bodies. Also, the Supreme Court records there needs to be a forum for personal hearing. There needs to be a personal hearing in case of demolitions. And finally, the Supreme Court goes on to conclude to say that the municipal bodies will have to demonstrate why demolition was the only possible alternative, why no other solution such as compounding of the illegal construction or only partial demolition was not possible, why that could not have been done. That is a case that now the municipal bodies will have to make. Essentially, the Supreme Court saying that life and liberty is critical, that a person's house reflects a lifetime of hard work, a lifetime of savings, and that it cannot be done under executive orders, wrongful executive orders by the government. Strong word coming in from the Apex Court. Back to you.
Sure. Thank you so much for that, Ashmit. But let's move on, and moving on to some regional updates. Delhi continues to choke under severe air pollution with air quality index reaching the severe category. Abhimanyu is joining in with us with details on that.
Deteriorating air quality continues to be a concern in the national capital. Today morning, there was also an incidence of fog which was spotted by the IMD, and across North India, the incidence of fog has begun from today. There is decreased visibility at several airports, which may adversely impact flight operations. It remains to be seen how the situation is going to pan out, even as the IMD for now had explained the reason behind an increase in fog. The IMD had said that the incidence of smog, which was earlier present, along with a decrease in temperature, made the air more dense, which was making it even more difficult for the sunlight to permeate into the atmosphere, and possibly may lead to further deterioration in temperatures and possibly also in air quality if the sources of pollution do not subside. It remains to be seen how the situation is going to pan out in the next few days, even as the Diwali festival, the Chhath festival is already over. And farm fires, stubble burning, the incidents may have reduced since the previous years, but still instances are being reported and action is being taken by the central and state governments to reduce such instances.
Okay, that's the update coming in on air pollution in Delhi. But let's move on, and actually we're going to slip into a very short break here. But here's a programming note for you. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, on 14th of November, starting at 10 a.m. onwards. A power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only and only on CNBC-TV18.
Challenged Trump's presidency in 2016. Michael Waltz, the former U.S. military veteran, is most likely to be the next U.S. National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the U.S. Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the U.S. military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of U.S. Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. Former For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Finance Department.
Thanks for staying tuned into Business Lunch on CNBC TV18. Moving on to some assembly election updates. Now, the first phase of polling in Jharkhand is underway across 43 constituencies. Key candidates like former CM Champai Soren, BJP leader Geeta Koda, and Congress spokesperson Ajoy Kumar, are in the fray. Meanwhile, the Chief Minister Hemant Soren, who is seeking a re-election, cast his vote in Ranchi, and the second phase is scheduled for 20th of November in the remaining 38 constituencies. The counting of the vote will take place on 23rd of November. So that's the update coming in on the political front. Meanwhile, we also have by-elections which is underway in Wayanad Lok Sabha seat, which was vacated by leader of the opposition Rahul Gandhi in June this year. His sister Priyanka Gandhi Vadra is making her parliamentary debut from this seat, and the 52-year-old debutante is pitted against the CPI and the BJP. Okay, from the domestic front to some global updates, and as we move closer to January, we are getting a clearer picture on what Trump's administration is going to be looking like. The president-elect announces the formation of the Department of Government Efficiency, or DOGE, as he moves to the assembly, his team ahead of taking his office. Now, the DOGE which will work outside of the government with objectives of dismantling bureaucracy, slashing excess regulations and wasteful expenditures, and restructuring federal agencies, will be led by Elon Musk and Republican of Indian origin and former presidential candidate Vivek Ramaswamy, Fox News anchor Pete Hegseth, and has been nominated as Trump's Secretary of Defense, while John Ratcliffe, ex-director of National Intelligence, makes the cut to be the next CIA director. Okay, and with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Don't go anywhere. Midcap Radar up next.
फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है। उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है। ये आरबीआई
डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई के
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट।
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है। उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप क्या आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स है उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी। और ये वेलफेयर स्कीम लाडली बहना चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एनडीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजीत पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री। हम एक टीम बनकर इस चुनाव को सामने जा रहे हैं और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा?
अभी
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. As we speak, there's a further fall that we are seeing. The low today was 23,632. We are around that 23,650 mark, which was briefly broken as well. Midcaps a bigger fall, 1,200 points there, and the advanced decline ratio firmly in the favor of declines.
Firmly in the favor of declines, where tightening their grip as far as markets are concerned, and the broader end of the market seeing significant selling pressure, like you just mentioned. But we have quite a lot lined up on the show. Let's start off with the top headline. A sea of red on Dalal Street as all sectoral indices trade lower. Nifty breaks below 23,700 level, while the mid-cap index falls over 1,000 points intraday. Both the Nifty as well as the Nifty Small Cap Index are down 10% from their respective record highs.
Food delivery major Swiggy lists at a premium to its offer price of $3.90, delivering gains to IPO investors after a not-so-strong subscription. Analysts, however, remain divided on the potential for gains from investing in the stock.
Acme Solar Holdings made a big stock market debut at a discount of over 13% from the issue price of Rs 289. Management tells CNBC-TV18 that the bulk of capacities that they have signed will come online in the next few years.
Sula Vineyards slips over 5% after reporting a weak set of Q2 earnings. The company says demand environment remains soft and they remain cautiously optimistic for the second half of the year.
KNR Construction's Q2 revenues grows 87% on a year-on-year basis, while EBITDA zooms over 3 times. Stock surges over 14% intraday.
Okay, so below the 23,650 mark on the Nifty right now, it's a 240-point cut that we are seeing on the Nifty. If we talk about the mid-caps, that's the bigger, cut that the index is seeing right now. So that index is down around 1,200 points. The Bank Nifty down 1%, and in a market like this, we can actually say that the Bank Nifty is outperforming what the broader markets are doing. The FMCG space not doing so well, but we have big cuts coming in from the metal index, the auto index, which is down around 20% from its peak, and the realty space as well. So it's an all-round fall. We can't really pinpoint a particular sector which is doing well.
Well, you were just speaking about the metal index. Some of the names there are seeing quite a bit of selling pressure. But have a look at the pharma names as well. A lot of them too have seen significant selling pressure, quite a lot of erosion as far as prices are concerned in the pharma pack as well. But this is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through the mid-caps that are moving around in the session.
It's difficult to find gainers in a market like this, right? And the levels at which the Nifty is right now, it's exactly a 10% drop from the record highs of 26,277 that it had in September. But starting off with losers then from the broader markets, and there are plenty of them. So in a market like this, you are spoiled for choice when you look at the losers that come up on your screen. Suzlon, the biggest single-day drop in nearly 2 years that the stock has seen, a significant correction from its peak. Paytm and HBL Power Systems also down to the lowest point of the day, losses of anywhere between 4 to 6%. Earnings reactions, the final leg of the results season. You just mentioned Sula in the headlines, but then there is Newgen Software, Nykaa, Hyundai as well, now down over 4%. Alchem had a volatile reaction to its results, had briefly slipped into the green, but is now back down over 1% after results that were just reported a few minutes ago. Real estate is a sector that is under pressure. The index is down almost 20% from the record highs, and every constituent of the index and non-index constituents too trading with losses of anywhere between 4.5% to as high as 7% for Aditya Birla Real Estate, down to the lowest point of the day. Volumes and those stocks too, most of them on the downside in today's session, but KNR Constructions still holding on to gains of 7.5%, and Bharti Hexacom, one of the few stocks bucking the trend today on very strong volumes. And lastly, some stocks that are locked in a lower circuit. Akums Drugs is one of them, continues to extend losses after its results. It's a 5% circuit today. Techno Electric in a 10% circuit, and PTC India briefly was down in a 5% circuit, but now down 4.5%. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining in as always. Some interesting names there on the list, some mid-cap movers that we are talking about. We'll slip into a short break now. On the other side, we'll be joined by the management of Galaxy Surfactants to discuss their Q2 numbers. Stay tuned for that.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? Investing.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, Galaxy Surfactant posted a decent revenue growth in its revenues and profits, while its margins declined in the quarter on a YOY basis. To discuss this quarter gone by and the way forward, we are joined by K. Natarajan, the Managing Director, Galaxy Surfactants, joining in now. Mr. Natarajan, good afternoon. Thank you so much for joining in today. Well, you know, your EBITDA per ton, it has come in slightly lower than the guided band of 20,500 to 21,500 rupees per ton. You have spoken about some headwinds that the demand scenario is seeing right now. In that case, do you stick to your EBITDA per ton guidance of around 20,500 to 21,500 for the year? Also, what happens to the volume growth guidance of 6 to 8%?
Oh, yeah. Thank you. Thank you for having me on the show. So, yes, I will be sticking to the guidance of EBITDA per metric ton of 20,500, 20,500, because we do see that the way our rest of the world is picking up and the specialty ingredients volumes are going up, we do see that we have a good chance of ending the year within the guided range of 20,500 to 21,500, because we have ended this first half at around close to 20,100. So we do see that things can get improved in the coming quarters. With regard to volume, yes, we do see challenge in India, which was the market that was driving a good portion of our growth. But I think credit to our business model, we've seen the other geographies cooperating well to enable us to deliver our first half volume growth in the upwards of the lower end of the guided range of volume growth. So yes, we will stick to our guided range of volume growth as well.
Okay, so you're sticking to the volume growth guidance of 6 to 8%. You're hoping to reach the lower end of the guided range, and also sticking to the EBITDA per metric ton guidance that you had given of 20,500 to 21,500. Talk to us about the on-ground demand as far as Q3 is concerned. You mentioned that there has been some slowing demand that you witnessed. Also, FMCG companies have spoken about the slowdown. What is the on-ground demand trends as far as S2 is concerned?
Demand trend, I think urban demand obviously has registered a degrowth, and the growth in the rural demand has commenced, but not in a significantly superior way to be able to mitigate the degrowth that has happened in urban. The commentary of my customers and our discussion with customers tells us that probably we may have to wait out for 2 more quarters for things to pan out well. The only spoiler in this is the sudden surge in commodity inflation, and that's something that needs to be kept watch on. And our customers also have been looking at how do they increase prices of the end products in a very calibrated manner so that it doesn't impact the very slow pace at which the demand growth is happening.
Okay, so Mr. Natarajan, you speak about the risk that is the higher commodity prices, even your raw material prices, that is fatty alcohol. Prices have risen there, right? Are you able to pass it on to your customers, considering a situation where demand is already on the lower side? Do you think that is something which will be absorbed by the market?
Oh yeah, so this is something that has been significant increase. It's not something that's a very incremental stuff, and it's something that is there for every one of us who is in this market. And that's something that yes, we will pass on. We don't have a choice, and we do see that the customers also accepting it. But the problem is with this sort of increased prices, the sentiment gets impacted negatively, and that's something that we would have done without. We do hope that things get better as we move forward in the coming quarters.
Okay. Give us an update as far as the mild surfactants part of the business is concerned. You've been adding capacity over here. You said it's been gaining traction with MNCs. How much of it is part of the portfolio now, and what are the targets that you've set for yourself over here?
Yeah, special ingredients continue to be about 40% of our overall revenues. and mild surfactants is a significant portion of that. And we do see good amount of projects in pipeline getting matured with many of our customers, and we do see a good traction. And there's a huge focus on this with the way that we are even building the organization for this. We do see this is going to be something that will significantly aid our profitable growth in the coming years.
Okay, so you said specialty portfolio is doing well for you. What is the volume growth that you're anticipating in this segment in the second half, or say maybe FY25, and even in the other segments geography-wise, if you can give us a sense of what will growth look like, which would be the growth driver for the business?
Yeah, so it probably pretty much the template will be similar to what was in H1. You need to have, you will have the rest of the world doing good amount of the heavy lifting in terms of volume growth. We do see that India would continue to be into a flat to 2 to 3% growth, and the balance has to be made up by Africa, Middle East, Turkey, which did have certain supply side challenges in the first half, which is getting taken care in the coming months. And we do see that will aid us in terms of continuing to be in the guided range of volume growth of 6 to 8%.
And you spoke about supply side challenges. We were speaking to Aarti Industries the other day. They said freight costs have come down in last 2 weeks. Is this something which will help going forward? And what about the container delivery or container availability as well? Is that an issue?
The freight rates, geography-wise, there have been some particular corrections, but we need to wait and watch because there's also a high season months as far as the festive season in Europe and America. That will wait and watch, but more concerning is the reliability of container availability and sailing of ships. That's something that needs to improve significantly. And that is what actually ended up messing up our supply chain into Egypt in a significant way. We also had that in India, but we could manage that with little of impact. But Egypt got impacted significantly because the incoming got delayed anywhere between 30 to 45 days. Things have improved now, but we only hope that this continues and there is no further escalation in the geopolitical situation, which can then again present with newer headwinds on this front.
Thank you so much, Mr. Natarajan, for joining us and taking us through how business shaped up as far as Q2 was concerned and the way forward for H2. Well, let's now slip into a short break. The management of EPAC Durables joins us to discuss their Q2 results on the other side. Stay tuned.
Every trading day profitable with strategies from the market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award
investing.
Welcome back to Midcap Radar. Well, that company in focus is EPAC Durables. The company's expenses rise offset the revenue growth and the gross margin of the company declined as well. To discuss the quarter gone by and the way forward, we are now joined by Ajay Singhania, the MD and CEO of EPAC Durables. Good afternoon, Mr. Singhania. Thank you so much for joining us. As far as H1 is concerned, you've seen very strong revenue growth. How is H2 shaping up, and what are the targets that you have set in terms of guidance that you can give to investors for the revenue, EBITDA margin, as well as bottom line?
So thank you. First of all, good afternoon, everybody. See, H1 performance, as we have seen, has been phenomenal with an aggregate growth of almost close to 85% plus and an EBITDA growth of almost 65% plus. So overall, if we look at H1, it has really given us good amount of confidence that our previous commentary of growth of 50% plus for the entire year is on track, and for H2 we'll continue the journey. We have a very strong book going forward both for Q3 and Q4. So overall, in terms of the entire financial year 24-25, we are looking at 50% plus growth for the entire year. And in terms of the EBITDA margins, we continue our stand that overall EBITDA margins would be at similar level what we had achieved last year. So both are on track, and we see that all the steps and efforts we have done in the previous year have started paying off the results. So the revenue growth is something we had lacked last year, and the efforts done have definitely paid us forward.
Okay, you know, your total expenses have been quite high this time around, Mr. Singhania. What explains that increase, and is it something that would cool off in the coming months?
So definitely, see, one expense increase has been can be attributed to two things. One, we are gearing up going forward for H2, and the recent capacities we have created, especially the South plant in Surrey City. So that's got operational only in January. So obviously, first H1, the utilization has been extremely low to the tune of hardly 10%. Now going forward, as the utilization improves, a lot of the fixed costs starts getting utilized. And on top of it, since we are also launching a new segment of products like washing machines and others, so a lot of costs attributed to those new developments have been built into. And as we start utilizing those capacities, we'll see all that cooling off.
Okay, Mr. Singhania, talk to us about your plans as far as the sales mix or the revenue mix is concerned. We understand that the RAC segment continues to contribute majority of the top line. By the end of FY25 and by the end of FY26, how will we see the sales mix as far as EPAC is concerned?
Currently, obviously, AC contributes almost close to 80% plus of our revenue, and the non-AC business is 20%. This year, because of a significant increase in AC, I mean, AC growth being the market growing at 40% plus, so that definitely has overshadowed the growth in the other directions what we have done. So probably within even this year, AC will still continue maybe 80% plus of our overall revenue mix. But going forward, we are definitely consciously putting a lot of efforts to diversify our product offerings. So like we started coolers. Now, washing machine is something which will start getting rolled out from next month onwards, and then other small appliances and the component business, the EMS opportunities, what we had made an announcement in the previous month. So all those opportunities will start showing off in the results from FY26 onwards, and we definitely see that despite substantial growth in AC, the overall revenue mix or dependence on AC will start coming down. So in a slightly longer term horizon, we are looking at somewhere between, let's say, 60% on AC and 40% non-AC.
Okay, 60% AC, 40% non-AC. You had told us that washing machines could be added by September, October. Are you saying it's been delayed now?
No, so we are on track. We said October the pilot production. We already did the pilot production in October, and end of November is what was targeted as the mass production. So we are on track.
Okay, and what about the other products? Anything that will be done in this fiscal itself, since you're saying majority of the benefit will start coming in from FY26?
So other products like on small appliances side, especially the air fryers are now ready, and Q4 we will see air fryers getting productionized. So that's something on the new product side. Cooler business ramping up very fast. So cooler is something like probably we are the doubling this year and then again doubling next year. So cooler is seeing a lot of traction for us. And then even the product range for our washing machine, which we're starting off with the fully automatic only, then going forward semi-automatic and other SKUs are getting added on. So a lot of new developments in pipeline, which we'll see giving us results in FY26.
Okay, we also want to understand about the strategic cooperation agreement that you have with Hisense. What is the revenue potential over there? When does it start trickling down into the top line as well as the bottom line? And also, as far as FY25 is concerned, what is the target that you have in order to go ahead and onboard new customers?
First of all, talking about the Hisense agreement. Now, Hisense is a very strategic joint venture wherein EPEC is investing in creating a dedicated facility for Hisense India. And this facility would be established in phase 1 to cater to the requirements of air conditions, and then going forward other appliances like refrigerators and all. Whereas for washing machine, we already have the capability which has been approved by Hisense, so that would be catered from our current facility. So we are contemplating or we are targeting to start production from end of June. July first week is the target date to start production for AC in phase 1. And within 3 years, the idea is to ramp up the production to almost 1.5 million for Hisense. In 5 years, the projected revenue from both air conditions and washing machines is estimated to cross almost $1 billion. So that's 8,000 5 years from these two opportunities. And as we add other appliances like both small domestic appliances and refrigerators, etc., going forward in next 2 to 3 years, that scale and the revenue would further increase.
Okay. All right, Mr. Singhania, thank you so much for joining in and giving us all those details. That's the word coming in from EPAC Durables. In the first half, they've almost done the revenues for FY24, but the gross margins, they were under pressure this time around. The stock is seeing some profit booking. It's already up 100% this year. It was a strong listing that this company or the stock saw as well. Well, for the markets, there's a wee bit of recovery that we're seeing from the lows. The Nifty is above the 23,700 mark. The mid-caps have also recovered, but we'll have to see whether that continues or not, or we'll see further selling from these levels. But for now, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned, your stocks when we return.
India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of U.S. Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Hello, good afternoon. You've tuned into Your Stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai News Studio. As of now, afternoon not looking as pretty as actually we've seen the Nifty since the get-go, seeing a bit of a decline coming in. And as of now, okay, we could say some bit of a respite at least because it's trying to make a recovery or trying to make a comeback. You couldn't even call it a recovery. 23,700 is what the Nifty is at as of now. Slight bit of an uptick from the day's lowest point. Let's see how the second half of the day actually pans out for the Nifty 50. Broader markets underperforming clearly the benchmark indices today. There's a decline of almost more than 1% or 2% approximately for the Nifty mid cap that we're watching out for, and similarly for the Nifty small cap. Nifty Bank 2 is under pressure today, and down and out in trade, almost 1%, more than 1% of decline that we're seeing approximately for the Nifty Bank. So yes, keep an eye out on the markets and where they are headed. But this is a show where we will be solving all your stock-related queries. And we do have our experts joining in with us. We have Soni Patnaik, Assistant VP of Derivative Research at JM Financial Services, as well as Parthiv Shah, Director at Tracom Stockbrokers, to answer all your stock-related doubts. Thank you so much for joining in with us this afternoon, Soni, as well as Parthiv. And, Soni, I want to start with you just in terms of markets, right? This week has been volatile, and then we've seen the decline coming in and there's no stopping it. What are we watching out for in terms of the market?
Good afternoon, Vinny. Thank you so much for having me on your show. I think Nifty is clearly headed towards its 200 EMA, which is around 23,540 mark, and that's the level where it may take a support. However, looking at how aggressively FIs have been increasing their net short positions, there's a possibility that even 23,500 may break short term. The support and options chain, as per the derivatives data, is indicating that 23,000 also levels can get tested. That may not happen immediately, but perhaps there's a possibility that if the 23,540 mark also breaks on closing basis, that's where the market is headed. I think it's time to remain cautious. It's time to remain hedged when it comes. And, similarly, I think that's a level to watch out for. No signs of short covering as of yet. Perhaps if it's able to cross the 24,200 mark, but then again, that we can see a short covering bout of move. So as of now, it's better to remain hedged when it comes to the indices.
Okay, that's the view on the market, but let's get started with the queries. And the first query we have is coming in from Achyuta BS, who's writing to us from Chennai. Now, he's holding 450 shares of RVNL at a price of 259 rupees per share. Wants to know whether he should continue to hold this or maybe look to exit the stock and book out his profits. He's making a considerable amount of profit there. So, yes, what is the view on this one? Parthiv, I'll start with you. Good afternoon.
Good afternoon, Vinny and Sony. I think our sense is that it won't be a bad idea to book profits. The reason being that, no doubt, I think it's a very credible company in the railway infra space. They've done extremely well in terms of execution. The order book has also scaled up right from the IPO days when the company had come out with an IPO at the range of around $30. But I think the massive re-rating that we've seen is currently looking like it's way ahead of the fundamentals, because currently, if you look into the valuations, it's quoting at around 69 times trail P. And even if I were to assume a 20% sort of a growth over the next 3 years, I think these valuations seem to be extremely rich. There was a point in time where I think the government capex was driving a lot of railway stocks. And at that juncture, especially a lot of these stocks with very low float, because majority of the holding was from the government, I think were rising and defying valuations, and people had stopped looking at valuations. But recently, I think with this market falling and correcting, we are seeing even stocks like RVNL correcting from the peak. It's already corrected from levels of 610. Still here, I believe that looking at the trail earnings and looking at the projections, I think the stock is very expensive. The gentleman is making good money. No harm booking profits.
Okay, no harm booking at profits. That's a view coming in from Parthiv. But Sony, would you also concur with that? Time to book out some profits, like even Parthiv just said that, we've seen these railway stocks already run up. So, what is it that one should do? And what's your view on this?
Vinny, certainly I think one should book the profit over here, because technically also, if you look at for a longer term charts, it is approaching its 200 exponential moving average of support, which is around 415. It's hardly 3 to 4% from current levels. And if it were to break, that's the level, that's a benchmark where, it triggers the investors' point of view where they have to start selling the stock. So it's better to book the profits and wait maybe, for a lower or a significant dip somewhere around, again, a 340, 330 odd levels to make a re-entry into the stock as per technical data.
Okay, that's a word on the technicals. Let's move on, and we have Deepak Dev, who's writing to us from Mumbai with an investment query, and he wants us to tell him that whether he should look to invest in Afcon's infra, and he's asking, would it be a good one to hold on to for the long term? What is your view on this one, Parthiv?
Beat on Afcon Infra, I think the IPO was pretty subdued, but I think a lot of strong hands have accumulated in this company. And more importantly, if I talk of the fundamentals, we know it's a Shapoorji Pallonji group company. The entire group has done a lot of restructuring work, and even this company, if I look into the current order book, they have almost 40,000 crore worth of order, where around 65 to 70% of the orders come from the government, a lot from the private, almost 15% comes from the private. And I think their execution ability has improved past many years. The working capital cycle is improving, and going ahead, we are expecting better numbers from there as well. I think traditionally all these infra companies have done margins of anywhere between 9 to 11%, which is what even biggies like L&T does. So looking at the order book, looking at a better execution, it's quoted at around 17,000 crore market cap, and on a forward basis at around 23 times. Our sense is, I think this is definitely a company to look at. They have in their past track record very marquee projects that they have executed.
Okay, thanks for that. Keep an eye out on those numbers over there for Afcons. But let's cut across to Shireen Van in conversation with Sumer Juneja, the managing partner and head of EMEA and India investing at SoftBank India.
Well, that is right. We're talking about the big newsmaker today. Japan's SoftBank Group is back in the black. The investment giant has reported a bumper $7.7 billion in quarterly profit, powered by its global bets in startups, including startups in India. The recent IPO frenzy in India has added to its fortunes. For instance, a $400 million investment in First Cry is now worth $1.2 billion. Similarly, it's $600 million in Ola Electric, now worth over $1 billion. And more recently, Swiggy has delivered a premium on listing day. Interestingly, Swiggy was SoftBank's first bet in the Indian food delivery space when it invested $450 million in 2021. Today, that is worth nearly $1 billion. That's not all. SoftBank is also betting big on Off Business, which is also planning $1 billion IPO. Joining me now to discuss SoftBank's India bet and the road ahead is the investment fund's managing partner for India, Sumer Juneja. Sumer, many thanks for joining us. Just a few minutes ago, you were at the NSE with Harsha listing Swiggy. What a day it's turned out to be. But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shireen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one, but also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created. Right? When you have both food delivery and Instamart, when you have $5 billion plus of GMV, when you're touching 100 million plus consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong. And that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk. But let's talk about the competitive landscape. Of course, you talked about Zomato, and of course Zomato with Blinkit. The quick commerce wars. I mean, forget food delivery. Let's talk about the quick commerce wars, and you brought up Zepto as well. Significant amount of cash that Adit and team have been able to raise recently. How does the competitive landscape stack up, and do you believe that we're heading back into the era of more burn?
So, we've seen this story before, right? We saw it in e-commerce, we saw it in food delivery. When there is a strong product market fit, when the TAM is big, competitors will come. And honestly, yes, it might be initially some burn, but I do think that competitive dynamics then brings out the best in everyone, right? Do I think Swiggy and Zomato are better companies today because it was competitive? I think they are. And eventually they had to win it and get the unit economics right.
Did you see the tweet that Zomato tweeted this morning with a heart for Swiggy?
Yes, no, for sure. And look,
is that love for real?
No, I think that love's for real. And I think if you go back, and that's a separate question, but if you go back from 2014-15 onwards, I think Dipinder and Harsha have had a great dynamic. They've been competitive, but they've also, both of them have created a massive market, a lot of employment. And really, for you and me as urban consumers, or even rural consumers, it's been a real joy to have them as apps on our phones. On the grocery market, I think that TAM is exceptionally big. I think the question often gets asked, oh, it's not worked anywhere else in the world, why will it work in India? We don't have modern retail. We don't have the convenience retail. We don't have 7-Eleven. Urban infrastructure is not ideal for you to go out and pick up stuff on your way back from work. You put those dynamics together, you also have a much lower delivery cost vis-a-vis what you can charge the customer. And if you put those dynamics together, I think it just becomes a very, very strong proposition.
But, is there room for more than three? I mean, we currently have Zomato, Blinkit, Swiggy, Instamart and Zepto. But now everybody else seems to want to get into the game. Big Basket's trying to do 10-minute deliveries as well. The big boys haven't quite gotten into the game yet, but pilots are on. I mean, is there room for more than three?
So my view always is, theoretically, the TAM is big enough. We're playing the grocery market, which is probably 5 to 10x the size of the food delivery market. So can there be more players? Yes. But we've seen this across, I think, any industry, whether it be broadband, whether it be telecom, whether it be e-commerce. Players will come and go. I'm sure more and more players will come, but it takes a lot of capital and it takes an immense amount of execution, both on the ground and very, very good high-quality tech teams. So I would say a lot of people might enter, but very quickly there'll be only a couple who will actually be able to take advantage.
But on the execution challenge, and that really will boil down to who succeeds in this market. And we've seen some fabulous stuff being done by everybody in the game, whether it's Blinkit or Swiggy and Zepto as well. What do you foresee as the big execution risks as we build scale?
The big execution risk, I think, for me, is twofold. One is you just have to get the consumers to order more and more. You will, at certain points, start capping out with your prime urban consumers. So you have to convince other people who are not, double income, working, to also use the platform. You will have to go beyond tier 1 cities like food delivery has. And most importantly, you'll have to get the FMCG companies to play ball with you and get some margin from that business.
The regulatory risk. And, we've seen the government sort of talk about the fact that quick commerce needs to get its act together in terms of playing fair. We need to create a level playing field. There's also been issues with, other regulators, the Consumer Protection Authority, for instance. The regulatory risk, how real is that? How much of that are you factoring in?
No, I think, look, in any, and this is across the world, this is not a question for India. Any market which rapidly grows, the regulation and the market speed are not always in sync. Our view is that if you are playing fair, if the regulation is not helping one particular company and it's equal for all, there will be a meeting of minds between the product market fit and the company and the regulator. We saw this in cabs, we saw this in food delivery, we saw this in e-commerce, and I'm sure there will be a level playing field or understanding between the regulator and the companies of what the right regulations and what their right barriers are.
So you're not overtly perturbed about?
I'm not. No? I'm not. I think all of them are playing with the same sets of rules. I think this government is very pro Startup India. I think there are a lot of employment being generated. They have to play by the rules, and I think between the government and the companies, they'll find a happy medium.
One of the other aspects of this quick commerce story and the way that it's playing out in India is that it has changed consumer expectation on gratification and fulfillment. How much of disruption do you believe that is going to cause, not just for quick commerce companies or companies that are competing in that space, but overall as consumer expectations change?
I think consumer expectations are changing so rapidly, and I think we're just going to get spoiled further and further because technology is going to make it easier for us to get everything a snap of a finger. I don't want to watch TV anymore because I don't want to see adverts. I only want to watch it on demand. It used to be 10 minutes, maybe 15 minutes. E-commerce used to be one-day delivery. Why should I wait for that? I want it in 4 hours. So I just think we're going to get more and more spoiled. And I actually think that's really, really exciting because it's a challenge for Swiggy, Zomato, Blinkit, Zepto. and us as consumers will just, get it better and better.
Yeah, well, consumers will certainly benefit from what's going on. But let's talk about some of your other bets, and let's talk about Ola Electric in specific, and the tweet storm that has led to both wealth destruction. I mean, do you have a point of view on that?
Look, it's a public company, so I'm not going to...
In which you're investing?
No, we are invested. Look, like I said, I think these entrepreneurs have finished their journey of dealing with private investors. They're starting their journey to deal with public investors. I think the public investors are a different dynamic, different DNA. There is liquid, they don't like it, they can sell the stock immediately. And so I think the entrepreneurs will have to learn that, they need to be a little more maybe balanced in their approach, a bit more cautious of the way they communicate with the market.
But speaking of the electric story and the EV story in India, world over, we're sort of seeing a pull back as far as electric mobility is concerned. In India, it's a different story because we're still at a fairly nascent stage. What's the outlook on growth in an era where we're likely to see less and less subsidies being put on the table by the government?
Well, I think the motion is not there. I think we can all take our view. Our view is that over the 5-10 year period, can we be reaching 30-40 odd% penetration in EV? I think we should be. It is a large two-wheeler market. It is more economical in the long run for a consumer to have EV. We're making it at affordable prices. The government is is behind the mission because it's obviously very good for the environment. And so if you take that, now the question comes who is going to be the leader? And I think for Bhavesh, like you said, there might be some up and down in the stock, but what he has created is just absolutely unbelievable, right? To come out of nowhere and say, look, I'm going to start the first EV revolution in India, take on the incumbents, build a bike which is reliable. And I think that's fantastic. So now the bet is what kind of market share Ola Electric will have. And we are, very confident that, he'll do a great job.
And you're committed to the investment in Ola?
Yes. So Ola Electric.
Yes.
So just to be clear, obviously we are locked in for 6 months. We did very little OFS in Ola Electric. We did hardly in Swiggy. In First Cry, we came down because we were a very large shareholder. All three companies, we think, have a long-term, a view and a long-term growth story, but we have to make money as well, right? we have LPs, we have SoftBank Group, who have invested in the SoftBank Vision Fund. So at the right time, we will pare down our positions. We can't hold them all forever.
So once the lock-in is over, you're looking at a partial exit or?
Depends on the market, depends on the performance of the company, but it's definitely going to be a very thoughtful, gradual exit.
Okay.
We are in no hurry to exit.
Okay, that's as far as Ola Electric is concerned. And those are the few portfolio companies that have already listed. Let's talk about the IPO pipeline. And given the turn in the markets, do you believe that we're likely to see a bit of a pause there? Or do you believe that the momentum continues?
I think it depends on the quality of the company and how much you want to raise. I think if you have a path to profitability, if you are profitable, if you're a market leader, very high unit economics, I think you can list. Like I said, it's you leave more on the table, the market will accept you. Is there enough liquidity in the market today? Yes. Is there enough depth in the market? Yes. You know all the SIP numbers, you know how much money is flowing into the Indian markets. I think the question arises, if you are a company on the fringes and you need the investors to believe a DCF 15 years out, then I think it starts becoming tricky. But if you're a Swiggy, if you're a Ola Electric, if you're a First Cry, if you're a high quality company, sure, it might go at a lower price, but you'll go out.
Has the engagement and the perception of dealing with public market investors changed? Especially, you had that first cohort of Zomato, Paytm, etc. Now you've got the Ola Electrics and Swiggies of the world. And as you build out this IPO pipeline, has the engagement and the perception of dealing with public markets changed with these new age companies?
100%. So I think there are 4 or 5 very big learnings. One, we have to start engaging with investors a lot earlier than just waking up 6 months before the IPO and saying, look, this is what my company does. And that just makes the rapport, they see our story, they understand us better, so they're not starting from scratch. Because to go on a roadshow for 1 hour and make a decision is not going to happen. Second, as you know, the domestic investors are becoming more important. They are long-term, they are India, they're more sticky, so we've got to convince them. Convincing them are not easy. They ask good questions, they ask tough questions, and that's why we need to kind of engage with them a lot. On the positive side, they have now made money in tech in India. So if you look at all the tech IPOs, whether it be Zomato, Nykaa, FirstCry, etc., people have made a decent return. Policy Bazaar, another one of our companies. And so there is this positive inclination that yes, tech in India is going to be a large part of the market cap. They understand it better. And I think so it's actually becoming a happy medium where we know how to respect the public markets, and the public markets now appreciate that there is real returns to be made here. And again, at the right price, the deal will happen.
At the right price, the deal will happen. But let's talk about overall what the view is on India. Is Masayoshi Son in defense mode still, or are you willing to now start writing
we are willing. Look, I think Masa's been talking about AI way before anyone else. Yeah. You've seen the SoftBank results. You've seen the success we've had in India. You've seen the success of the Vision Fund in the results recently. And so I think as a firm, we definitely want to take more AI and more tech bets. Right now,
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है, और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। FRBM जो है वो 3% से नीचे है। ये आरबीआई
डेफिसिट 3% से ज्यादा हो गया, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट,
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी, और ये वेलफेयर स्कीम गाडली महीने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमबीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमबीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमबीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आप 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे और ये सरकार जो है महायुति की वो हम लाने का ही हमारा मकसद है। वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे या
बैठेंगे हम, उसमें क्या है, सीएम का क्या बड़ा,
अभी डिसाइड
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Shanghai Composite is the only outlier though. It's trading with gains of around 0.3%.
You're essentially looking at the 200-day, which is 23,534, and then 23,190.
6.2 is a bit of a nasty jar. The prime culprit has been food.
The Sensex is down a quarter. You got the IT index, which is down about 0.27.
We are very cautious on both these names. On Zomato, we have been cautious.
They got the delivery delivery agents to ring the bell.
By 27 and 28, bulk of our capacities which we have signed will come online. We are very confident of the business model that we have followed, that they do not contravene any of the existing laws in the country.
Right now, the Nifty is down 140 points, but it did fall below the 23,700 mark as well.
Relevance has increased significantly with those customers. That to me is the biggest marker.
Mid caps a bigger fall, 1,200 points there, and the advance decline ratio firmly in the favor of declines.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. You're with us here on a fresh new edition of Closing Bell. Last hour coming up. Markets are looking tough. They certainly are looking a lot redder. They were 30 minutes, 45 minutes back. We're down. We're moving down to almost a triple-digit cut once again. We're down 300 yesterday. I think the Nifty is down about 270 points. So all the market action coming up. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon, folks. What a day it's turning out to be, right? And there is serious momentum on the way down now. About a 300-point fall, and the Nifty is speeding away towards the 200 DMA. A lot of experts of the last couple of weeks told us that it will be tested, and I guess we're heading there.
Well, that's right. You know, if you look at the ticker for the day, we started the day saying that 23,900 was breached. It became 23,800, 700. Now it's 23,600 has been breached, and we're getting into the final hour of trade. So I don't know whether the bulls have some kind of a fight back, but it appears, you know, liquidity, the domestic support, I think, has taken a bit of a backseat in the last few days. The FIs as still were selling, but the domestic support was there. It's not that the flows aren't there, but it appears allocation has slowed down a little bit. So it seems the domestic mutual fund industry is sitting on some liquidity and they're waiting for better levels to enter. But the problem is the broader markets. On a day, you have only around 260 stocks that are advancing. That's one of the worst advance decline ratio that we've seen in the last many trading sessions. So that's going to be a painful
almost
pocket.
10:1
Yes.
In favor of what is down right now. And by the way, you know, for some mutual funds, Nigel, they've run out of cash in the sense that they've already deployed in the last. So if you take a look at the last 1 week, domestic, I think last 1.5 weeks, local investors, local mutual funds bought about 1 lakh crores in stock, right? Now, at least some of the smaller, not very large mutual funds, so the daily flow is there. So, you know, you pick up whatever 400, 500 crores. So that flow is there, but the market is also coming off. But the stock of money, what you started with, I think that is also now running low.
You know, in fact, over the last 24 hours, I've been speaking to a lot of people, and I believe there's still more than 1.2, 1.3 lakh crore in the system. And there were two notable names, at least, which I'll not name, who are sitting on cash of more than 10%, two notable mutual funds. And I believe they are gradually chipping in, but they were the ones who were not supporting earlier. So it'll be interesting to see. As per my call, just an hour or so ago, I believe there's still more than 1 lakh crore of liquidity in the system, but deployment has slowed down. So we'll have to wait for that.
Cash on the sidelines.
Yes.
Yeah.
Okay,
a lot of fund houses, the average cash levels have been around 7-8%.
Yeah.
And I guess the issue is that while funds are flush with cash, you don't want to be sort of looking at portfolios which will be 5-6-7% lower.
Indeed.
In the subsequent immediate days. And I think that's where a little bit of a pause, wait and watch approach perhaps is coming in.
There's also the secondary flow, right? Swiggy is, I think, taken away a large chunk. NTPC Green is coming. They're raising $2 billion. So it is, of course, you've got to absorb the FI selling. And then, of course, there is all this primary market issuance, which is hitting the market as well. Well, let's just, by the way, we've crossed the 300-point cut mark on the Nifty. So it's triple-digit gains and losses, beg your pardon. So 23,574 is where we're at. Just a few levels and just a few points, on your screen. So we are fast now approaching the 200-day moving average for the market. And when I say fast, I mean really fast, right? Because look at that, 23,546 is the 200-day. We're at 23,571. So could be now, could be in the next 60 minutes that we actually test it. Nifty Bank support still at about 50,500. That's essentially the channel line support for the Nifty Bank. We'll see if we get to it. Real estate, metals, PSU banks, and small caps are the pockets which are seeing the maximum amount of pressure. Dollar index marching higher, and I looked at it right now before coming in. In the morning we were at about 105.8. We are slightly over 106 now. So that rise as far as the dollar, that has continued not just overnight, but through the course of the Asian market session as well. It's a repeat basically of what we saw yesterday. Day before yesterday, overnight in US session, dollar was up, and yesterday during Asian session, it was up another 0.25%. So almost deja vu. And of course, like yesterday, we got now about a 300-point cut on the Nifty. Guys.
Okay, just very quickly to talk about what is down, what is up in a market like this. The issue is that nothing is up, almost nothing. And that's been the trend for the past couple of sessions. If you're looking at the Nifty right now, there are only two stocks that are managing, some semblance of green. And even there, look at Britannia. Britannia's gain is not even 0.5%. So what green are we talking about? NTPC is the other one, about 1% higher. But otherwise, it's an overwhelmingly negative screen. Now, the poorest performers or the biggest losers on the Nifty would be a Hero Moto. There's Eicher Motors, there's M&M. So auto is definitely under pressure. There's Bajaj Auto as well. And then you have a lot of metal names that are under serious pressure today. Hindalco, Tata Steel, JSW Steel, all of them are down. But it's not like the other heavyweights like SBI or Reliance are doing any better. We've got the breakup on the screen again. Let's actually get that chart back up on the screen because none of the heavyweights are contributing in any meaningful way on the upside. They're all failing to buck the trend. Yeah, that's the contribution chart. Look at that. ICICI Bank, HDFC Bank, Reliance, TCS, a lot of the heavyweights, they are all sulking together. But the bigger problem is the advanced decline ratio. Look at this. What an overwhelmingly negative day. In this market, you have about 250 advancing stocks only. Look at that chart. 2,200 declining stocks.
Well, the day belongs to Swiggy.
Yeah.
On a day like
this,
that stock is seeing a lot of traction. It's at the high point of the day. The last time I checked, at least around 15 minutes or so ago.
13% up.
Indeed. Just take a look at that. That as Mangalam was telling us earlier today as well, yesterday everyone was talking about JOMO, that the joy of missing out and saying that I don't want to be part of this. Well, today that's turned into FOMO. For an issue that didn't get subscribed numerous times, the markets are in a bit of a tizzy. And this stock is up close to around 13.5% with the markets at the low point of the day. That's clearly the stock of the day. And, good on all those who got in as well. But, as you all were doing that market check, a couple of the support levels got taken out. The 50,500 mark that Prashant was talking about, that's got taken out on the Nifty. Now, 50,000 is the level that you'll be looking at. 49,000 odd, I think there is a bit of a support that comes in at that mark. So the Nifty Bank has moved lower in the last few minutes or so. Just take a look at that. Nosedive, actually. Around 400-500 points got shaved off just in the last 30 minutes or so, 300 to 400 points approximately. That's the problem. And the dollar index, if you have to see a sustainable rebound, this dollar index needs to cool off from this 106.1 mark. I think if that cools off, then maybe we'll see some stability. Otherwise, it appears in the near term, this has turned into a sell on rise market. Mitesh is back with us. Mitesh, We're at around this 23,500 odd mark. It's a crucial support zone because it's a 200 DMA, and also it marks a 10% correction from the peak. How low can we go from here?
So, really two things. One, I hope that the 200 average hold, because the correction has been relentless and we are also oversold, and now at a very important support level of this 200 average, which you just selected. Just to add to it, there was a gap on the between 24th and 25th of June, which also is at about 23,560 area. So I think that also is an important support. So two supports, oversold levels. I would hope that the markets will give a bounce back, if not a reversal from here, a strong bounce back. And the idea is that one, take profits on your short positions, at least about 75%, and trail your stop losses very, very tight if you already have short positions. If you don't have it, this is not the time to go short. Wait to see how the market reacts from this 200 average level. In case we continue to decline and break below 23,490, then I think, we'll look at further shorting. But for the time being, I think, the idea is that if you have had shorts, exit and take profits over there. And if not full, then at least 3/4 positions and trail your stop loss very, very tight, because this is an area from where some kind of short covering should very logically occur.
Mitesh, I mean, if it doesn't hold, let's hope it does, at the 200-day. Are we looking at a bigger, 23,200 has been, I think that's essentially the 61.8% retracement of the rise from the election day, 4th of June low to the all-time high. That is approximately 23,200. That comes into view then?
My sense is that I think, we might see further declines in case we fall below this, and my belief also is that eventually we will see that happening. The worst case scenario which I'm penciling in is possibly 22,500, which is where that big consolidation happened in the first quarter of 2024, starting from 7th of March all the way till about 20th, 25th of May. So I think, that consolidation is likely to be tested, but markets, as they decline and as they rally, I think they go through a sequence of higher highs and higher lows. So I think, most likely there should be an area where one low can be marked and we can look for a bounce back. But if it doesn't hold, then, as I said, below 23,490, look at least, if not shorting directly in futures, then at least take some put spread positions on the index.
What about the Nifty Bank? That is worrying me, Mitesh, because that's broken the 20, 50, 100 DMA. Now look at the 200 DMA, that comes in at around 49,600. The kind of fall that you see on the Nifty Bank, particularly in the last 30 minutes, makes me a little bit nervous, and I'll be interested to see what the FIs did today, because that's where they have bulk of their holding. What are the levels on the Nifty Bank, support levels?
For the Nifty Bank, I think the 200 average is slightly lower at about 49,725. And if you were to look at the recent historical chart, on the 6th of August, we got a close of 49,748, and on the 14th of August, 49,727. And that's where the 200 average is at. So my bet is that 49,720 should again prove to be a very important support level for the Nifty Bank. And from there, we might bounce back. So the Nifty Bank, the support is roughly about 300 points lower from here. The Nifty itself has already, tested the levels of 200 average, which for me should be an important support.
Got that. And very quickly, Mitesh, we've discussed a lot of index strategies. Stocks, anything you're trading individually, specifically?
On the stock side, so the only sector which I can possibly look at taking some long positions is technology. It's fallen off a bit, but the structure is still slightly better than the rest of the market. So in case the Nifty was to bounce back from these levels, it should be tech stocks which should lead the rally. So buy on TCS with a stop at about 4120 for targets of around 4,200, and the other one is a buy on Infosys is something which I would want to take a long trade. It's still trading in positive in a very weak market. So Infosys is a buy with a stop below 1849 for targets of 1910.
Okay, all right, Mitesh, got that. So playing for a counter trend bounce on the index, and IT could be that play in terms of individual stocks. Got it. We'll come back to you after a bit and take stock of where things are. But speaking of buying, the one stock that investors have chosen to buy on day one, on debut day, is Swiggy. Let's bring in Manglam. Manglam, we're talking about such somber issues over here. Let's talk about happier things, right? What a performance. And I remember the narrative going into the IPO was very negative. It's a loss-making company, not profitable. They have lesser market share than Zomato. So what happened today?
What happened today? I'll tell you two things that happened today. One, Swiggy had always left some value on the table. And second, there weren't enough takers for that value. And today, the twain met. If you look at it, it was well established that Swiggy will be pegged to Zomato's valuation, and there will be this comparison. I'll spare you the financial details, but we all know that, on a market share basis, on, the operating metrics basis, and even the quick commerce basis, Zomato is a few notches above Swiggy and some notches more than few for quick commerce, etc. as well. The question always was at what value? Because when the Swiggy IPO came in at 87,000 crores, the value that they were seeking, Zomato's market cap was close to around 2.3 lakh crores, and that's exactly what it is right now as well. The discount was something that the street was eyeing. The most pessimistic analysts on the street were expecting a 50 to 60% discount, whereas the most optimistic were expecting a 30% discount. At 87,000 crores, the company left enough value on the table because then it was trading at around a 61% discount to Zomato's own market cap. So for a company which has a few notches lower operational metrics and market share metrics than Zomato, why should the discount be 60% lower was the question that a lot of people asked. And those who invested in the IPO saw an uptick at the open itself. That led to a bunch of people who did not invest in the IPO to look at that gap, and as a result of which that gap is now narrowing. If you look at the subscription to the issue as well, it was led by QIBs. HNI's just about 0.41 times. Retail, there was just about enough subscription to the offer that was made. So, there was value left on the table. There weren't enough takers for that, and today the two have met.
This is the great explanation, Mangalam. Thank you so much for that. So at 450, I'm just going back to that price chart that that Mangalam put up. At 450, as per that price chart, the discount to Zomato is 53%. That's really important to look at. This is one. Let's go back to the price chart if we can. Where is Zomato trading? It started its journey at about 370. Now it's closer to 440. So at 450, the discount to Zomato is still 53%. You're still getting Zomato 53% cheaper still getting Swiggy 53% cheaper to Zomato. And that, I think, is something that's really struck a chord with investors. It's a home run. Thank you, Mangalam, so much for that. Let's take that to our first guest on the show. Let's see if we can actually connect and talk about this going forward. In fact, before we do that, earlier today, Rahul Bothra, CFO of Swiggy, addressed the media after the company's listing. Let's listen into some of the highlights from that conversation.
Our food delivery business having turned profitable and at a very good pace of growth. It's still an early stage for India's food delivery industry. If you look at the overall size of the industry, and the online food delivery industry, there is a pretty massive scope for us to continue growing into this larger macro factors that will continue to aid that growth. Talking about the quick commerce segment, we are seeing a pretty robust consumer acceptance to larger categories, larger selection. The platforms that are currently doing a good job on speedy deliveries have to also been able to the consumers are reimagining the category in terms of what they would like to associate or want to purchase from these quick commerce platforms, and we are trying to do our best in terms of giving them more assortment, faster delivery times. So it's an exciting phase of our growth.
Okay, exciting phase of growth, says the management, and the journey has just begun. Let's welcome in Prakash Diwan into the conversation. Prakash, hi, what an afternoon, right? But we wanted to start with the good stuff, the positive stuff, and therefore the first question has to be on Swiggy. We'll put up that chart again, the comparison that Mangalam just pointed out. The discount to Zomato is still a little over 50%, even with the today's price. What would you say? I don't know where this narrative got lost, actually, frankly, while the issue was open, but the market's definitely taking note of it now.
Good afternoon, Sabir. So I wonder why we didn't figure this out when the issue was on, as you rightly said. It's just that I think there's a huge change in belief after the listing and the way it's moved post-listing. There was expectation in certain quarters that it would probably get listed at even a discount to the offer price. And if that were to happen, we would not be talking about it so charitably. But nonetheless, what people need to understand when they buy into Swiggy or Zomato is that they need to give these businesses time to catch up. I mean, you're talking about a multiple of 26, FY26 estimated sales. It's a price to sales, not price to earning kind of a thing. So these are businesses which are expensive because of the moat, because of the time it takes, the money that it takes to set them up, and you will have to just give it more time. That's all I want to say. So when you buy into it, do it with a 3-year perspective, not with just like a listing pop and a catch-up play and all of those. So difficult times to buy into these companies, especially when the market is giving you so many opportunities on much more established large businesses which are available at such discounts. So that's from an investor perspective, yes. But yeah, it's done much better than what all of us anticipated for sure. And congratulations to the team for having such a stellar dip.
Maybe after a couple of minutes, we'll get Mangalam to dive into a very interesting bull and bear on quick commerce that's playing out today, because Macquarie has put out a pretty negative view on not just, Swiggy, but even Zomato. They're, questioning the entire tenets on which the quick commerce valuations have been built. And then there are others like Morgan Stanley who are very optimistic. I thought that was a very good debate. We'll probably get that going in a bit. But before we do that, I think Mangalam's still with us to talk about another stock where the going hasn't been that great. I mean, it's not that much a high, should I say. And that is Sula. Result impact there. But Mangalam, tell us, how the numbers and valuations, the story on Sula now.
The story of Sula is that wine penetration hasn't grown at the pace at which the management was guiding. And this is the second quarter in a row where the numbers have disappointed the street. Remember, going into numbers, the stock was already down about 30-35% from its previous high. And now on disappointing on weak set or weak expectations itself, the stock is down further 5%. The company had given their second quarter update. The stock saw a correction that day as well. And now these numbers have disappointed on that as well. 1.1% decline in the overall revenue, as a result of which EBITDA fell by 24% and the net profit fell by 37%. Overall volumes declined by about 7.6% as well. We've been talking about the schism between mass consumption and premium consumption, and that's visible here as well, where the elite and premium volumes grew by 4.1%. Revenues out there grew by 7%, but mass volumes declined by a lot more, and wine tourism as well saw just a 1% growth this time around. The company cites this weakness to one, transitory slowdown that they saw in urban consumption demand, and secondly, temporary disruptions in Karnataka and Delhi. The street was hoping for some sort of optimism coming by in the second half. Out here, the management has just colored that with a little bit of caution. Why is that? Because consumer environment is still soft, and Maharashtra elections in November 2024 means that, consumption in the third quarter may perhaps not be as good as typically what third quarters are supposed to be for the spirits industry. Management is optimistic, but they've added the word cautious to that as well. The expansions will aid further impetus to H2 FY25 performance, but we're in such market where, you have to exceed expectations, not perhaps miss expectations which were anyway lower.
All right, Mangalam, try to fix the problem. I'm telling you, wine is not bad for health. At least help with the penetration, Mangalam. It'll be a good start, actually. But you're thinking about it, huh?
If you buy, maybe a couple of sips.
Let's work on that, Mangalam, on television. Yeah, cheers to that one, Mangalam. We have something to celebrate also in the next couple of months, so let's look forward to that. Thanks for that. Prakash, what about you? Not about what you prefer, but your view on, on this space, and what do you like from here?
Nigel, while wine is not as bad for health, I think at this rate, even Sula Vinayans is not bad for your financial health. Okay. For the simple logic that I don't know what the latest numbers post this earnings tell us, but the price earning multiple has very softly, gradually become much more reasonable. And it should be in its mid-30s, 35, 36, I'm not too sure, on a trailing basis. But if you look at, the headwinds in terms of a theme or something which is, more secular, I don't see any reason why the wine consumption in a nation like ours will continue to remain so low. And the best part about it is that all the other businesses that have come, and very few of them are in the listed space. There's an addition of a Fratelli, in recent months that's come into the listed space. There is no other way to ride this boom that could eventually happen. But the boom is not like happening immediately. It's a very gradual build-up, which is better for the industry. I am positive on the wines and spirits segment because of the consumption pattern and the resilience that it shows. Wine is not consumed by rural consumers who are struggling, to spend. This is slightly higher end, more urban in orientation, and that will continue. So my sense is you're getting this business and you're buying into it for at least the next 4, 5, 7 years. And from that perspective, it could be very positive.
Got it, Prakash. So you believe it's not too bad for your financial health. So Sula could look fairly okay at around these levels. Prakash, I'm going to do my part on the consumption side. I'll tell you later what. But thanks a lot for joining in and giving us that quick analysis on a couple of these stocks. By the way, the Nifty Bank almost broke that 50,000 odd mark. Just a word on the Nifty Bank. You know, part of the sell-off could be because today as well, we have the weekly expiry. It's a final weekly expiry that we're having for the Nifty Bank. From here on, it will be monthly expiry. So, you know, so that could add some bit of volatility. And the other problem is HDFC Bank broke the 20 DMA yesterday. Today, it's broken the 50 DMA as well. And that's the large cap name in there. The Nifty has corrected, big time from the recent peak. I think it's close to around 9 to 10% right now. From HDFC Bank's peak, I think the stock is down close to around 3 to around 4%, I think. So it's been a relative outperformer just in the recent past, but that one has come in for profit taking. Slip into a short break. On the other side, we'll be joined by Vikas Jain of CLSA. He'll help us out with his take on the markets.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer. A leader.
$320 points down on the Nifty. We're at 23,560. Nifty Bank down 1,000 points. So, you know, if you looked at the market yesterday, it was something similar. There was a 300-point cut. There's another 300 now. So, if anything, things are looking way worse. 23,560. Well, Vikash Kumar Jain of CLSA is now joining us. CLSA India's investor conference kicks off next week. It runs from the coming Monday to Wednesday. Vikash, good to have you on the program before that. So it's an interesting time to hold the conference. If you'd done the conference at the beginning of the year, the mood would have been completely different. And the mood, I reckon, perhaps will be a little different. The questions will be very different as well. Just as a market view at the conference, Vikash, what kind of questions are you anticipating? What's the kind of feedback, and what's your view really as far as you know, how we're doing?
I would beg to differ. I think you know, it's going to be a very interesting time to have the conference, because just our Asia conference in September, the popular complaint was, yes, valuations are quite extended, and that's really what the popular complaint was. And in the last 7 weeks, soon after that conference, in fact, because that was in September, we made a top and then we've fallen 10% as we stand today. So the valuation worry is much lesser. And while we were seeing pretty big inflows in the month of September, October was a complete washout, and it's just not stopped in November. So I think the mood in terms of flows is different. But for the other side of the argument in terms of valuation is less demanding now than what it was in many cases. It was tough to find pockets of okay valuations. Now we can find some of them. So definitely that part of the conversation will be the most interesting one that I'm really looking forward to in terms of discussing. So that's time when we can discuss some bottom-up ideas as well.
No, I want to beg to differ, because I said it's an interesting time, just in a different way. Yeah, it's a differently interesting way time to hold the conference. You know, before at the beginning of the show, Vikash, and I know you do this analysis every month, what local mutual funds have, I think, bought and cash levels, etc. I mean, you would have a real-time sense. What is the cash level with domestic funds? One worry we've heard from many, and this is not just now, actually, back in late September as well, that with this, with so much of FII selling plus primary markets being so hot, local sort of, you know, funds to match up and to sort of soak up all of that perhaps is running low. Could you give us a sense of where we are at on that count, industry-wide?
See, I think, yes, clearly that has got depleted for sure with both primary market activity as well as what FIIs have been doing in terms of selling. But what we need to also appreciate is, see, this is the part which is easily available. What we need to also look at is how foreigners might be after this kind of selling. See, there was a significant proportion of funds who were not overweight India at the end of September. A lot of them, that number would have also swollen. Now, there are reasons why we saw the selling. Those reasons, in a way, incidentally, we had put out in a report early October where we said, IPO frenzy at the time when China was awakening. So we had kind of got worried about those reasons around just at the start of this decline itself. Some of those reasons are getting addressed in itself. For example, I think maybe one or two issues left, but we are getting towards the fag end of this, the bigger spurt that we saw in IPOs and the overall excitement being relatively low. A lot of, newer issues maybe not that quickly to come. So that one pressure is lesser. With whatever's happened in the US, the China part of excitement has automatically reduced into a period of uncertainty, at least till we see when Trump, after the inauguration, what he has to say. So some of those reasons which led to the initial part of the October correction are now, and we were staring at a weak set of earnings. We're coming to a close of that earnings. So the market has fallen 10%. But if you imagine what all it has digested in this 10% fall, I would say 10% isn't that bad an outcome. Yes, and sentiment, by the way, our proprietary India bull bear sentiment was at an extreme bullish point at the end of September, which was the other reason why we started getting worried on the market. That is now, although I've not checked the more recent numbers this week, but it is more clear, more towards the bearish point, although it was not at the extreme bearish point yet.
Yes.
So that's the other part. So sentiment has got addressed. The China competition looks lesser now in terms of flows. We've digested the earnings decline that we saw during the results. So I would say to some of those extent, a lot of that has been digested by the market with much less damage than what, if I would have told you that the FIs are going to sell $14 billion in the next 7 weeks, most likely you would have given a much worse outcome than what we are at today.
Yeah. Vikash, hi, great to have you on, and a good day actually to be having this conversation, as good as any. So I'll tell you what, over the last 6-7 weeks since we've been in this fall, we heard 3 major reasons why FPIs could be selling India. One, as you mentioned, was this whole excitement around China, and that you explained it's kind of fizzling out now with Trump taking the White House, and we'll see what happens. The second reason that we've been hearing is money going back to the US market. The home market is looking great, and look at what's happening to the dollar, and Trump is going to make America great again and all of that. So the US market is the best to invest, so therefore pull money out of a market like India. And the third reason we've been hearing is India's going through an earnings slowdown. Address reason number 2 and reason number 3 and tell us if you think they're valid.
No, so see, all of them are valid. Reason 3 is a bit self-inflicted. Because if you see government discretionary expenditure in the first half has been very low. It's down some, I think, 7-8% if I remember correctly. For them to reach the target that they have set in the budget, they basically need to spend at a 14% YOY growth in the second half. So I think that reason partly is self-inflicted, partly also, RBI has been much more focused on inflation. So there are ammunitions for the government to do certain bits to improve that part, which is the third reason. Some of it from the government side at least can be addressed. The second reason I would say is a relatively more like a last 2-3 week outcome, more as chances of Trump winning increased and finally the news flow hit. So then with the dollar rallying the way it is going to be tough for EMs to get flows or inflows. And most likely EMs are seeing outflows, EM funds are seeing outflows. And then there is a tendency for fund managers to sell where they're sitting on profits. That is what is impacting India. That's the one part which I would say the surprise of that is also getting digested now. We are going to be in a bit of a 2-month period where we will not hear anything concrete from a president who has historically been very difficult to predict. Yes, there has been a rhetoric going into the election, but what exactly will be his policy-making style this time on is, still not something that we can be so sure of. So I think we could get into a 1.5-2 month period where perhaps some of these incremental negatives get settled down to an extent. And there's a little bit of a calm from a macro news flow perspective, which isn't going to be that bad for the markets, in my opinion.
All right. Hi, Vikas, and good to see you in, and all the best for the conference. Just look at a note that came in around 90 minutes or so ago from DAM Capital, and they're saying that the mutual fund industry is sitting on liquidity of 5.6%, which equates to around 1.7 lakh crores. So it's come down from the previous month, but still pretty healthy. So we'll have to see their plan with regard to deployment. Vikas, I recall a couple of months ago when we chatted, and you said that you're moved out of select infra capex heavy themes, more into IT. As of now, what is your top theme that you're looking at? Oil prices have cooled off a little bit. The problem is there's a slowdown on the domestic front as well. So the top theme that you'll have.
Sure. So, I think sadly, I did run with that IT overweight for 6 months, ran it pretty well. But sometime about a month ago, we went back underweight. And I obviously underestimated the Trump impact. And that's kind of, if you think about it, whatever's happened post the president coming in, it looks like it's good for tech, it's good for dollar. that's the way to play that becomes the tech side of things. But my sense is that there is an initial kind of an excitement to this trade, and then there's going to be cool off. So that's why I would believe that some of that IT excitement will fizzle out, and that's a sector which we've started liking less in the last month or so. The areas that we are, if we think about all of this, the uncertainty that the president brings in might make us delay the rate cuts. And that's where I think if the domestic side is addressed, then some of the banks might start looking much better than others. And they are one area which are not that extended in valuations at this point of time. And where the growth part of the premium is much lesser. Since you're worried about growth in India, I think anyways the premium on growth was much lesser on many of those stocks. So that's one area which looks like a good place. Plus, towards the last 6-8 weeks, there's anyways a tendency for laggards to do very well last 6-8 weeks of the calendar year. I think that's where banks fit very well. The call that we took on, instead of IT, we went overweight commodities, was a bit to do with China. Now that is where things have to be seen from a slightly longer term perspective. And this is the answer of that in terms of what happens clearly in terms of Chinese policy making and the US policy making impacting China is something that we will only come to know in February or so. So there is a little bit of a period of a lull over there, because only when the first few weeks of Trump policy making is visible do we realize if it's a deal making kind of a Trump that we are seeing, who's using the threats of tariff to make a better deal, or it's really going to be that extreme tariffs that we talk about. So that's the bit that we do not know for sure. And that's something which is very difficult to predict. But that's, I think, what is going to be the defining theme of next year. Because, that will have a follow-on impact on India as well in terms of flows, the way that kind of comes up.
Because running out of time, so just a quick one. Reliance, you've kind of come out with this big report, and you're saying it's a great price to buy. You're saying buy right, sit tight. I think that if I got that title correct. So in 45 seconds, 60 seconds, summarize that thesis for us on Reliance. And there are always going to be, whatever the view is, overall market, etc., there are always going to be, from your coverage universe, stocks which have fallen enough and are looking attractive fundamentally, if one is willing to wait. So what are the other, say, 3-4 names, if you can outline for our viewers? Published stuff. Yeah.
So Prashant, we can't be stock specific, but I'll just tell you that is one report that you spoke about, but we have a bigger report where we are discussing the solar space and that as an opportunity. And that's the report which we have kind of come out with, and that is on that same conglomerate, but and their solar foray. In terms of names, we have a India-focused portfolio which has a reasonably good track record, and I think we have about 11 or so large and liquid names because it's a large cap portfolio. That's something where we, like I said, we are overweight banks, we are overweight commodities selectively, we are also overweight, insurance. So those are the sectors that we like in general.
Okay. All right. We'll leave it there, Vikash. Thank you very much for joining us here on CNBC-TV18. Good luck with the conference next week, and hope to speak with you maybe post the conference. You'll have much more in terms of insights and feedback from investors who are going to be here to attend that. Thank you very much. We'll take a quick commercial break here. We're going to come back, do a quick check in terms of what's happening with dealing rooms. Nimesh is going to be joining us for that. And after that, we'll get you some short-term trading ideas with the technical experts. Stay tuned.
A visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on
Welcome back. At least as of now, we've defended the lower levels both on the Nifty and the Nifty Bank. Thank God for small mercies, it seems, because the 200 DMA at least has got protected. But Nimesh, he's got a proper insight into what he's picking up on the street. Nimesh, what a day. You know, from the word go itself, there was selling. And as we speak, we're at the low point of the day. What's the feedback?
Well, absolutely, Nigel. You know, today is a brutal day as far as the broader markets are concerned. The index is down 2.5%, but there are a lot of individual names which are down 10, 12, 15, 20% as well. So clearly there is capitulation, so to speak, in the broader market stocks today. And we spoke about, you know, the crucial technical levels, right? Yesterday also we discussed about 23,800 as an important level. And the moment that got broken on the downside, we saw big selling across the board, and that's playing out in the broader markets today. From an institutional activity point of view, Nigel, the feedback is there isn't a very large FIS selling, but it's also the fact that the domestic support seems to be much lesser in today's market. And what's more important is the sentiment is clearly, you know, been very weak now among the retail and HNI investors, because of late none of them are making money either in trading or in the investment portfolio as well. So that's the overall feedback. But again, you know, from a technical point of view, Nigel, while everyone is looking at 23,800 as an important level, on a closing basis, the feedback is if the Nifty is below 23,780, which probably we are right now, there could be further selling in the broader market stock. So that's something to track over the next couple of days. Having said that, the PCR looks a little oversold, close to that 0.7, and normally we've seen, you know, around 0.6, 0.7. Market tends to bounce back. We have a truncated week this week. Also next week we have a midweek holiday. So the activity could be on the lower side, but a pullback, you know, a pullback from an extremely oversold levels is not ruled out. But clearly the sentiment has changed. And now, you know, the feedback is maybe from a retail and HNI point of view, any pullback will be looked to sold into. So you might see a bit of a pullback next week because we're extremely oversold. But again, that may get sold into. But from an institutional active point of view, well, the Nifty, Bank Nifty, every indices are looking so oversold. But there is no large selling is what I understand from larger FIs today.
Got that point, Nimesh. Yeah, let's see how this goes. By the way, thank you very much, Nimesh, for the update. We did break intraday. There was a breach of the 200 DMA as well. The 200 DMA is around 23,530, 34 thereabouts. Intraday, this market has gone down to test 23,500, that extreme low that you're seeing. That is around 23,503. And there's a pullback, but yeah, we are precariously close to the 200 DMA. And the bulls will want to at least hope that that level holds. But in a market like this, what are levels anyway?
I don't know whether the tail is going to, wag today. And tail enders, so to call it in cricketing parlance, because as we speak, the Nifty Bank in a matter of 7 to 8 minutes has recovered 250 points from the low point of the day. It plays out the weekly expiry as well. So I don't know whether the tail has got some fight in it. At least as of now, the Nifty has defended the 200 DMA. Mitesh Thakkar is back with us. Mitesh, how you placed right now? If you were short in the index, will you carry your shorts? And also if you could tell us a couple of new picks that you have.
So Nigel, I'm not short. We covered around the 200 average. We did briefly dip below that. But again, the idea is that we are extremely oversold and this market is close to important support levels. No point holding on to short positions. In case there's a gap down tomorrow, we can always take a fresh long position. And I've been advocating, trading or, looking at some long positions on the technology side. I think that's a sector which has held out very nicely in this decline. So I think that's where I would be looking at taking long positions. So we had earlier Infosys as a recommendation. Now I think I'll suggest and TCS as a recommendation. Now I think I'll suggest HCL Tech as a VTST. Keep a stop at 1855. Look for targets of 1880 for tomorrow. In case we start getting past that, we might even look at higher levels. And the other one is a VTST on Bajaj Finserv. While the structure is weak here, the stock is at very important support pivot of 1655. So we'll take a stop below 1650 and look for a target of 1690.
Got it. Okay. All right, Mitesh. Got that. By the way, the Nifty Bank, that's calling for attention. Yes, it's the underperformer today. Yes, it's been seeing a lot of selling pressure. But I think the final weekly expiry, it seems, Prashant, there's a bit of a fight that's coming in there. 300 points in a matter of around 10 minutes, I think, or so. It went down, breached that 50,000 odd mark, making a fight back. And that's good because for the Nifty, now we're closer to around 23,600 odd. Let's see how the last 10 minutes go.
I don't know if those guys right at the low, whether they are buyers or whether they're people just covering their shorts. Whoever they are, or if they're buyers especially, I would say salute to them for going out and showing the faith at this point in time.
What you need to do is just keep your SIPs going. You're
Absolutely.
in for the longer haul.
No worries.
Well, I think, by the way, today is also the day, if we close around these levels, where, the cut on the Nifty from the all-time high is going to be in double digits. So it's 10% plus now. Till yesterday it was 9 point something. You're 10 point something now with the market at about 23,600. For the Nifty Bank, it's almost 8% fall. And for the mid-cap and small-cap indices from the highs, it's about 11%. Actually, it's about 11.5% for mid-cap and 11% for the small-cap space as well. So, the flows number should be interesting. I mean, what Nimesh was saying, that there's no large number from FIIs. I mean, you need that for a day, 2 days, 3 days, because that will give sort of some courage, some belief that maybe you're at the fag end of that big FI sell-off phase. It's been one of the largest ever that we've had over the last 10 years, maybe more. So if that starts to come through, I think locals perhaps who've of course bought but are getting nervous will get some more himmat, so to speak. Well, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. This is tomorrow, November 14th. We start at 10 a.m., a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only here on CNBC-TV18.
Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Well, thank God for the small mercies. 23,600 is back here again. We almost went to around 23,500 just around 15 minutes or so ago, and we have pulled back. And the Nifty Bank, that's the one that's calling for our attention. After breaching the 50,000 odd mark, it's popped up close to around 300 points from those. I think from the lows of the day, it's up nearly around 350 points. A few stocks that should come up for you. Kotak Mahindra Bank was down 2.5%. Now that's down close to 1.5%. SBI as well has cut its losses, and big boy HDFC Bank, I think, that was as well is fighting back a little bit. Mayuresh Joshi is with us. Mayuresh, not asking you about individual stocks. You give us your idea. The markets have corrected 10% from the top. I guess it's a good time to start deploying some part of the money that you were sitting on. If you were to give me one or two stocks that you have conviction on as a house, which ones would they be?
Afternoon, Nigel. I think a couple of areas that we are probably looking at. One is obviously the agrochemical space, where the numbers have been very good. And a stock within this space, Paradeep Phosphates, has given very good set of numbers, Nigel. So the top line growth has been exceptional. The production and sales volumes have been up 5 and 7%. The EBITDA margins for the previous quarter was at 11.4%. And for the first half, at 9.7% compared to 3.7%. Now, what is really transpiring is the Kharif season has been good. The expectations of the Rabi season is equally good. And therefore, farm gate prices, as far as their key products are concerned, whether it's DAP, whether it's urea, the backward integration that they've got in terms of ammonia and the phosphoric acid components, really augur well from an earnings perspective. Net debt to equity has come down to 0.82 as we speak for the end of this quarter. And therefore, I think the earnings growth looks on a very solid trajectory for a stock like Paradeep. The other one, obviously, I think within the larger basket of infrastructure stroke manufacturing, our own sense is that have a look out for both these numbers, KEC as well as others engineering. KEC, decent set of numbers, very strong order book. Management is very, very optimistic, not just in terms of the internal T&D segment, but the overseas T&D segment as well. Margin performance and execution would be top notch. Similarly for Azad, I think strong delivery in terms of execution, the huge market size that energy, aerospace probably provides, and the critical components that Azad provides to the industry as a whole. They're very, very confident in terms of notching up significant amount of earnings growth, significant order wins from Mayor Dukes. You've got significant order wins coming from the previous quarter as well. And therefore, I think a part of these market segments, in our opinion, can hold up as far as earnings are concerned.
Azad, Paradeep, as well as KEC. Got that, Mayuresh? Request you to stay with us. We'll just wind down the markets and we look forward to your views on markets forward. For the time, we just want to pull up a couple of intraday charts. Manappuram Finance should come up for you on the screen. The stock was down close to around 2% when we started off the show. In the last few minutes, it's seen a big bounce from the lows of the day. So I think you should pull up Manappuram. Vare Energies as well, that stock as well has seen a big correction from I think 3,700 rupees. It's come down to around 2,750 this morning. And from the lows of the day, it's seen a bit of a bounce on that one as well. So Manappuram, Vare as well has seen a bit of a bounce in the last few minutes. And from the other FNO names, you have SBI Cards, big underperformer last few years. But that stock as well has popped up. But let's wind up the markets for you then. Intraday basis, the Nifty went ahead, breached the 200 DMA, but on a closing basis, we have managed to end somewhere around that. Accounting for averaging, I think we'll be a little bit below that 23,600 odd mark. The Nifty Bank, the final weekly expiry played out today. And on that one, it recovered close to around 400 points from the low point of the day. The problem is, even after the 400-point recovery, well, it still goes home with a cut of around 850 points. The top losers on the Nifty, you had Hero MotoCorp. UBS joined us earlier today, and they have a bit of a negative view on this stock in particular. It was down 4.5%. Hindalco, 3.5% lower. Mahindra & Mahindra as well did see some selling. Few stocks that ended in the green. Britannia, 0.5% higher in today's trading session after seeing a clonk of more than 10% in the last two sessions. From the broader markets, JNSC, Strides, Metropolis, NCC, frontline names losing 5 to around 7% of the market capitalization. And on the flip side, Alcom went ahead. I think they upped their guidance. They've given a fairly healthy outlook for the remainder of this year. So that stock went up with a gain of around 1.5%. Well, on that note, though, we'll have to wrap up on this edition on Closing Bell. But you stay with us because Markets Forward comes up next.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है। तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है। ये RBI
डेफिसिट 3% से ज्यादा हो गया है, जो आपकी लोन लेने की क्षमता को इम्पैक्ट करेगा।
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। RBI
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट था।
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो RBI की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा मैं कि अभी जो निवेश है फॉरेन फंड का, FDI का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप क्या आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आपको
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देगी, बंद नहीं होगी, और ये वेलफेयर स्कीम गाडली महीने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
अभी 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है
Broad-based selling on Dalal Street. Market falls for the 5th straight day. Nifty ends at a 5-month low, 8 lakh crore rupees in investor wealth wiped out. Broader markets underperform.
Good. A muted debut for Swiggy on Dalal Street. The stock lists at 8% premium, but then goes on to see strong buying. The food delivery app's market capitalization crosses 1 lakh crore rupees on day one, quite similar to what Zomato achieved on listing day.
NTPC Green will launch its 10,000 crore rupee IPO on the 19th of November. Offer of shares in the 102 to 108 rupee price band. NTPC Green's offering will be the third largest IPO of the year after Hyundai and Swiggy. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as we look forward to the next trading session. I think with the fall that we are seeing, people are looking lesser and lesser to looking forward to the next
next holiday, next market holiday, right? Just hoping it's shut so that the fall stops.
I'm Prashant. With me, my colleague Surubi, and of course, we'll discuss everything you need to know with, of course, our experts as well. Surubi.
Absolutely, Prashant. Lots to cover today. And for the bulls, it's been relentless, right? The pressure, the sheer ferocity and the momentum of the fall, which was on display yet again today, with a lot of levels coming and going during the course of the day.
Yeah, on the Nifty, even though we're at the 23-something index now, but 300 yesterday, 300 today. The adjusted fall is over 300 points. Once again, 324 points. That is very, very sharp and very, very quick, the price damage really. I just want to take a look at what the indices have done from the all-time highs now. It's in the cut on the Nifty is in double digits now. So 10 point something. Bank Nifty is about 8% lower from the all-time highs. Mid-cap index has lost 12 and the small-cap index is down about 11% from the sort of all-time highs. So that's what today's and yesterday's fall have done. We sort of pushed these cuts in double digits on an index level. Nifty, by the way, sell-off today meant that we hit at least intraday the 200-day moving average, and we've not ended very much higher as compared to the 200-day. We're right there. We're actually at the 200-day. Bank Nifty has broken 50,500. There was some expectation that it'll hold, not to be. And of course, like yesterday, the rise in the dollar continues. And the voices are growing that it's stretched. It's just too much and very, very quickly, and that may be true. But during the course of Asian session, we actually pushed past the 106 levels on the dollar index. So again, something to watch out for when we come back tomorrow. Surabhi.
Absolutely. And today's fall was once again a very well-rounded fall, so to speak. It was cutting across sectoral lines on the Nifty, barring one or two very small, specks of green. For instance, an NTPC, a stock that we'll talk about as we go forward. Almost everything was down. Banks were down. IT stocks couldn't really withstand the onslaught of the fall. Metals were really weak. A lot of big metal names were lower, as were auto. So really nothing in the market was spared in that sense. And even if you're looking at market capitalization, the mid-cap and the small-cap arena had it even worse because those indices were absolutely pummeled. And throughout the course of the day, the market breadth was extremely negative. I mean, it was so negative that if you look at the chart, the advance decline ratio, you'll see less than 250 stocks advancing and well over 2,000 odd stocks on the declining side today. So extremely, extremely negative day with a lot of questions remaining unanswered with respect to the FBI selling, what happens now, and when the buyers eventually come in. Well, we'll try and get to all of that and more over the next 20 minutes. Lots of developments that we will track, a lot of the top corporate voices, some of the earnings that came through today. So we'll keep you completely up to date. Let's run you through the lineup as well. Vivek will first start with the movers and shakers. Most of the stocks moving on the way down today, so we'll get to it in just a second. In terms of individual stock names, we'll be looking at, of course, Swiggy's debut on the bourses. Also in focus, Punjab Housing Finance and Reliance Industries. That's PNB Housing Finance and Reliance Industries. We will tell you more about these stocks. And then finally, the events to watch tomorrow. But first up, let's head straight over to Vivek to dissect today's fall, the anatomy of a stock market fall. Vivek, over to you.
Well, good afternoon. And clearly, more laggards than gainers today. Really had to struggle to find a list of gainers in broad-based market sell-off. But a few names do stand out today. First on our list today in the list of gainers, KNR Construction. Good Q2, multiple one-offs, arbitration claims that the company has booked in this particular quarter. But nevertheless, the stock ended higher by over 7.5%. Select pharma names. Broad-based, you did see selling in the pharma index, but some pharma names actually stood out today. So names like Piramal Pharma, names like Suven Pharma, Zydus Life, seeing a bit of a bounce back. Med Plus, Alchem Labs. These stocks actually gained in the session today. One more stock, very interestingly, overall telecom pack has been very weak in the last few trading sessions. But Bharti Hexacom, managed to stand out today. Bharti Hexacom, one of the top gainers, in fact, the top gainer as far as the NSE 500 is concerned, just 3% higher. And it was the top NSE gainer, indicating the kind of fall that we saw today. But list of laggards, you alluded to quite a few of them. We'll go through the plates in terms of just seeing the breadth of the market fall, the entire metal pack. Hindalco, Tata Steel, seeing complete big sell-off. Banks, most of the banking names, in fact, all of them, in fact, were down and out in the trading session today. Bandhan Bank down 3.5%, IDFC First Bank, Federal, all of them seeing selling pressure. Pharma stocks, some stocks gain, but overall you did see quite a bit of selling as far as the healthcare names were concerned. Look at Biocon down 3.5%, Granules India down almost 6%, JB Chem, IPCA, all of them. Some of these stocks have moved higher in the last few trading weeks, but saw significant selling pressure. And one pocket that has seen relentless selling pressure is actually the auto as well as the onto ank names. Look at Hero MotoCorp, Samvardhana Motherson. Some of the falls, from the recent highs has been quite severe for the entire auto pack. Overall, a list of very lackluster trading session, and the list of laggards far outpacing the list of gainers today.
Okay, all right, Vivek, thank you very much for that. Indeed, more red than green on the screen for sure. Let's go across to our experts on the show today. We have Mayuresh Joshi of William O'Neill joining in, as well as Shrikant Chauhan of Kotak Securities. Gentlemen, good afternoon. Good to have you both on. Shrikant, first to you. Now, in a market like this, levels stop having much meaning, right? Because the velocity and the momentum of the fall is so severe on the way down. Today, we tested the 200 DMA on the Nifty. What have you made of the day, and what's the advice?
Yeah, good afternoon, Surabhi. Good afternoon, Prashant, and everyone. I think, I was expecting some rebound after hitting the levels of 23,500, 23,550, where the market was having the support of 200 days simple moving average. But it was missing, the way the market recovered, it was not at all encouraging. But while looking at the option statistics, one thing is very clear, that the markets are still not oversold. And I think one more leg of correction, or maybe one more sell-off, it's still pending. So we may see the levels of maybe 23,200 or 23,300 next maybe 1 or 2 days of time. In case if there is any pullback, then 23,800 is going to act as resistance for the market. But I'm of the view that in case tomorrow, if we see the market is dropping to the levels of, let's say, 23,200 on the day of weekly expiry, then there we should look for taking some contra bets in the market, because then the market would turn extremely oversold. For the Bank Nifty, there also we saw consistent sell-off. It has broken important level of 50,000. It is also very close to 50-day, 200-day simple moving average. But there also I'm expecting 49,000, 49,200 sort of levels. So one more correction, one more leg of sell-off is still pending. That's the overall view.
Okay, and what you're saying, Srikanth, is if in this current leg you go to get down to 23,200 or so, then you maybe take some contra trades, essentially, right?
Yeah, Prashant, because then the correction will, it's like when the way market has fallen from the highs, we never saw any meaningful pullback from the lower levels or from any levels. So after hitting the levels of 23,000 or maybe 23,200, I'm expecting sizable pullback in the market. But for that, yes, we need to bear 500 points sell off in the near term.
Okay, well, Mayuresh is coming to you as well. But let's start talking about individual names, right, which were in focus. Swiggy, of course, was the big one, listed with a small 5% premium. But then, of course, interest picked up. And how? Through the course of the day. Mangalam is here. He's been wrapping up the Swiggy story for us. Mangalam, by the end of it, pretty good.
By the end of it, fairly good. And if you put in perspective the way the markets behaved and the Swiggy stock behaved, it would be an incredible debut, as one should say. You know, pretty much similar to Zomato on listing day. Both the companies went ahead and hit that 1 lakh crore market cap. But what wasn't similar to Zomato for Swiggy at the start itself was the discount which was offered at the issue price itself. There weren't many takers from the HNI pack and the retail investors for the Swiggy IPO. You know, the IPO itself was subscribed around 3.5 times, most of it led by the institutions itself. So as soon as, the stock listed with a mild premium as against expectations of a discount at the open itself, fear of missing out kicked in, and as a result of which it brought with it a lot more buyers itself. Swiggy at 390 was offered at a 61% discount to Zomato, which some on the street felt would have been a little more than what they were expecting to pay for Swiggy. And as the stock ended higher, closer to 450, it's at a 53% discount to Zomato. On all parameters, Swiggy, of course, is a notch below Zomato, but all of that was in the price. Now the only question is, at what level of discount versus Zomato's own market cap and valuation does Swiggy settle from here on? The two key parameters to watch out for Swiggy going forward, one would be how the dark store expansion in their quick commerce business pans out, and the second part is how the operational performance of the food delivery business pans out as well. Both of these places, the management seems fairly, positive. Now it's their duty to walk the talk.
Our food delivery business having turned profitable and at a very good pace of growth. It's still an early stage for India's food delivery industry. If you look at the overall size of the industry, and the online food delivery industry, there is a pretty massive scope for us to continue growing into this larger macro factors that will continue to aid that growth. Talking about the quick commerce segment, we are seeing a pretty robust consumer acceptance to larger categories, larger selection. The platforms that are currently doing a good job on speedy deliveries have to also been able to the consumers are reimagining the category in terms of what they would like to associate or want to purchase from these quick commerce platforms, and we are trying to do our best in terms of giving them more assortment, faster delivery times. So it's an exciting phase of our growth.
And it absolutely is the way quick commerce has been exploding, and what a debut for Swiggy on the street today. Mayuresh, indeed, you have to hand it to the company for pulling off a 17-18% pop in a market which is so weak, right? But what do you think? What has worked? Are you convinced? Because going into the IPO, there were a lot of question marks about how they have lesser market share than Zomato and how they're still not profitable, so on and so forth.
Afternoon, Survi. No, I think the debut has been stellar, to say the least, in a market like this. But again, two things, as Mangalam also pointed out. One, I think in terms of their expansion plans itself, as far as dark stores are concerned, is very critical for the entire operations, whether it's food delivery or quick commerce. And that is going to be a base case factor in terms of how growth dynamics will be laid out. Obviously, I think its competitor Zomato was already sitting on a pile of cash, and they have done a QIP there as well. So is competition intensity going to increase, both in terms of dark store expansions, in terms of the competitive product pricing, is something to be watched out for. Again, I think a lot of their unlisted peers, something like the Zepto, which has also raised money in the recent past. And let's not forget Reliance Retail. They've already done a pilot with a few cities as we speak. And therefore, as Reliance Retail might also enter this space in the next few quarters quite aggressively, how do the fee parameters play out and how do they ultimately play out on numbers is going to be interesting. Obviously, for Swiggy, the quick commerce segment has yet to evolve. Blinkit evolved wonderfully well for Zomato over the past few quarters. So that is going to be a key factor in terms of consolidation. So stellar debut, but I think wait and watch how the numbers probably play out in the next.
Okay, all right, got that. Mayuresh, thanks for the view there on Swiggy. Let's quickly move on and take stock of PNB Housing. Now, the stock here was down almost 5% today. And this after sources have indicated to CNBC-TV18 that Carlyle is looking to sell over 9% of its stake in the company. Abhishek is here with more details. Abhishek?
We did see a block deal in trade today with respect to PNB Housing. Sources do tell us that Carlyle, or Quality Investment Holding PCC, was to sell part of their stake in PNB Housing in trade today. The banker to the deal is only Morgan Stanley. Now, via the term sheet that we had access to, the offer price was about 939 per share, which was at a discount of 4.25% to yesterday's closing price, and the deal has taken place at about 943 per share. So 2.45 crore shares were on offer. That is representing about 9.4% of the stake in the company. There is a lock-in period of 60 days post this transaction for the existing shareholder. Now, Quality Investment has held about 19.87% stake prior to this transaction, and post this transaction, they will hold about 10.5% stake in the company. This deal has been priced 21% more than what the previous deal in PNB Housing did take place. In August, General Atlantic made a clean-out trade at about 775 per share. In June, Asia Opportunities Fund as well as General Atlantic had sold about 4.2% stake in the company for a price of 775. Back to you.
All right, Abhishek, thank you very much for that. I just want to highlight Reliance as well, because there was a note from CLSA. And they were pretty bullish call on Reliance, saying that the price has fallen, is the right zone now. So let me go across to Sonal, who's going to outline that, and then we'll go across to Srikanth and Mayuresh. Sonal, take it away.
Well, that's what the report says. Buy right and sit tight. And they think right now is the time to look at Reliance Industries because it has fallen sharply from the highs of the stock price as well. They say there has been a lot of excitement that we've seen in the recent solar listings, right? And that is something that could be the next trigger for Reliance Industries as well. Their soon-to-be-launched solar PV gigafactory. But that has been ignored by the market after Q2 earnings because that has been weak. They have been valuing Reliance's solar business at $30 billion and the overall new energy business at $43 billion. However, it is not reflected in their target price currently. They say the stock is trading within 5% of their indicative conservative valuation, which assumes a nil value for new energy business. So if we add to that, there's a further upside that they look at the stock as well. They see an attractive opportunity to play triggers through 2025 after 3 to 4 months of lull that we've been seeing. The triggers would include retail recovery, ramp up of air fibers, and also potential Jio IPO. So these are some of the things that you should be watching out for when it comes to Reliance for 2025. And there will be a short period of lull. Growth in the retail business could continue to be lower, but they are very positive on the stock. At these levels, they have an outperformed rating with a target price at 1650.
All right, Sonal, thank you very much for that. Srikanth, how do you see this one, Reliance?
See, for Reliance, it is down 25% from its high. And whenever we see such type of correction in any large cap company, most of the time it becomes a very strong contra candidate to buy for. But yes, it has broken all its important levels. So the next level to watch out for would be somewhere between 1200, 1225. So around those levels, we can expect a rebound because then it would be the maximum and the to the extreme oversold zones. So from there, we can see a pullback. But yes, at these levels or maybe around 1200 levels, certainly it's a buy. And on the index also, if we see the market, then there also we are expecting rebound from maybe 23,000, 23,200. So I think, yes, certainly we should look for adding this stock if there is any further more correction, at least 2 to 3% from current levels.
Okay. All right. Prices coming into that zone. Shrikant, thank you very much. Appreciate you joining in. Mayuresh, appreciate your time here on CNBC TV18 as well. Thanks indeed. We are going to slip into a quick commercial break here. We'll leave you with some key market voices we had during the course of the day. See you on the other side.
Valuation worry is much lesser. And while we were seeing pretty big inflows in the month of September, October was a complete washout, and it's just not stopped in November. So I think the mood in terms of flows is different, but for the other side of the argument in terms of valuation is less demanding now than what it was in many cases. It was tough to find pockets of okay valuations. Now we can find some of them.
I think there's clearly more downside to this market, maybe another 10% easily. It's not only just earnings that are disappointing. Our valuations are definitely very high. I think the real challenge is what happens to fund flows over a period of time. While India has benefited both from domestic and domestic flows a lot, and foreigners have been selling, the view has been that India and China are the only two markets, and China will continue to disappoint, so India will continue to benefit.
Indian market is expensive, especially in the context of emerging markets. And as we see things, at global geopolitical stage, plus global volatility has increased, I think that also brings again focus back on valuations for India. In terms of key sectors, if you look at, there are sectors who are, at life high or 5-year high valuation, and there are sectors which are trading below averages. And so to that extent, I think that dispersion in performance, I think would continue. We would see some catch up in sectors where the valuations are more reasonable.
वो हम लाने का ही हमारा मकसद है, वो टारगेट में हम कामयाब होंगे।
अगर आप लोग जीतते हैं तो सीएम कौन होगा सर? आप होंगे?
हम बैठेंगे, हम उसमें क्या है, सीएम का क्या बड़ा, हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Welcome back. Let's get to the top corporate voices of the day. BEML is targeting over 20% revenue growth, 100 basis points expansion in the margin for FY25, and it is aiming to end the fiscal year with an order book of 18,000 crore rupees.
Acme Solar made a weak debut on stock exchanges today. That was the other one, apart from, of course, Swiggy. Management told CNBC TV18 that the company has operationalized 1.8 gigawatts of capacity last year. And FY26 will see the effect of partial capacity addition. Adds that bulk of capacity signed will come online in the next few years.
Samvardhana Motherson Management says capex guidance remains unchanged at 5,000 crore rupees, but the margin error of 10% is now revised to 5%. Adds that the bulk of synergies from inorganic businesses will materialize over the next 12 to 15 months, and the measures taken related to non-automotive business will aid growth. Okay, so with that, we are down to the final leg. As we wrap out, let's bring you all the key events that you need to watch out for tomorrow. Over to Abhishek for the same.
Well, Surbhi, to begin with, RBI will be giving out the business momentum details of the banks in India. Last time, remember that the deposit growth outpaced the loan growth, or let's say loan growth had fallen below deposit growth. We need to watch out how will that continue or not. They'll also give out Forex reserve data. Last time it was around $682 billion. So how that moves will be seen closely. With respect to some stocks going ex-dividend, we have Aptus Value, Astral, Container Corp, India Metals and Ferroalloys, as well as Page Industries. There will be stock split tomorrow, Contil India as well as JTL Industries. With respect to listing tomorrow, we have Niva Bupa, which will get listed on the bourses tomorrow. The last leg of result season tomorrow, Bharat Forge, Hero Moto, Grasim, Delivery, Nazara Tech, as well as the fact that Glenmark Pharma, Honasa, HL, IPCA and the gold financer Muthoot Finance, will it end with a gold finish? Let's see. Back to you.
Well, that's a nice one, Abhishek. Thank you very much for that. Well, it's a wrap on this edition of Markets Forward from all of us here on the team. Goodbye. Thanks for staying with us. But news and updates follow after a quick break.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the top headlines that we're tracking for you this evening. The sell-off intensifies on Dalal Street. Nifty hits a 5-month low and is down 10% from record levels. 20 lakh crore rupees in investor wealth wiped out in the last 3 sessions. US President-elect Donald Trump picks Elon Musk and former Republican presidential aspirant Vivek Ramaswamy to lead a new department of government efficiency, aims to provide advice and guidance from outside the government to help dismantle bureaucracy, cut wasteful expenditures and restructure federal agencies. Muted debut for Swiggy on Dalal Street. Stock lists at an 8% premium but sees strong buying thereafter. The food delivery app's market cap crosses 1 lakh crore rupees, similar to what Zomato achieved on listing day. SoftBank holds on to its 8% stake in Swiggy, did not sell shares in the offer for sale. India head Sumer Juneja says Swiggy has significant headroom for growth, also signals potential stake sale in Ola Electric in a thoughtful and gradual manner once the 6-month lock-in ends. NTPC Green will launch its 10,000 crore rupee IPO on the 19th of November. Shares will be offered in a price band of 102 to 108 rupees. This will be the third largest IPO this year after Hyundai India and Swiggy. Israeli army continues to pound Gaza and Lebanon, killing close to 90 people in the last 24 hours. Palestinian medical officials claim missiles struck a makeshift cafeteria inside an Israel-declared humanitarian zone. Donald Trump picks Arkansas Governor Mike Huckabee as the next ambassador to Israel. Supreme Court comes down heavily on demolition of properties of those accused of a crime, terms bulldozer actions a chilling sight and rules the executive cannot replace the judiciary, lays down stricter guidelines and makes officers directing demolitions personally responsible in case of wrongful action. 43 seats go to polls in Phase 1 of Jharkhand Assembly elections. 683 candidates in the fray. It's a two-way battle between BJP-led NDA and the JMM-led India bloc. Those were the headlines that we're tracking for you this evening, but let's start with the market action where the sell-off is only intensifying. Stocks declined for the 5th straight session with the Nifty hitting its lowest level in 5 months. In a sense, gains made over the last 5 months have been wiped out in 5 days. Nifty is now down 10% from its record high. Sensex lost nearly 1,000 points today. Mid-caps and small caps saw sharper cuts and there was simply no place to hide. 8 lakh crore rupees in market capitalization was wiped out today. 20 lakh crore rupees in wealth eroded over the last 5 sessions. Prashant Nair is here with a market action of the day. Prashant, it's red across the screen.
Well, the pressure on the market continues. The market today on the Nifty from the all-time highs entered the 10% plus zone in terms of a correction. And for the Nifty Bank, about 7.5. For the mid and small cap indices, about 11.5% respectively from the highs. The pressure did not stop today. So yesterday was a 300-point cut on the Nifty, and today we sort of roundabout we had another 300-point fall. Advanced decline pretty poor, some 10:1 in favor of stocks which were lower. So that kind of told you what kind of a day we had. So I'll start with large caps, which saw the maximum pressure. Hero, top of the list in terms of cuts. There was Hindalco, Tata Steel from the metal space. Mahindra & Mahindra, Eicher and BEL were some of the names which came in for some thrashing. Actually, nothing noteworthy on the upside. So it tells you the story. In the broader market, lots of damage done. Suzlon from highs of 80 plus is now in the 50s. Big cut today. Motilal Oswal, big outperformer, pullback. GNFC, Greaves Cotton was another one. Anant Raj, HBL was down 7%. There were names like Techno Electric, Time Technoplast, both down 7-8% respectively. Suprajit Engineering, Sudarshan Chemicals is in the 900s handle. Varroc Engineering was another one which was down quite a bit. There were movers on the upside as well, but nothing very large. Piramal Pharma has come off the highs by a little bit, ended in the green. KNR Construction was a decent mover. Afcon's recent listing, Zyrus Life has fallen about 25% from the highs. A bit of upside today. Bharti Hexacon and Suvain Life Sciences were some of the other names. One common theme, of course, the 300-point fall on the Nifty is common today and yesterday. The other sort of big driver which has been putting pressure on emerging market assets has been the rise in the dollar. That was true yesterday. Dollar went up day before yesterday, or US overnight session went up during Asia yesterday, and it repeated that story. We woke up to higher dollar this morning, and the dollar index continued its march up during the Asian session as well. You need that to pull back a little bit to at least provide some respite. Institutional numbers have been pretty poor. FIs have continued to sell. So those are the two things which I think really at the margin will make all the difference. Back to you.
So the sell-off there on Dalal Street only intensifying. Thank you so much for those details, Prashant. But from equity markets to the currency market, rupee continues to hover around the all-time low mark. Persistent outflow of foreign funds and strengthening of the dollar have weighed on the rupee. Meanwhile, crude oil prices edged up after logging losses in the last two sessions. This is on back of tightening supplies despite lower demand. For the fourth time, OPEC lowered demand estimates for 2024. Bitcoin's record-breaking rally took a breather after the crypt hit the $90,000 mark. This as the markets awaited U.S. inflation data. The volatility caused over $900 million in liquidations on crypto-tracked futures. However, investors anticipate a resurgence in demand. Prices of Dogecoin also cooled off after a surge propelled by the creation of the Department of Government Efficiency in the USA. And speaking of the Department of Government Efficiency, U.S. President-elect Donald Trump has announced that billionaire Elon Musk and politician and former Republican presidential aspirant Vivek Ramaswamy will lead the newly formed department. According to an official statement, both Musk and Ramaswamy will advise the White House from outside the government. The department will aim to drive structural reform and reduce bureaucracy. Trump has said that slashing excess expenditure and restructuring federal agencies will also be on the department's agenda. Remember, Trump promised that he would create the department during his campaign, while Musk said that the Government Efficiency Department will fix government spending.
I will create a Government Efficiency Commission tasked with conducting a complete financial and performance audit of the entire federal government and making recommendations for drastic reforms. We need to do it. Can't go on the way we are now. And Elon, because he's not very busy, has agreed to head that task force. Be interesting. If he has the time, that'd be a good one to do it, but he's agreed to do it.
All government spending is taxation. So whether it's direct taxation or all government spending, it either becomes inflation or it's direct taxation. Your money is being wasted, and the Department of Government Efficiency is going to fix that.
West Asia is on the boil. The Israeli military has killed at least 64 people in Gaza and another 28 in Lebanon in the last 24 hours as it continues to deepen its offensive in both the regions. Reports say that Israel bombed a makeshift cafeteria in an Israeli-declared humanitarian zone in Gaza. Humanitarian groups said that Israel has worsened conditions in the enclave. Israel has dismissed warnings of a famine in Gaza and called the accusation slanderous. U.S. President-elect Donald Trump has appointed Mike Huckabee as the next ambassador to Israel. Huckabee, a former Arkansas governor, has a track record of a pro-Israel stance. In his previous statements, Huckabee has said that Israel has a rightful claim to the West Bank. And back home, it was a muted debut for the Swiggy on Dalal Street. The quick commerce firm's stock listed at an 8% premium to the issue price. However, the stock witnessed strong buying as the day progressed. Answering CNBC-TV18's question, Swiggy CFO Rahul Bothra said that the company sees a 60 to 80% growth in the quick commerce industry and hopes to beat those numbers. Take a look.
Josh is high. I think we're very, very excited for the next wave of our journey as a company. I think there's so much going for. We have so many more investors, such a large, broad user base, investor base rooting for us, and we want to go out and do a really good job. So the profitability, even in the build-up to the IPO, we've talked about how the food delivery business has already gotten profitable, and we expect that to continue at a steady clip, whatever trajectory we've seen. And similarly, on the overall business, if you look at the mix of our businesses, there's that in our quick commerce business, Instamart, where also we've shown a healthy trajectory over the last 2-3 years.
Our food delivery business having turned profitable and at a very good pace of growth. It's still an early stage for India's food delivery industry. If you look at the overall size of the industry, and the online food delivery industry, there is a pretty massive scope for us to continue growing into this, larger macro factors that will continue to aid that growth. Talking about the quick commerce segment, we are seeing a pretty, robust consumer acceptance to larger categories, larger selection. The platforms that are currently doing a good job on speedy deliveries have to also been able to the consumers are reimagining the category in terms of what they would like to associate or want to purchase from these quick commerce platforms, and we are trying to do our best in terms of giving them more assortment, faster delivery times. So it's an exciting phase of our growth.
Swiggy is a fundamentally very strong company for a few reasons. Number one, we have two core businesses as you highlighted. One is food and one is quick commerce. Both are growing reasonably fast. Food is already profitable. Quick commerce is trending towards that direction. And given the innovation DNA of the founding team and Harsha, I'll not be surprised they keep coming up with new offers and new offerings and new products for their customers. So in total, I think I'm super excited about the kind of long-term prospects of Swiggy beyond what they've already built today.
And a quick programming note, Swiggy co-founder and group CEO Sriharsha Majety will be one of our guests at the Global Leadership Summit tomorrow. He will be joining CNBC-TV18 managing editor Shireen Bhan for a special conversation. And speaking of Swiggy, SoftBank is holding on to its 8% stake in the food delivery platform. The Japanese investment giant did not sell shares today. SoftBank's India head Sumer Juneja believes Swiggy has significant headroom for growth. Take a look.
But let's talk a little bit about the journey to the IPO and to listing day itself. The last few days looked quite difficult, didn't they?
Oh, Shireen, thank you for having me. Indeed, I think we're now taking all a sigh of relief that the stock is up, 10 to 12%. But it's not been easy. From the time we went on the road, Zomato, which is the closest comp, I think was down about 8 odd percent. The market was down 5.5%. There was the US election, there was China stimulus, so a lot outside our control. And I think what we did well was we priced it right, where we knew we had enough book and we had a high quality book, a good balance between domestics and foreign, breadth and depth, and people who really understood the story and not who were looking to flip on day one. But also just to long-term holders. And I think the proof of the pudding came actually in the anchor book. And once the anchor book got oversubscribed by high-quality names, we knew we were prepared for a jittery market. I think, did I expect it to open positive? I think that's even better. But I think we had played it right to make sure that we left enough money on the table.
That decision to leave enough money on the table, and I think this has been one of the big lessons as far as the recent IPOs are concerned, getting the price right. I mean, we've seen the debacle of something like Paytm, for instance, and you were investors there as well. That decision to get the price right, to put enough on the table, how hard is that conversation with founders? How hard was that conversation with Harsha?
So I think, like you said, I think when you've seen stocks not do well in the past, then the conversation becomes easier. I think if Harsha was the first tech IPO going public, maybe it would have been harder, but Harsha is an exceptionally long-term thinker. He's made money for investors all throughout. So I think with Harsha, it would have been easier. But generally with entrepreneurs, I think it's been easier because now it's quite clear. You are stopping your journey with private investors. You're starting your journey with public investors. And if you don't have their confidence, then that's going to play out, in different ways over the next 10 years. Their confidence will be less. They will give you less room for error. And so now the formula is quite fixed. Let's leave some money on the table. Even if you get diluted a little bit more upfront, I think over the 5-year period, we'll all be much happier.
Well, let's talk about Swiggy and your confidence in the bet that you've decided to make, and you didn't participate in the OFS. Is that on account of the fact that you believe that there's significant headroom for growth from here on?
I think there is. I think, look, there is very few times in a country and in an investing professional's career are you going to see such a large platform being created, right? When you have both food delivery and Instamart, when you have $5 billion+ of GMV, when you're touching 100 million+ consumers, when the repeat of orders is that high, and India is only becoming richer, more urbanized, and the product market fit becoming only stronger, we think Swiggy has a long way to go. Obviously, execution is important. There is competition, Zomato, Zepto, but I think the market is large enough. The product market fit is very strong, and that's why we didn't do any OFS, because we think there's a long way to go for Swiggy.
And you're holding 8% off it, so that's a sizable chunk.
And you can catch the entire conversation at 6:30 p.m. right here on CNBC TV18. On that note, it is time for us to head into a short break. But coming up next, Supreme Court comes down heavily on demolition of properties of those accused of a crime. Details when we come back. Stay tuned.
India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Welcome back. You're still with us on Business 360. Now, the first phase of assembly elections kicked off in Jharkhand today. 683 candidates are in the fray for 43 seats. It's a two-way battle between the BJP-led NDA and the Jharkhand Mukti Morcha-led India bloc. The polls will decide the fate of Chief Minister and JMM leader Hemant Soren. Remember, he returned as CM in July this year after being granted bail in a money laundering case. Soren is contesting from Barhait, which will go to polls in phase 2. Avinash Kumar joins us now from Garhwa. Avinash, polling कैसे चल रहा है अब तक?
देखिए, मतदान बहुत अच्छा चल रहा है और पूरे अगर हम झारखंड के लिहाज से भी बात करें तो कहीं कोई बड़ी घटना नहीं घटी है। अब तक अगर हम मतदान के प्रतिशत को देखें तो 59.28% ओवरऑल है और जिस जगह पर मैं हूं, गढ़वा ये जिला है, गढ़वा में 60% मतदान इस वक्त हो चुका है। एक और बात है कि अगर आप शहर के तुलना में अगर ग्रामीण इलाकों की बात करेंगे तो ग्रामीण इलाकों में जो वोटिंग परसेंटेज है वो शहर से ज्यादा देखने को मिला। उदाहरण के तौर पर आप ये कह सकती हैं कि राजधानी रांची की अगर हम बात करें तो मात्र 44% ही अब तक मतदान हुआ है, मतलब 3 बजे तक। और बाकी जिलों की अगर आप बात करेंगे तो जो कोल्हान के इलाके हैं या फिर हम गढ़वा के भी इस इलाके की बात कर लें तो यहाँ 60% से ज्यादा मतदान हुए हैं। तो कहीं ना कहीं शहर के तुलना में गांव के लोग ज्यादा बाहर आकर मतदान किए हैं और उसमें महिलाओं की संख्या बहुत ज्यादा रही है। तो हम ये कह सकते हैं कि जो मतदान को लेकर भी जो एक जागरूकता अभियान चलाया जाता है उसमें कहीं ना कहीं जो है ग्रामीण इलाके के जो लोग हैं वो इसमें बढ़ चढ़ कर भाग ले रहे हैं। दूसरी बात यह भी है कि ये चुनाव बहुत महत्वपूर्ण भी है और इससे अगर हम इलाके की बात कर लें, जिस पलामू प्रमंडल में मैं हूँ और जिस गढ़वा की मैं बात कर रहा था, यहाँ से मंत्री मिथिलेश ठाकुर चुनावी मैदान में है और उनके सामने बीजेपी के सत्यनाथ तिवारी हैं। हालांकि एक तीसरा कोण भी है जो सपा से है, गिरिराज सिंह, वो पहले भी एक्स मिनिस्टर रहे हैं और यहाँ गढ़वा से कई बार चुनाव जीत चुके हैं। लेकिन अंतिम तक अगर हम बात करें तो लड़ाई सीधे तौर पर दिख रही है। अब ये देखना होगा कि इस पूरे पलामू प्रमंडल में क्या कुछ होता है, क्योंकि पिछली बार के अगर 2019 की बात कर लें तो पलामू प्रमंडल के जो विधानसभा सीटें हैं वहां बीजेपी को एज था, बीजेपी ने ज्यादा सीटें जीती थी। तो इस बार ये देखना होगा कि वो सीटों में बढ़ोतरी करती है या फिर उन्हें जो चुनौती सामने से मिल रही है उसमें उनका कहीं ना कहीं सेंधमारी होती है। तो ये अब वक्त बताएगा। लेकिन पहले चरण का जो मतदान जो 43 सीट पर जो हुए हैं उसमें हम कह सकते हैं कि झारखंड में जो मतदान का प्रतिशत है वो लगभग आप कह सकते हैं कि संतोषजनक है। अब तक जो जानकारी आ रही है 3 बजे तक की जो रिपोर्ट अपडेट हुई है उसके हिसाब से 59.28% है।
All right, Avinash, thank you so much for joining us with the latest from Jharkhand. But from Jharkhand to Maharashtra, which will go to polls on November 20th, it's going to be a tough fight between the BJP-led Mahayuti and the opposition Mahavikas Aghadi. Shiv Sena UBT MLA and Worli candidate Aditya Thackeray says this election result will prove who the real Shiv Sena is. Speaking to my colleague Santya Gora, Thackeray said he is challenging Eknath Shinde to contest the elections without using his grandfather's and the Shiv Sena's name and symbol.
The most important thing today that we are fighting for in Maharashtra is the very idea of Maharashtra, the aspirations of Maharashtra, the pride of Maharashtra that has been crushed by Eknath Shinde, that has been crushed by the BJP. That is one. But of course on a more local level, we are also going out to the people with the work that we have done over the past 5 years, be it in government or opposition, and the kind of love that we have received from the people.
Okay, if I talk about the Lok Sabha elections, there was a difference of only 1 seat between your party and the Shinde faction, Shiv Sena. This time, do you think that these elections, this election at least will once and for all prove which faction is the real Shiv Sena?
It's not like which faction is the real faction. We are the real party.
It's being contested. So
only because someone steals something, the thief doesn't become the owner of the thing. So that is one thing. Namaskar. Namaskar. But you look at one thing, the BJP without Uddhav Banasaheb Thackeray came down from 26 to 9. That is very crucial. That is also very important. Two, in Mumbai, Eknath Shinde has stolen a seat from us. The Election Commission has helped him win that seat with that RO and whatever, the returning officer who helped Vaikar. So this is absolute crushing of democracy in front of everybody's eyes. And we are fighting against it in court.
Now my question is about the CM candidate.
I challenge Eknath Shinde to contest elections without using my grandfather's face, without using my party symbol, without using my party's name. If he has so much, he should try to do that.
So talking about the CM candidate, your father asked MBA allies to announce the name before the elections. But that didn't happen. Now don't you think that this is going to create some issues because you have a 2019 history, right?
Not at all. Because first and foremost, where is the face or unity of the Mahayuti? Are they even together? Because one person says something, the other party says no, they're coming from outside and speaking against Maharashtra. One party says something, the other party refutes it.
They have the same allegations against you.
They're not even willing to put each other's faces on their manifestos or hoardings. I think that is an absolute shambles because you have a party with a thief heading it, and then you have BJP that's trying to loot Maharashtra. So their only common goal is to loot Maharashtra, nothing else. For us, what is important is we're not fighting for seats or we're not fighting for posts. This is for Maharashtra. And that is why we're fighting together. So, whoever the face or not the face, our face is the people of Maharashtra.
The Supreme Court has come down heavily on demolition of properties of those accused of a crime. The Apex Court has termed bulldozer actions a chilling sight and rules the executive cannot replace the judiciary. The court also laid down stricter guidelines for demolitions. Ashmit Kumar is here with more. Ashmit, tell us more about the Supreme Court's guidelines on this front.
Well, the Supreme Court coming down strongly on bulldozer demolition, saying that it will not stand by idly and that it will ensure that there is accountability of privately, personally, of the officers signing off on these demolition orders. Now, here are the facts of the case. There were a whole host of applications that had red flagged bulldozer demolitions taking place across UP, Madhya Pradesh, Rajasthan. These petitions had said that persons accused of mob violence were facing these demolitions. This is something that the Apex Court has come in on, has taken exception to, saying that this is very clearly the real motive behind these state governments. They're not looking to remove illegal structures, but rather they're looking to act against those persons who have been accused in cases of mob violence. This, the Supreme Court said, is wholly impermissible, is not constitutional, is in fact, even if the person is convicted, even in such a scenario, demolitions is not the punishment that has been conceived under Indian law. That this is not something that the Supreme Court will tolerate, that there needs to be accountability, and that to that end, the Supreme Court has given some very clear directions. Number one, the Supreme Court has said there needs to be a show cause notice. The show cause notice needs to have at least 15 days to ensure that at least the person has time to appeal this order. There needs to be a personal hearing. There also needs to be videography of these demolitions in question, that the municipal authority needs to demonstrate why demolition was the only possible alternative. And perhaps most importantly, the Supreme Court ruling that in any of these violations, if any of these court directions are violated, the officers responsible for the demolition will be responsible for restitution of the wrongfully demolished property at their own private expense, at their own personal expense. So very strong words coming in from the Apex Court.
Right, Ashmit, many thanks for those details. But with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18. Stay tuned.
He is able to have a dialogue with all sides of the political spectrum globally, and he could become a very important peacemaker.
Let's talk money.
Hello and welcome to another edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. As markets turn volatile and investors see their first significant drawdown since the COVID pandemic, today on the show we talk about how you should look at judging your mutual fund portfolio, how you should ensure that it remains in sync with your goals, and whether you should be taking any sort of calls in terms of any changes. So how do you do a healthy review of the portfolio and keep your eye on your goals? To discuss this very interesting subject, we have with us Mr. DP Singh, Deputy Managing Director and Joint CEO at SBI Mutual Fund. And also we have with us Feroz Aziz, Deputy CEO at Anand Rathi Private Wealth. Thank you, gentlemen, so much for joining in. I must say that the market volatility is a mere coincidence. When we were thinking about the concept of this show, it was not at all linked to the current market fall. But in general, I think while we pay a lot of attention to what to buy, we don't discuss how to manage our investments and our money. Those are some of the opening thoughts. And thank you very much for joining us on the show today.
Thank you.
Thank you, Surabhi.
So, DP sir, let's start with you. They say it's a bit of an art, it's a bit of a science, wealth management, money management, and even your portfolio management. What are your thoughts on the subject?
I think, see, as you said, this is absolutely a coincidence that market is volatile at this point of time. But the thing is, this is going to be an integral part of the market. This was supposed to be there, which was not coming for a long time. But the best thing about Indian investor is that the majority of the money is coming through SIPs.
Yeah.
So that is serving them, that is saving them a lot because they have entered at every level. So they are not burning their fingers at this point of time. The way it would have been had every point of money would have come through lump sum investments. So that is one of the best things. That is number one. And number two, when we look at the flows, overall flows, and the whole industry growth which we are looking at, this is majorly because of the mark-to-market gains which we had. So we had a wonderful gain period, and it has come down. There's a drawdown. But one best thing in the whole story is that mutual fund industry per se will definitely come out to be winners. Because the eye on quality, eye on other things. But see, when markets will fall down, every scheme will, the NAV will come down.
Yeah.
And this has to happen because the fortunes of a scheme cannot be different from the market. But when the recovery happens, the mutual fund will have a very, very sharp recovery than the market, because we have seen in the past also where the quality bias is not there, where the investments have been made without any research, without any quality check, without any management check, there people burn their fingers.
No, absolutely.
This time, I don't think for the last 2 years that people have gone into that category, whole hog. So good thing is there, and we hope whatever has happened in the market, whenever the market recovers, maybe another 4-5% from here downward, but then the recovery is going to be the same way. It's going to be a sharp recovery.
So, Mr. Singh, let me ask you one more thing. The mutual fund data came in just a day back, right?
Yeah.
And even in a falling market, equity funds have pulled in more than 41,000 crore rupees. The SIP, at least the gross number, SIP number is still running at 25,000 crores, an all-time high levels.
Yeah.
So what has changed? What is leading to this different investor behavior, and what are you seeing in the funds?
No. See, one with the earlier used to be whenever market used to fall, people used to redeem. Now it's different. A mature behavior, when there's a fall in the market, people put in more money.
Yeah.
Because they want to average out whatever they have put in. And this is a mature behavior. That's why this is the golden rule which have been getting known from beginning, that buy at low and sell at high.
Right.
Rather than the other way. The behavior used to be different. Yeah. Today it is the way it should be. So that's something. But we look at it, 25,000, 26,000 crore coming through this SIP route. Then another, say 7 to 8,000 from the institutional buyer, which is a structural money, including EPF, etc. If you put together, the whole industry has got not more than 8-9,000 crores. And with such a huge country, 8-9,000 crores is not a big amount.
Sure. All right. Feroz, before we get to the topic at hand, your thoughts, since we're discussing the current market volatility, how is this patch of a correction and investor behavior in this correction different from maybe what you saw 3-4 years ago?
I think, hi Surabhi, I think firstly, we discussed a few things. I was very intrigued by what Sir was also saying. One, we spoke of the fall.
Yeah.
There are two kinds of falls. Falls which are business as usual, and the second nature of equity. See, 10% fall in the last 24 years of this century has happened every 10 months. Okay, so 10% fall pe surprise hona is surprising to me. Why should somebody be surprised on a 10% correction when that's the second nature of the beast?
Sure.
That's point one. What an investor needs to be worried about is catastrophic falls. 20-25%.
Yeah.
If I put my money and see it down by 8-10%, that was something which was known to me before I invest.
Because that's the nature of equity.
Correct.
Yeah.
If you consider it as an art, it might come as a surprise to you. If you consider it as a science, then you would have seen the data.
Now let's talk about the need to sort of nurture our funds and our investments, right? And to give it the constant attention, time, without being too fidgety all over the place. So first step is, a lot of investors simply will go back on the internet, they'll look at a fund and they'll look at the past returns. That's your first port of call. I want to ask you why that's not the most holistic or the best approach when you want to decide whether or not to invest. Sir?
So the first thing is that this way of looking at past 1 year, past 3 year return is definitely not the best way of putting money in these stocks, because you have to be, you should be weighing the philosophy of the fund, the credibility of the fund house, the credibility of the distributors who is doing a deep research on the portfolio. Today, if I go to Feroz to sell that why don't you look at my this A or B or C fund, he doesn't ask me what was the last 3 year return. He will ask me what is the future lying in this fund. Okay, if the future, I am able to convince him about the future, about the research, about the work I have done for the future next 3 years, that is the way it is. But unfortunately, that is not something which is on the public domain. Public domain is 1 year, 3 year, every person who is do-it-yourself kind of person, he will look at that only and put his money. So if you ask me if I will do that, I will never do that. I will do for my money, I will see how the fund is positioned for the coming 3 years, coming 5 years, coming 2 years, how his economy is for the next 3-5 years. That is something which we have to do it gently, because this is the regulator mandated way of publication of the returns, etc.
Correct.
Okay, and second part, looking at this, if in 1 year some fund has not beaten the benchmark, it is generally being perceived as the underperforming the benchmark. And things don't happen the way you want it to happen. If I am thinking of that market will fall down, it will not happen if I have thought today and tomorrow it will fall down. It may take 1 year to fall down. It will drawdown may happen 1 year down the line. And I was prepared for it 1 year. So my returns will be lesser than the market for that 1 year period. So the credibility, long-term database that how the things happen, how the drawdown happen, are going to be the guiding points, not the 1 year, 3 year return, previous returns.
You know, that was such a great example and simple example that you gave us, that when a large AMC like SBI will go to Feroz and say, Feroz, hey, look at this new fund we're launching. Why don't you take it to your investors? Feroz is not going to ask you about, past returns, even if it is an ongoing fund. So let's actually take that point to Feroz. You tell us, Feroz, while, of course, I mean, it's a matter of great expertise. Selecting a fund is not a joke. But generally, when investors engage with their advisors or with their distributors, what are the additional factors that they should be aware of, that they should consider and check before taking the investment call?
Yes, there are two parts to this answer. One, I concur with what DP sir said. If you are a viewer and if you're a client or a research, you're an investor who's a retail investor who can't afford all the research or can't afford till some time a private banker who can do the research, looking at the fund house, looking at the fund house's pedigree, looking at the fund manager's stability, looking at how he has managed several funds, how all that information is available in the public domain. The two pieces of Anand Rathi's information, unfortunately not there in the public domain, but you bring it to public domain by shows. We've done so many shows and the output of that is available to all the CNBC-TV18 viewers. One thing which I swear by, two things I swear by, is called the target NAV. If a stock has a target, you see so many reports, TV18 tweets about this stock.
Stock price target, 12-month forward target.
So is it not logical that if a stock can have a target, a group of stocks, which is wrapped in a mutual fund, can have a target?
Wow.
Right? I was discussing this with somebody and he said, stocks pay every time somebody was giving a stock recommendation. I was sitting as a spectator, another distributor was talking to him. As soon as he said a stock, he asked, what is the target? Then he said a mutual fund, he didn't ask for the target. So that is where it emanated from. So target NAV tells you what potential future is there. Not that it will always transpire, but it's a good hygiene check. That's point one. Point two, we do this analysis where we find out if the fund manager was on holiday, what would be the NAV. So we built some algorithms to figure out if Vasan was on a holiday. Okay, Vasan is the CIO. Would the investors be richer or poorer?
Okay, so that's a great starting point in terms of what all you need to consider beyond just past returns when you want to make that investment decision. We'll take a break and we come back and we talk about another important subject which is not often discussed. Exiting a fund. If you are sitting on great gains, should you exit, not exit, how to exit, when to exit? We'll address that after the break.
Let's talk money.
President-elect Donald Trump has not wasted any time in putting together his cabinet. The immediate focus seems to be the crackdown on illegal immigration, deportation and addressing the China threat. Let's begin with Marco Rubio, who according to 3 US publications is likely to be picked for Secretary of State. Now, Rubio is a senator from Florida and is of Latin American origin. He's someone who has pushed for a tough and muscular foreign policy on China specifically, also on Iran and Cuba. He's also someone who had unsuccessfully challenged Trump's presidency in 2016. Michael Waltz, the former US military veteran, is most likely to be the next US National Security Advisor. What is significant is that he's also the co-chair of the India caucus in the US Congress. Again, like Rubio, he's known for a tough stand on China. Waltz has maintained that the US military is not prepared for the conflict in Indo-Pacific. He's also demanded that NATO spend more on military preparedness. Then you have Tom Homan, also known as the border czar, for his hard line on immigration. He's likely to be made in charge of Trump's plan for large-scale deportation. He's a former head of US Immigration and Customs Enforcement. He recently backed calls for large-scale deportation and for entire families to be deported together. For White House Chief of Staff, Trump has chosen Susie Wiles, a trusted advisor and key architect of the Trump re-election campaign. Known as publicity shy, she drafted Trump's strategy for winning over Hispanics and working-class Americans. That's the Trump A-team for now. More could be onboarded in the next few days. One thing is for certain, Trump 2.0 will adopt a more hardline policy on immigration, China and military might.
Let's talk money.
Welcome back. Here with us on Let's Talk Money, and this week we're talking about how to manage and nurture your mutual fund portfolio in the best possible manner. So, gentlemen, I want to come to the subject of profit booking because I think that's something that will be resonating with a lot of people right now in this kind of a market, and therefore it's important to keep some thumb rules, house rules in mind, right? So, DP sir, what would you say? Of course, equity is long-term investment, and you ride the fruits. But now, if someone has made great gains in a fund over the last 2-3 years, they're confronted with the question: should I exit, not exit, book, keep? Because if I don't book profit now, then the fund might lose its peak performance. So, what would you advise?
See, what happens in the equity market? Every day is a new day because we are giving NAV. Your notional gain is there, and you never know what is going to happen. What is my view? Suppose I enter the market today. What I am looking at 5 years down the line? That is my question. Basically, it's reaching your goal. If your goal is very near, say in next 2 years, then definitely we are sitting on a very handsome gain. It makes sense to at least move from the diversified equity fund to a hybrid fund. So that you don't miss out on the equities
on the gain that
100%. But you shift your risk from 100% to say, if you are little more, move to 65%, that aggressive hybrid, or move to at least multi-asset allocation fund to be there, so that in case the market bounce back, you don't miss out the whole opportunity. You at least gain on something. But if your goal is say 6 months to 1 year, definitely it makes sense to withdraw immediately.
To withdraw, book the
profit and be in arbitrage fund kind of time or liquid fund. So it depends upon my need. If I need it, do it today. If you are sitting on gains, do it today. But otherwise, if it's still long term, I put in 5 years ago for 5-year period, but still I have got another 5 years. Because things change, circumstances change. I should not be worried. I should keep on sitting in where we are sitting. Because the volatility is part and parcel. So it's more volatile because the volatility has come after a long period. We saw almost 8 to 10 years of bull market. So the bear market could be little more deeper, but you never know. There's a market is of two thought processes, right? Somebody is buying, somebody is selling. Even today, when people are taking the money out, They are having opportunity somewhere else. They are thinking that that opportunity is there. Maybe 3 months down the line, they say, no, that opportunity isn't. They will come back in hordes.
Yeah.
And one thing is very good for us, that Indian economy, the macros are absolutely intact.
Right.
And ours is the only market where people will come when they come.
Sure,
And you can, if you book everything today, you can miss out on the opportunity.
Absolutely, but I mean, I completely get the logic that if your goal is 2 years away, then shift to maybe a hybrid or a slightly lower risk profile fund. If you need the money in the next 6 months, then you book now. Do you concur, Feroz?
Absolutely concur. And like DP sir said, there are two kinds of investors. One who need the money in the next 3-4 years. Some people have eternal money or 5 years, 10 years from now. So I completely concur on the first category. The second category, which is if I don't need the money, is there some profit booking required? Unfortunately, complex questions, we look for complex answers. It's a complex question, right? Abhi nikalu, kab nikalu, nikalu bhi. But I think the simple answer is rebalancing.
Okay.
Rebalancing is nothing but an automated process of profit booking. If you have decided 70% of your money should be in large cap and 15% in mid cap and small cap, find out whether that equilibrium is disturbed and re-establish the equilibrium. That's rebalancing within mutual funds. Second, if your two asset classes are 80 in equity and 20 in debt, the reason why I'm giving you 80 and 20 as an asset allocation itself implies that 80 should be in equity, if it's long-term money at least, if not more. Then if 80 has become 90 by the virtue of mark-to-market, then you bring it back to 80. So profit booking has to be substituted with rebalancing for an investor.
So your asset allocation remains in place. Got that. Okay, so now after this, we need to come to the whole portfolio construction and review part of it, right? And what we need to keep in mind. And here I think investors end up being a little confused. Now, what is the best bouquet? And let's assume you're talking about a middle-aged, medium risk profile investor who has another 10, 15 years of equity investing ahead of him or her. So for such an individual, what is the perfect bouquet, sir? I mean, hybrid, fixed income. I don't think enough thought is given to categories beyond equity at times.
Now there you have to identify the economic condition of the individual. If somebody is having the investment amount, say of 2 crores plus, and this surplus money is not the sustenance money, then for him, they think what Feroz is saying is rebalance, keep it in equity fund. Somebody is a lower ticket size, some retiree who is having 2 crore, 1.5 crore, 2 crore, and majority of the money is in equity funds. Then definitely it makes sense to move towards a hybrid fund. The big ticket one can continue to be in equity, but by rebalancing from small cap to mid cap or mid cap to large cap or flexi asset, so on and so forth. But the ticket size, what is my sustenance money, whatever I need. There are different buckets of individuals. And this is a large universe, right? For these people, it is very necessary to move from equity to multi-asset or balance advantage kind of fund, or at least put additional money, because people still are having, the surpluses are being generated on everyday basis. One is, what do I do with money which is invested? One, what do I do with money I have today? We have to invest. And we have to invest. Asset allocation and the hybrid is the key.
Right.
For the person who is having a particular economic class. But the rich and affluent, which are there, they need to be in any case long-term equities are there. There you can do it from less riskier from high risk kind of category. That will be my answer for the people. You have to look at your economic condition also. How much money is the sustenance money? That is to be kept aside.
Got it. Okay, so we have a couple of minutes left on the show, so we have to quickly power through. Now, Feroz, here help us out with creating that model portfolio, and maybe also give us some names, because I know that you have a model portfolio and there are a couple of funds there that you really like. So first, tell us, what should the construction be for this medium risk, middle-aged sort of an investor, someone in their late 30s, early 40s, and some fund examples as well, if you can. Sure.
Firstly, I think equity allocation, asset allocation for your long-term money, India is only 6.7% at an household Indian savings level. So if you want to be smarter than the rest of the race, you will have to at least have 70, 80, 90% of your long-term money in equity. I can substantiate it with a lot of data, but I'll not refrain because you gave me 2 minutes. Second, there are some AMCs, we rate AMCs because there are 5-star ratings to schemes. We have an internal model to rate AMCs.
Okay.
There are 3 5-star rated AMCs.
Okay. 5-star based on what?
That's a very long
That's
story.
a very long answer, but
story.
yeah.
But we have rated.
Okay.
And if you are over concentrated on these 3, don't worry.
Okay.
And let me acknowledge that SBI is one of those.
Sure.
So sometimes people say, yaar, mere 80% scheme SBI ki hai ya ek specific AMC ki hai. If you are in the 5-star AMC, don't worry.
Okay.
If concentration risk is not so much of a risk at all, to my mind.
Okay.
Because like SBI will launch, or these AMCs will launch any NFO at the right time. That's one of the huge barometers. Now coming to what schemes you should look for, I'll give you in different categories. In SBI, if I have to give you one, in the SBI infrastructure, which is a thematic scheme, which viewers love to have something which is a tadka. So SBI infrastructure, very rare thematic scheme. HDFC Flexi Cap is a Flexi Cap scheme.
Okay.
Canara Robeco Multi Cap is a little unconventional scheme. And then on the category of small cap, Investo Small Cap.
Okay. So those are some, funds and broad sort of ideas one can work with. But Feroz, one more point, and we haven't discussed it on the show enough. This whole active and passive. It's not active versus passive. We all get that. And a lot of AMCs have been talking about the satellite and core approach that, active funds should be the bulk of your portfolio. Then you add some passives. If you could elaborate on that, because there's so many, like you said, tadka, so many index-based strategies coming, momentum, quality, this, that, whatnot, leaves you a little confused.
You see, firstly, on that reaction, the answer is different for each of us. Okay, if you have the art of picking active funds, or your distributor does, active is good for you. If he doesn't, and if you're going to forget it for 20 years, then passive is better for you.
Okay.
So that's one.
Okay.
Second, active in most categories is very good. A large cap, if you want to buy a passive, then in the large cap category you can buy. 85% of the total passive AUM of about 7 lakh crores is in Nifty and Sensex. That's the reality. There could be so many tails, such long tail with several schemes, but the AUM is not there.
Sure.
So if you want to buy one passive scheme, then choose the large cap category passive scheme.
Okay.
Third, when you buy a passive scheme, you have to check whether if you did all your transactions for the last 10 years. Today you can get your total statements from MF Central. You can download all the transactions you have ever done in life on an Excel sheet.
Okay.
Download the Nifty data and check whether you're richer or poorer by buying and selling active schemes. Like I do that for the entire company's 39,000 crores of our clients. My clients are richer by 1,923 crores for this financial year by buying and selling, not buying and selling Nifty, but buying and selling those 14 scheme model portfolio.
Okay, all right, got that. DP sir, final thoughts with you. Tips that people should keep in mind when they're doing that periodic evaluation of their mutual fund portfolio. What is it they should ask themselves or their advisor or distributor to ensure that the MF portfolio is healthy?
See, 2 or 3 things which they keep in mind. See, one, I always keep on saying, for looking at the equity performance, 1 year cannot be a unit.
Okay.
It has to be 3 years as a unit, at least 3 years how much you have done, whether you have outperformed the market. And see, we have a structural issue with our index also. Today, if I have to put 100 rupees in my of my portfolio to a passive fund, which is being talked about, a large cap fund, 25 rupees are going to 2 stocks. 25 rupees are going to 2 stocks. Whether I want to take a bet on those 2 stocks or not, but this is there, this is the market rate, I have to do that. So that's why I will not like to take a call on that. Make it little wider. Even if you want to do it, the passive, make it like an equal weight kind of fund, where you are putting money in every stock, or you make it BSE 100 or NSE 100. So that diversify a bit. And that's good enough, I think. But this depends. But as Feroz is saying, at this point of time, huge opportunities are available to generate alpha over these benchmarks in longer term. But yes, there are some smart beta products which you are talking about, effective. So this is building up.
Okay.
And as a fund house of the country, we have to be prepared for that. So we'll create every bouquet. Whosoever wants to invest, they can do that. But on view is that still there's a lot of alpha lying in the active.
Okay, gentlemen, this was, I think, a very helpful classroom, a quick crash course in terms of managing your beautiful bouquet of mutual funds, and hopefully investors will keep a lot of this, the valuable insights in mind. Thank you for joining in, and we look forward to another conversation.
Thank you so much.
Thank you. Well, with that, we're completely out of time on this edition of Let's Talk Money. See you again next week.
Let's Talk Money.
फाइनेंस डिपार्टमेंट का, आप ही के स्टेट के फाइनेंस डिपार्टमेंट का कहना है कि इतना भार जो आ गया है स्टेट एक्सचेकर पे, वो हम लेने की स्थिति में नहीं है। जब एक के बाद एक स्कीम अनाउंस की जा रही थी, उन्होंने तब भी सरकार से अनुग्रह किया था कि हमारे पास इतना खर्चा वहन करने की क्षमता नहीं है। 2 लाख करोड़ से ज्यादा का फिस्कल डेफिसिट हो गया है, तो ऐसी स्थिति क्यों हो गई सर?
स्टेटमेंट देने का काम हमारा होता है और अजीत दादा पवार फाइनेंस के मिनिस्टर है, डिप्टी चीफ मिनिस्टर है, उन्होंने उसमें उनके स्टेटमेंट में कहा है कि हमारी सरकार जो है पूरी तरह जो स्कीम लागू है उसको पूरा करने में सक्षम है। और मैं भी बताता हूं कि पूरी स्कीम के लिए फंड का प्रोविजन हमने कर रखा है। हमारी सरकार जीडीपी पे 25% लोन हम उठा सकते हैं। हम अभी 17.5 पर है। एफआरबीएम जो है वो 3% से नीचे है। ये आरबीआई
डेफिसिट 3% से ज्यादा हो गया है, जो आपकी लोन लेने की क्षमता को इम्पैक्ट
नहीं, लोन लेने की क्षमता और हमारी है। आपको जो कोई विपक्ष कहते हैं वो गलत है। आरबीआई
फाइनेंशियल डिपार्टमेंट का स्टेटमेंट,
फाइनेंशियल डिपार्टमेंट कौन होता है? फाइनेंशियल डिपार्टमेंट का मिनिस्टर स्टेटमेंट करता है, उन्होंने कहा है। तो आरबीआई की गाइडलाइन, गवर्नमेंट ऑफ इंडिया की गाइडलाइन हमने फॉलो किए, कोई भी वायलेशन नहीं किया।
तो ये जो फाइनेंशियल डिपार्टमेंट
और आपको बताऊंगा।
Hello and welcome to News Center. Within days of his election, President-elect Donald Trump is busy filling key cabinet posts with loyalists and those who supported him in his re-election campaign. The most significant announcement has been regarding the proposed Department of Government Efficiency, which will be headed by none other than Elon Musk and Indian-American entrepreneur Vivek Ramaswamy, who had declared his candidacy for presidential elections but later withdrew in favor of Donald Trump. In a statement, Trump said that the great Elon Musk and American patriot Vivek Ramaswamy will cut through bureaucratic red tape. Their job will be to slash excess regulations, cut wasteful spending, and restructure federal agencies essential to the Save America movement. Trump said that the Department of Government Efficiency has to finish its task by the 4th of July 2026. that is by the 250th anniversary of American independence. Elon Musk had donated more than $100 million to the Trump campaign and is likely to be among his closest advisors. How will the Trump 2.0 cabinet impact the U.S. economy, investment flows, shifting of U.S. supply chains from China and U.S.-India ties? To discuss this today, we are joined by Hemant Taneja, the MD and CEO of General Catalyst, one of the largest venture capital firms in the world, and Teresa Carlson, the president of General Catalyst Institute. General Catalyst has announced the expansion of General Catalyst Institute in India to support startups and policy advocacy in 5 areas, namely AI, healthcare, defense, intelligence, manufacturing, and energy. Hemant, let me begin by asking you, what's going to be the objective of the General Catalyst Institute in India?
Yeah, first of all, thanks for having us on the show. We are very excited to work on the theme around global resilience. Our belief is that every nation and every geography has to focus on building its critical industries in a way that's resilient for its people. And that requires a deep collaboration between innovators, policymakers, and capital providers. And what we're doing with the General Catalyst Institute, led by Teresa, is to bring a lot of our expertise and thinking and work with our local entrepreneurs and our industrial partners to think through the industry transformations that lie ahead in the Indian market.
Right. Teresa, I'd like to ask you, recently, General Catalyst had said that it has earmarked $1 billion in funding for India over the next 3 years. How much of that is going to go towards the Institute's activities, and how is this funding likely to be deployed?
Well, it's so interesting because we hear from our startup community, from our companies, that they're very excited to be able to engage in public policy with our government leaders in India. So for us, it's really about engaging day-to-day on educational and advocacy activities that really promote these highly innovative and transformative startup companies. And, you know, when they're early on in their development, they have this amazing vision about driving technology in a way that supports government efforts, but they don't always know how to get engaged on a day-to-day basis to really shape the right public policy that allows them to drive that societal change. And as Hemant talks about, we believe that India has this unbelievable opportunity to actually leapfrog because of the unbelievable talent and individuals that they have here. So we are really excited.
Teresa, we have also seen that General Catalyst Institute would like to focus on 5 key areas, including artificial intelligence and defense. So could you elaborate on how you are seeking to support entrepreneurs, startups, and what kind of policy interventions are you looking to make? Are you trying to make the regulatory system easier for startups to flourish in these sectors?
Yes, you nailed it. It's actually their ability to flourish. And oftentimes we see policymakers, they really understand larger technology companies because they're out there every day-to-day advocating. But one of the things that we found at General Catalyst, Hemant and the team at GC for many years has actually been doing advocacy at the policy level in a bespoke way. And the Institute is about doing this in a very coordinated fashion. So to the elements of our investment thesis around artificial intelligence, defense and intelligence, manufacturing, healthcare, energy, these are areas that we think are the backbone of a nation that provides both global resilience and national resilience. So for a startup company to be able to advocate independently, sometimes they're just too small to do that. So our goal is to go in through partnerships, think tanks, other groups that actually are like-minded with us to talk about these policies that can ensure that startups have a fair and open opportunity to ensure that their companies grow, and that they can also work directly with government in these industries that really make a difference.
Right. Hemant, this comes at a critical time because the union government will be announcing the budget on the 1st of February. Hopefully there will be some more good news for the startup ecosystem. But if you were to make one recommendation, based on what startups in the country are going through, what could probably help them leapfrog to the next phase of growth or garner investments from abroad, what would that one policy intervention or reform be that you would recommend?
I strongly believe that India, given its talent in technology, has the opportunity to be a real leader in AI. And the opportunities in AI, when applied to the transformation of different industries, and when it also comes to workforce transformation for India in economy as a whole, are massive. And I think that's a place where, frankly, India needs to catch up and invest in technologies so that applied AI can be a true force of transformation for the country over the next 10 years.
Right. Let me also ask you about the big geopolitical challenges taking place. And this is a question for both of you. Let me begin with you, Hemant. Trump victory, what does this mean for the US economy, its approach towards investments abroad? Do you expect US companies to become more inward-looking at this juncture?
Look, the Trump victory in some ways reinforces the global resilience theme that we're talking about. The United States wants to focus on the resilience of its core industries, whether it's defense, healthcare, energy, manufacturing, and others, just like other parts of the world are as well. So I think you will see a real focus on trying to take advantage of local markets to build businesses in the long term. And I do believe that if these companies are built intentionally all over the world, and that's part of what we're trying to do, like helping them think through the role of technology policy and capital with the General Catalyst Institute, these companies eventually, market forces will take over to see which of them become global. So I do think the United States is playing the same resilience team that various countries in Europe are playing and frankly, India is playing.
Right. So resilience, building resilience in supply chains will be the big theme for the United States under Trump. Teresa, coming to you, Elon Musk, he's going to be heading the Efficiency Commission. That's outside the government, but he will be Donald Trump's whisper, we're told. He is someone who is very big on autonomous vehicles, electric vehicles, AI, SpaceX, Starlink. He's got interests across the board. How do you think a person like Elon Musk is going to impact Donald Trump's economic policy making? And has that somehow also changed the General Catalyst strategy for investments globally and how you engage with policymakers?
You know, the good news about Elon Musk, he's a technology innovator in all the areas that we think about: artificial intelligence, space, defense, intelligence, energy. So I think it's very positive that you have someone that is focused on technology and technology innovation. For General Catalyst, we are focused on our thesis that we've been talking about for a very long time in the areas of artificial intelligence, energy, manufacturing, defense, intelligence, healthcare. These are really important areas that provide economic opportunity globally. So I believe it's all very positive. And from the aspect of India, we've always had such a fantastic relationship globally with India in the US. And as you see, many of these nations move away from China. India just has this amazing opportunity that we are so excited about at General Catalyst. So our thesis remains strong, and we look forward to really working hand in glove with the policymakers so we can strengthen these policies to ensure that the most innovative startups and transformative companies have the opportunity to support the national programs and thrive globally.
Right. Hemant, now with Trump in the White House, also with Elon Musk as his close advisor, with policy hawks in his team who are very, very hawkish when it comes to China, Iran, do you expect greater deal activity and investment activity between US and India, more investments flows from US to India, more companies to consider setting up manufacturing in India than earlier?
I am very bullish on the US-India corridor. I think in this new geopolitical order, a technology collaboration between US and India can be a huge competitive advantage to both countries. And therefore, I do think it's going to manifest itself. I think we know from Trump's prior administration, Modi and Trump have common views and real desire to collaborate, and we do think it's going to build on the goodwill that they've had in the past to continue to deepen ties. And there's an enormous cycle of innovation, especially given the role of Indian diaspora in the U.S. technology industry as well. That's going to get accelerated in this time around.
Right. Teresa, any particular sectors which you feel will get more attention? Of course, 5 key pillars of the General Catalyst Institute are global themes right now. But any particular sectors or companies or segments that you are particularly looking to leverage and support?
Well, we know that energy is going to be a big opportunity. President-elect Trump has already been talking about ensuring that we have the right energy sources, that we're looking for that. And if we're going to have the strength that we need in artificial intelligence globally, we need to make sure that we have energy sources, because what do you need for AI? You need data, right? You need energy and you need compute. So you'll continue to see investments in technology and things like chips, of course. We believe healthcare will continue to be a very deep focus of this administration. And then in terms of the policies for AI, it's clear at this point that they're not going to be overreaching. They're going to be more light touch regulatory environment for AI to ensure that we can begin to adopt more quickly the opportunity and the technology around this innovation.
On that note, we'll take a short break. Don't go anywhere. When we return, a conversation with Bob Whelan, the managing partner and chairman of Carney.
अभी जो निवेश है फॉरेन फंड का एफडीआई का, वो टोटल निवेश से 52% इन्वेस्टमेंट महाराष्ट्र में।
तो आप क्या आप कहना चाह रहे हैं कि फाइनेंशियल डिपार्टमेंट के जो ब्यूरोक्रेट्स हैं उनकी जनता का कोई आधार नहीं है? आप
बिल्कुल आधार नहीं है। अरे सरकार हम चलाते हैं, हम सरकार चलाते हैं। लोगों का जो स्कीम्स है, वेलफेयर स्कीम्स है, पुरानी स्कीम्स है, ये किसानों को पैसे देने के, उनमें से एक भी स्कीम बंद नहीं होने देंगे, बंद नहीं होगी, और ये वेलफेयर स्कीम लाडली बहने चालू रहेगी।
महायुति का सीएम चेहरा कौन होगा? और ये सवाल जो है हम दोनों ही धड़ों से पूछते हैं, एमवीए का कौन होगा या महायुति का कौन होगा? तो आप लोग का जवाब।
एमवीए को तो लड़ाई शुरू है, मेरा चेहरा बनाओ, मेरा चेहरा बनाओ।
महायुति में ये
वो तो उनके एमवीए को ही उनका चेहरा नहीं चलता है, तो महाराष्ट्र की जनता को कैसे चलेगा? हमारे में कोई रेस नहीं, हमारे में कोई होड़ लगी नहीं।
आपके 3 कैंडिडेट हैं, आप हैं, देवेंद्र फडणवीस जी हैं, अजित पवार।
देखिए, आज मैं मुख्यमंत्री हूँ, मेरे दोनों साथी है उप मुख्यमंत्री, हम एक टीम बनकर इस चुनाव को सामने जा रहे, और हमारा मकसद है कि जो 2-2.25 साल में हमने काम करके दिखाया है, डेवलपमेंट किया है, वेलफेयर स्कीम की है, इसको आगे बढ़ाएंगे। और ये सरकार जो है महायुति की, वो हम लाने का ही हमारा मकसद है, वो टारगेट में हम कामयाब होंगे।
Welcome back. You're watching News Center. Under Donald Trump, US and China are headed for more volatile times. Trump has threatened to impose tariffs up to 60% on Chinese goods being imported into America. Will this hurt China and disrupt the global economy? Or will it force China to pursue stronger domestic growth and better trade ties with other nations, including India? That remains to be seen. But clearly his cabinet appointments show that he plans to execute a muscular foreign policy with regard to China. Trump has nominated John Ratcliffe to head the CIA, Fox News host Pete Hegseth as Secretary of Defense, and Florida Congressman Michael Waltz as National Security Advisor. Republican Senator Marco Rubio has been nominated as Secretary of State. All of them have very strong views on how US should rise up to the Chinese threat, both economically and territorially. How is the new Trump presidency, continuing tensions in the Middle East and the Russia-Ukraine war impact the global economy, and does India stand out as a bright spot that may benefit? Joining us right now is Bob Whelan, Carney's managing partner and global chairman. Thank you very much, Bob, for joining us. What do you think Trump's victory will mean for the US outlook towards the world and for the global economy?
Well, first, thank you for having me, and it's wonderful to be here and also think about India's role within the global economy and what does it mean with the election of President Trump and probably broader geopolitical dynamics and what's happening in the world. I think for some time we've already seen some shifts away from a bipolar world dominated by US and China relationship and what that means for organizations around the world. Certainly with the election of President Trump and his America First policies, there's probably even more of a shift towards localization, regionalization of certain markets, certain supply chains, and a changing global dynamic. We talk a lot about entering a multipolar phase in the world, and certainly at some level, the deglobalization of supply chains, of trading relationships, a very different dynamic as we look forward relative to the past 20 or 30 years. That really is fascinating for so many organizations around the world trying to make sense of that dynamic, but also a time of significant change in so many ways and what's likely to happen. We don't have the answers about what President Trump will do. In the end, I think he's also a pragmatist and needs to find solutions to serve the American people. But we do know that organizations and our clients all across the world are thinking about these things, thinking about their own footprint, their own supply chains, their own operations all across the world in now very different ways.
Right, absolutely. Give us a sense of what kind of impact Elon Musk could have on Donald Trump's economic policies, considering Elon Musk's troubles in China, his huge interest there. There has been a slowdown in Tesla's production. There is competition with Chinese EV manufacturers. Musk is big on AI, big on Starlink and SpaceX. Considering his stakes, how do you think Elon Musk and the Donald Trump combination will be for India? How will he tailor or advise or impact Donald Trump's approach to India?
Well, I think he's just one of probably several close advisors that support these policies that appear to be on the way to rolling out in different ways. I think President Trump has talked about this throughout the campaign, and certainly his close advisors have certain beliefs, whether one describes them as hawkish or in other ways. I don't think it's just Elon Musk. In fact, Elon Musk looks like he's slated to play more of a domestic role, even in his appointment, looking at government efficiency. Nevertheless, it is clear that this administration will think very differently about the world, and certainly some of the policies that have been hinted at, have been proposed, will reshape certainly the trading dynamics with China, emphasize the security concerns that we've seen over the last years in more significant ways, and as I talked about before, accelerate probably the some of the trends, really looking at alternate sources of supply, different dynamics in trading relationships across the world. And I think India plays in the middle of that. We know that India is developing rapidly. India has incredible potential. And in this changing global dynamic, really presents interesting opportunity in addition to some challenges that we see going forward.
Right. Bob, do you feel that the Department of Government Efficiency that will be set up by Donald Trump, and this is going to function outside of the White House, do you think it's a welcome step?
Well, as a U.S. citizen myself, I'm always in favor of government efficiency. And what we're seeing, though, and now I speak as an American who has spent half of his professional career outside the U.S., we see the role of government shifting. Government is a partner with industry in terms of economic growth and development. We talk about a new era of industrial policy where governments are playing a role to shape industry, to establish priorities, to shape the regulatory environment in ways which help economies develop. And You could argue that America First policies are a more extreme example of that, but we see other examples around the world where the way global trading relationships exist today, there needs to be a concerted effort between public and private sectors in order to deliver the best results for people.
Right. From his appointments, it's very clear that this presidency would be tough on China. How do you think this volatile trade relationship with China will impact the world economy? Is this something that concerns you? Will this cause a lot of disruptions?
I think there is always disruption when the dynamics shift quickly. And, that certainly is one of the risks that we would see now is with imposition of tariffs and other trade restrictions that may require a period of resettling in what has been global relationships that have developed over probably many decades. I think we're already seeing, a shift in production, say, from China to other countries in Southeast Asia. I think we've already seen some shifting in patterns of trade and supply chain from China to other countries.
Do you expect the investment cycle globally to slow down for a few months until people understand how Trump is going to function? Maybe wait till his first 6 months in office?
I would expect that's probably something we will see, just to try to understand first, see the appointments that get made. I think it's true with the new U.S. presidency, but probably true in other countries as well, to see the appointments, to see what the initial ideas are and how that they would be translated into policy steps. So I would expect that that's probably the case.
How will India be poised in this volatile geopolitical order? Two wars are going on. You've got a unpredictable president in the White House with a very strong, perhaps stronger America First policy in his second term. How do you think India stands to lose or benefit?
I've spoken about deglobalization, as some call it, also a phase that would be described as a multipolar world. I think these present incredible opportunities for India to take advantage of the momentum that it has, the attributes that it has, some of the fundamental strengths, which are really the foundation for this new aspiration that we see in India. And I think the world is excited about that. Looking for alternate sources of supply, certainly different relationships. I heard a great description, really, which can be best summarized as, while the economists are talking about deglobalization, the global south is busy doing business, right? They are connecting with each other. They're making new relationships. The aspiration, and probably India is at the forefront of that, but so many countries of the global south also are quite keen to see rapid economic growth and development. All of this puts India, I think, in a great position. And we see that with our clients as well, quite excited about what's to come and the role that India could play.
Right. What sectors make you most excited about India?
Well, I think certainly it has to start with the digital economy and what India represents to the world increasingly in the digital sector. We understand and know that there's an objective to create a $1 trillion digital economy in India. I think that's very possible. That's very realistic. And already, we see it leading the way in many aspects of digital growth and development. There's other sectors as well. I think manufacturing, clearly, with the Make in India programs, continuing to drive growth and development in all different sectors. Perhaps energy is another sector which is really has India poised to play a leadership role. And in areas like pharmaceuticals, we see the growth of generics, the leadership that India already has, being so important to the world and what comes next. So I think there are many, many opportunities that India has looking forward.
Bob, thank you so much for joining us. We've completely run out of time, but thank you for telling us about your view on Trump's presidency and how India can stand to benefit in a divided and volatile world order. That's all we have time for here on News Center. Thank you for watching. Goodbye.
सीएम कौन होगा सर? आप होंगे क्या?
बैठेंगे हम, उसमें क्या है? सीएम का क्या बड़ा?
अभी डिसाइड
हमें क्या मिला, जिससे महाराष्ट्र की जनता को क्या मिलेगा, ये सोचने वाले हम लोग।
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18.
Welcome to this special broadcast on CNBC-TV18. I'm Shireen Bhan. Veteran industrialist Ratan Tata has left behind a legacy that's etched in the history of India, from being a global business icon to a philanthropist to an animal lover. Tata donned many roles in his life. The biography, Ratan Tata, A Life, traces his journey from his lonely childhood to his first job in the Tata Group to helming Tata Sons as chairman. And it also includes lesser-known stories about the challenges that he faced in school, his job as an architect, his first serious relationship, and more. Retired bureaucrat Thomas Matthew first met Ratan Tata about 3 decades ago, but it was only in 2018 that he decided to write his story. He's interviewed over 130 people whose lives Ratan Tata touched. To tell us more about the man, the life, the legacy, and the untold stories, we're joined by the author himself. Mr. Matthew, many thanks for joining us here on CNBC-TV18. What an absolute pleasure it is to have you back on the channel, and congratulations on this tome. It's quite the book. And I want to understand from you, you've known Mr. Tata going back 3 decades.
That's
but it was
right.
2018 that you decided to put this down in words. Why?
It's not me who decided. Actually, it's by chance. Let me explain to you what happened. In 2017, he had come to Rashtrapati Bhavan as the distinguished invitee of our president, Mr. Pranab Mukherjee. So he was there for almost 2 days, more than a day. And we